bolster spending. The first thing you would look at is a cutting of income tax in some form or the other. Is that going to be in the way of more deductions, or can there be a review of the slabs, which have not changed very dramatically? Because you look at it, compared with the old tax regime and the new tax regime, you have the highest tax slab, which has actually gone up from 10 lakh to 15 lakh. Above 15 lakh in the new tax regime, you pay 30%. If that is increased, or if the slabs are widened, you will have more money in the hand of the individual investor, spender, and taxpayer. The third aspect that we will focus on, in fact, is going to be on manufacturing. In September last year, the Indian government completed 10 years of the flagship Make in India program. A lot has been done and a lot is yet to come. What will the measures be on PLI schemes? That is something of a thrust in the budgets that you've seen in the past, but what more in a targeted manner can be done in the current budget? This is something that you should focus on. The fourth aspect is going to be agriculture, because you've heard signs of distress in the microfinance space, in the agri space. A few banks have been reporting higher slippages and more non-performing assets. Is there something of a relief that the finance minister will announce for these individuals? That's certainly a question that will be answered soon enough. And finally, we're speaking at a time when there is a race between the United States currently and China on artificial intelligence. You heard about DeepSeek. We spoke about it extensively. The markets took stock of it. The question is, will there be something in the budget that talks about bolstering artificial intelligence in some form or the other? That's the fifth point. But what are the markets paying attention to? Let me bring in Neeraj Shah to tell you exactly that. Neeraj, the stage, of course, as I said, has been set. Over to you.
Yep. Well, thanks a lot for that, Alex. And the stage has indeed been set. So the question mark to everybody's mind is that what is it that the budget can throw up based on what is it the market expects? And therefore, could there be a disappointment? Or can this budget actually be one which does not disappoint the street? Remember the last few times, on most counts, the budget has stood tall, except for maybe just the issue of tax. So what are the market expectations first? And then I'll take you through some key numbers that you need to watch out for. So firstly, can the government take up the mantle of capex again? I think this is a burning question to the minds of everybody. And one key part around this is also that the December of last year was the first month which saw some bit of capex coming to the fore. It was actually the highest month in a really long time, the best December in terms of capex, but still the 9-month total was amongst the lowest seen in many, many years. So will the government announce or mention around what is it that the targeted expenditure for FY25 will be? Because the budgeted expenditure number is very, very large. So what proportion of the miss is something that the market will watch out for? If the miss is not too large, then the markets would believe that December and January have been good months. We know December is a good month, January could be a good month, and then Feb and March will also be decent. Next, will there be tax cuts to spur consumption? It could be as simple as taking up the standard deduction higher, and that will make the street believe that there is some bit of consumption spend that will come in because of taxation cuts. So that is something that people will watch out for. Are there schemes for job creating sectors? We know that manufacturing PLI is something that the government is acutely focused on. Will there be more emphasis on any of those to ensure that there are, or make the market believe that the government is focusing on sectors which are going to create jobs? Infra, textiles, like I said, anything around PLI will all be welcome. Spending growth thus far has been 3.5% YOY, which is the lowest in 20 years. To reach about 6.7% is what the market believes. The budgeted estimate, of course, was, remember, 8.5%. But I think the market knows that the government has not spent that much thus far. So if the number reaches about 6.7%, 6.8%, the market will still believe that the government is coming out and going to spend in the next 2 months as well. Else, the spending number could look slightly wobbly. Will there be any other tinkering with syntax in some fashion or the other? Now, we know liquor is out of the ambit of the budget because it's a GST council decision. but could there be something around cigarettes? Could there be something around something else? I think all of that will be watched out for. The key numbers, very quickly, fiscal deficit at or below 4.9% is a given. The street knows that the government is firm on the glide path. Will it go down to 4.7, 4.6% in the current year itself, or 4. If a number goes down to as much as 4.7, then the market will believe that the government is tightening the belt and will not spend that much. So it's good to have a good glide path, 4.9 or maybe 4.8. Too much of a lower number will make the street believe that the government is not going to spend, which might also not be good. There are hopes that LTCG will not be tinkered with too much. The market has had a painful last 4 months. The market will dearly be hoping that there is no tinkering out there. So I hope that is being listened to. Corporate tax cuts of any kind is unlikely, really. And the non-debt capital receipts number is a key focus area as well. We know that the divestment numbers and others haven't been quite successful thus far. So I think what is the estimate that the government puts out for the current year ending? And what is the estimate that the government puts out, more importantly, for the next year, considering that the budgeted estimates thus far have not been met for the last couple of years, I think becomes a key number. So that is something to watch out for. But Hiral, I would say 2 key numbers, the capex spend number and any kind of taxation on capital markets, the 2 most important things that I'm watching out for.
Absolutely. You've actually given out what the street is watching out for, but let's just also keep in mind what the markets were unhappy with and what the markets have done since budget 2024. If we can just move to the key 9 aspects which the markets had considered, which the budget 2024 had considered, that will be key. Firstly, disappointed investors, as Neeraj also mentioned, however, rewarded some taxpayers, right? So that was one of the key focus areas. But there were 9 things that Nirmala Sitharaman actually looked at. One was productivity and resilience with regards to agriculture. So schemes with agriculture that were announced. Employment and skilling was their next focus area. Moving on, the others were in terms of inclusive HR development and social justice, manufacturing and services, where PLI schemes were announced to some extent. Urban development was the other aspect, and energy security with renewables was one of the focus areas. Infrastructure, which is the crux, capex has been slowing down. What do they do from here on? Innovation R&D was again what they focused on as well. And very lastly, if you see in terms of next generation reforms. Now, whether all of this has actually helped markets or not, absolutely not. Nifty, a downtick of 5% since the previous budget, where you had broader markets which actually went ahead and underperformed as well, to the tune of almost around 7 to 9.5%. So that's the mid cap and the small cap underperformance. Now, very interesting. The performance tells you that the markets were not happy because all your domestic oriented sectors were the ones which have underperformed, from energy to oil and gas, real estate, PSU banks and FMCG, down to the tune of almost around 11 to 21% from the previous budget to now. What has outperformed? It's your export-oriented sectors, Nifty IT, Nifty Pharma, up to the tune of almost around 3 to 6%. So you clearly know that it's the domestic policies which have not really been working for India Inc. It's the export-oriented ones. And similar is the trend if you see in terms of gainers and losers. From a TV slab to Wipro, Bajaj Finance, Holdings and a Bharti Airtel, gains to the tune of almost 12 to 26% that did come in. What was losing? Adani Green did lose out. Yes, there was a Hindenburg impact coming in there. But you had a BHEL, IndusInd Bank, Tata Motors, JSW Energy, all in the range of around 30 to 36%, which were under pressure. Let's look at the broader markets. If you see Nifty 500, you have 366 stocks that have actually given negative returns since the previous budget out of Nifty 500. So that tells you the quantum of underperformance that has come in there. And if you talk about the mid-cap companies, BSE actually is outperformed with gains of nearly 2.3 times. But Lloyds Metal, Paytm, Coforge, Dixon, these are the ones which were losing to the tune of around 30 to 75%, gaining, I beg your pardon, to the tune of 30 to 75%. Whereas names like Cochin Shipyard, Vodafone Idea, MRPL, SJVN, Exide Industries, all down in the range of around 35 to 45%. Small caps, you have Amber Enterprises, Piramal, KFinTech, Aster DM, MCX, all up in the range of 40 to 50%. Whereas if you see in terms of the losers, if you can have that slide, there you go. Honasa, Sterling, Chennai Petro, Tanla, Jupiter, these were the names which were losing out. So that's in terms of the performance. But let's also look at a few of the other reasons which impacted the markets. The largest ever FI sell-off that came in to the tune of almost around 2.7 lakh crore. Secondly, you have analysts who have gone ahead and cut estimates as well with regards to earnings for FY25 and 26. Apart from that, if you talk about the geopolitical concerns, they have been looming on the domestic markets. And very lastly, if you see in terms of the election year, that has seen lower government spends, culminating to overall the rate cut delays that have happened amidst the global easing. So these have been factors also that have impacted markets apart from the budget, but this has been the overall performance from 2024 to now. But Somit, overall, this is what we've already seen. Now, a lot of expectations that have come in from brokerage houses as well. What have you picked up?
Well, multiple brokerage houses have come out with the report, but top 5 among them, firstly starting off with UBS. Now, they're expecting, or they're saying that the impact of budget on markets would be very muted. They're not expecting much of a growth coming in from the capex and consumption, given that the government wants to contain their fiscal deficit at around 4.5% of the GDP in FY26. They're saying that the capex, if it is less than or around 11 lakh crore rupees, this will definitely be negative for core infra companies like L&T and capital goods company as well. When it comes to Macquarie, now they are saying that there won't be any change in gold tax this time, like something that we had seen in the last budget. They are expecting a mid to single digit hike in cigarette taxes. For the past 3 years, we have not seen a major hike when it comes to cigarette taxes, so they're expecting a mid to single digit tax hike this time. And they're also saying that there could be some measures to address the dumping that we have been seeing from China. So some safeguard duties or import duties could come in from the budget this time. Now, when it comes to Morgan Stanley, they're expecting the government to budget for higher capital expenditure growth this time, but the focus would be more on execution and implementation. This was something that was lacking in FY25, so that focus would increase in FY26 as per Morgan Stanley. They're also expecting some rationalizations to come in when it comes to direct taxes and some sector-specific incentives to come in from the government side. Now, they're all continue to remain overweight when it comes to financials, consumer discretionary, industrials and technology, while they're underweight on all the other sectors in the market. Now, when it comes to Jefferies, they are saying that less than 15% capex growth would definitely be negative for core infra companies like L&T and EPC contractors as well. So, more than 15% growth is only something that could cheer the market, at least the capital goods stocks as per Jefferies. They're expecting some welfare measures to come in. They're expecting expansion in the PLI schemes, and they're also expecting a capital gain tax hike that could come in this budget as well. But they're also advising their investors that if there is a dip post the budget, then that should be a buying opportunity for in the Indian markets. And when it comes to JP Morgan, they are saying that the government spending would be limited, given the fact that they need to maintain the lower fiscal deficit target, and also the indirect tax collection was lower this financial year. They're expecting government to prioritize on infrastructure, public investment, and some support for consumption also should be given by the government in this budget. Now, the key focus sector areas would be railways, housing, urban infrastructure and defense, and the brokerage continues to remain overweight on financials, consumer staples, healthcare, real estate and industrials.
Thanks so much, Somit, for that. So you've got the key numbers so far on the budget that you should watch out for. We've spoken about what the street is expecting. We've spoken about what the brokerages are expecting. But in the run-up to the budget, particularly over the past couple of weeks, we've been bringing you a lot of breaking news, budget breaking we've been calling it, about what the finance minister might do, what the deliberations have been. And so from the home of Dalal Street and Mint Street, let's go across to where all of the action is going to be today, North Block, where Rishabh is standing by to sum up everything that we've brought to you in the run-up to Budget 2025 in the form of breaking news. Rishabh, line it up for us.
Right, it's a cold, foggy morning that we're seeing here at North Block at the Ministry of Finance, where I currently am. Right behind me in a few hours, we'll see the budget documents travel all the way to the Parliament, where the Finance Minister will then start with her budget speech. Now, with that, we have a bunch of key decisions that we are expecting and that we have broken in the run-up to this very day. The first one, the big whammy we're all expecting is some sort of clarification and proposal on a new income tax bill. What that draft bill will entail is sort of an easier tax compliance procedure. We'll see simplified language also come in. Also, the new tax regime for individuals might be tweaked. We might see some sort of an increase in the exemptions that come in for incomes of up to rupees 10 lakh. Those are the two large big ones that we're expecting in terms of income tax. What we're also seeing is that customs duty might be rationalized, especially on high-end items like some medical instruments, some electronics. These might see some rate adjustments. We also broke a story on how custom duties on US imports, on high-end US imports, might also be slashed given the sort of tariff threats that have been coming in from the Donald Trump, the US president. What we're also seeing is that the Prime Minister internship scheme, which has seen success so far, could also be revamped. It could be revamped to have to sort of broaden the age horizon so far as to what we've seen. What we're also seeing is that the talk of the town, that is artificial intelligence, might also see a special policy package coming in, and while we might not see monetary support for it, there might be policy tweaks to sort of further the deployment of artificial intelligence in the private as well as the public sector. What we're also seeing is that the next phase of the asset monetization plan of the national government could also be put into action on this very day. This might also find space in the finance minister's speech. Lastly, the Desh bill could also be pushed to sort of boost exports and bring in FDI investments. Remember, merchandise trade has been a pillar, so has services trade. So exports now need to catch up if India needs to sort of reach that Viksit Bharat vision, and about 10% sort of CAGR growth is needed for that. And exports, like the CA also said, that will be needed. Desh stands for the Development of Enterprise and Services Hub. So that bill could also find mention in the finance minister's speech. This is all we have right now. We're tracking the budget very, very closely right here at the North Block.
Absolutely, and so are we. Thanks, Rishabh, for that. Now, markets have reacted quite significantly. In fact, the way that I looked at the data, 5 out of 6 instances, is it 4 out of 5? You know what? Let me ask Harsh to tell you. 4 out of 5 instances, I think, Harsh, were when the markets reacted positively. What's the data suggesting?
Well, yeah, let's pull that up over the last 5 budgets thereabouts, how have markets reacted, and try and dissect it just a wee bit. Now, in terms of budgets, FY, or rather the 2021 budget really stands out in that sense. Look at the gains that both the day of the budget the Nifty has made as well as the week after the Nifty has made. Generally, the trend has been that if on the day of the budget markets go up, the week thereafter you're seeing some bit of tapering. And if on the day of the budget markets go down, we've seen a bit of a recovery for the rest of the week. So we've seen a more easy digestion of policy in the week after and a more tempered reaction for the week gone by post the budget. So yes, on budget day, there could be a reaction, and that is 2021 budget. Let's pull up how the broader markets have also fared, and very similar pattern is what you will see with regard to how they've performed on the day of the budget. Largely in line with the Nifty, pretty much that's how it's played out. But let's look at the week after as well. And if we pull that up, there you go. Those are also broader markets. Look at 2021. 3 measures really stood out for me in 2021. One was tax stability. Second was an increase in the fiscal deficit because the world was coming out of COVID. And third was large capex. And because of that, you've seen markets react extremely well in 2021. Maybe some color around these things would probably create a buzz in this budget as well.
Absolutely, Harsh. Thanks so much for summing that up for us. And you pointed out the very key factors in 2021 that led to that significant move for the markets. Let's see whether that takes place today as well. Because as we're speaking, there is a lot that is happening in the global context that could determine the course that markets take. Donald Trump, he's just announced significant measures that have to do with the tariffs that are levied against his partners. In fact, let's listen in to what he had to say.
going to put tariffs on chips. We're going to put tariffs on oil and gas. That'll happen fairly soon. I think around the 18th of February. And we're going to put a lot of tariffs on steel. We already have tariffs on steel, and we've saved our steel industry, but that was relatively small compared to what it'll be. But we're going to be putting tariffs on steel and aluminum and ultimately copper. Copper will take a little bit longer, and that'll happen pretty quickly.
So the tariffs have been announced, and we're just a few hours to go for the budget speech at North Block. We'll get you all the action before, during, and after. So I'd encourage you to stay tuned. To set you up, we have had a lot of conversations over the course of the last few weeks with the who's who of Dalal Street as well as India Inc. And here's some of what they had to say ahead of this big event.
Well, I think if you take him at his word, I guess Samir is right. You don't take him very seriously or very literally. You take him seriously, but not literally. But if he follows through on his economic policy, and I think at some point he's going to follow through on tariffs and tax cuts, these are the things that he's been running on. They are both inflationary. And I think the bond news is suggesting that it will be an inflationary environment in America to begin with. Now, you can't go against the law of economics and say that these policies are inflationary, but will ask the Fed to reduce interest rates. I don't think that's going to happen. So I think we're going to come into a brave new world. I think since World War II, and particularly since 1989, the US has led the world forward. The march has been long and narrow, straight path. But for the first time, I think the world is making economically a U-turn. We're going back to a mercantilist policy, a protectionist policy, anti-global policy. And if I can only paraphrase Rudyard Kipling, what does he know of America who only America knows? I think he understands the pulse of the American people, but my sense is that Trump doesn't understand the role that America has played in shaping the world we live in today. And I think there'll be a price to pay for it down the road.
This is the day that shapes the future of 1 billion dreams.
From the fields of agriculture to the backbone of defense.
From ambitious infrastructure projects to everyday tax policies.
Every decision counts.
How will this budget balance growth and fiscal prudence?
What will it mean for jobs and what will it mean for your portfolio?
Join us for the most comprehensive coverage of Budget 2025
as we decipher the impact
of this budget on you.
I present the budget for a historic
Well, the union budget is right around the corner. It's a very interesting time leading up to the budget as well for the policymakers as well as, us as shareholders, because we see a lot of movement in the Nifty as well as speculations are rife with what could be some of the measures that are announced in this particular budget as well as has been in each one going into the same. We look at some of the key moves that have seen in the Nifty before as well as after the budget and get you some of the biggest measures that were announced in these budgets and what could have led to the strong Nifty reactions. Let's first look at 2024 because we had two budgets announced in this particular year. One was post the elections as well, and we did see a 1.5% move in just a week after, and that momentum was continued in the month as well. Leading into this budget, there were a lot of speculation, so we saw a downward reaction of the Nifty in the past week, and we did see some of the measures such as the standard deduction being increased to 75,000 for salaried employees from 50,000 earlier, as well as the new tax regime now in having tax-free status for up to 3 lakh rupees per annum for the investors as well. Apart from that, we saw custom duty reductions on mobile phones, gold as well as chargers as well. And these were some of the key moves in this particular budget. Leading up to the election, we had, the 2024 budget in February as well. Let's see some of the reactions, as you can see in this particular time frame as well. One of the key moves was increasing the budget for capital expenditures to 11 lakh crores, the first and a very huge budget as well compared to the last decade. And we did see one of the positive reactions in the week and the month after as well. For 2023, it was a very budget going into this particular budget. Speculations were rife. We did see a negative 2% reaction just in the week before leading up to the budget as well. While the momentum wasn't very strong, and in this particular budget, we did see the new tax regime increasing the rebate to 7 lakhs. But apart from that, there was some continuations of policy measures, but nothing big to report as for. For 2022, it was a very interesting budget because we did see a strong reaction going into the budget just the week before by roughly about 2.5% on the positive side. But in the next week, as well as the month after, we saw a sharp reaction on negative 5% of the Nifty reactions. Some of the key measures were like they had involved rupees 2 lakh crores as additional credit to MSME firms. Apart from that, we also saw roughly 48,000 being allocated for building 80 lakh houses, but none of
I present the budget for 24-25. India's economic growth continues to be the shining exception. We need to focus on 4 major castes, namely the Garib, Mahilayen, Yuva and Annadata.
माननीय वित्त मंत्री श्रीमती निर्मला सीतारमण, मैं मां लक्ष्मी से प्रार्थना करता हूं कि देश के हर गरीब एवं मध्यम वर्ग समुदाय पर मां लक्ष्मी की विशेष कृपा रहे। साथियों, ये देश की जनता ने मुझे तीसरी बार ये दायित्व दिया है और इस तीसरे कार्यकाल का ये पहला पूर्ण बजट है।
Welcome to NDTV Profit special budget coverage all day, and you heard the Prime Minister saying that this is an important budget because it's the first budget of his 3rd term. We will, over the course of the day and till we lead up to the Finance Minister's speech, tell you exactly how to prepare for this day, which has become even more crucial than the last many budgets. And here is why. It's coming at a time of so much uncertainty globally and some questions domestically. So let me start and set the stage there for you before we get on to all of our programming. First of all, it's coming at a time when India's GDP forecast is lowered. For FY26, the range that the Economic Survey has said starts at 6.3% at the lower band. So we are seeing a tough time there. Budget has to set the parameters to boost growth. The other big reason is why this is important right now is because consumption is lagging. While rural consumption has come back, it's important to bring up urban consumption as well. The blessings of Ma Lakshmi that Prime Minister spoke about, will they shine on the middle class and the taxpayer is a very important thing to see. Household savings have also dropped. We are seeing some stress in the asset quality of what banks and institutions are lending. That needs to be nipped in the bud as well. And I suppose the biggest reason, because Donald Trump has in a sense tried to steal the show this morning on the news floor, threats of global tariff war loom. From today, 25% tariffs on Mexico and Canada have been put in place, an additional 10% on China. We have to wait and see what comes next. How can this budget Trump-proof India in these times to come? And of course the dollar. As the dollar gets stronger, will it attract global flows at the cost of emerging markets, including India? These are some of the big reasons that this budget becomes very, very crucial. And yes, today Neeraj, Alex and I will take you through all of it. Neeraj, this is also some of the reasons that the market is watching it.
Yeah, most certainly, Tamanna. Good morning. And interesting that Tamanna mentioned this point about being Trump-proof, right? Simply because you saw this exclusive story by our colleague Shrimi a few days back about how there might be some tinkering with select items, which might be a part of the budget as well, by the way, which might try and make it Trump-proof. But here's what those would be nitty-gritties, right? Here's what the key headlines are that the market is expecting in the budget, right? Can the government take up the mantle of capex again? We know that the numbers haven't looked that great, but December, as we learned yesterday, has actually turned out to be a really strong month. Can that continue? Will the government's numbers for FY25, more than FY26, will the government's numbers for FY25 look promising for capex? Will there be tax cuts to spur growth? It could be as simple as taking up the standard deduction number higher, but something to watch out for. Schemes for job creating sectors, manufacturing, PLI, infrastructure, textiles, what have you. Are there schemes for job creating sectors? The third most important thing. Spending has been at 3.5% YOI. Can it reach numbers of 6.5, 6.7, which shows that the government intend to spend in the months of February and March at the very least? Are there? And additional GST slabs. Are there some additional GST slabs on some sin items? We know liquor or alcohol is out of the purview of the budget, but and is in the purview of the GST Council. But could there be something else on cigarettes, etc.? Might be something you want to watch out for. Lastly, the key numbers: fiscal deficit presumed to be 4.9% or lower. Too low is also not good, because that would mean that the government is not spending and tightening the belt. So too low is also not good, but one would expect that 4.9 is a given, maybe even a 4.8. Let's wait and watch. The biggest hope to my mind is that LTCG 12.5%, STCG 20% should not be tinkered with this time, because the markets have had 4 very tough months. You don't want a fifth one. February, typically, remember viewers, has been a month which seasonally actually corrects. We want that to change this time around, don't we? And lastly, don't think that the corporate tax rate will be lowered too much. So shouldn't keep too much of expectation around that. I think that's done. It's history. It's not going to happen again, at least in the near term, with the kind of financial stress that the document of the budget is in. So these are some key things to watch out for. Alex, lots of things on personal finance and lots of things with regards to nitty-gritties, right? I mean, PLI schemes, spending on infra, education schemes, some innovative schemes which give the vision of Prime Minister Modi for the next 5 years will all be in focus.
No doubt, because even setting up the budget, I thought, of course, he spoke about Ma Lakshmi, he spoke about the middle class, but he also spoke about the youth, and he spoke about job creation. Remember, in the budget last year, you had the internship scheme, you had measures that were announced that were aimed at creating jobs there. What is a follow-through today? But in the context of what is happening around the world, guys, we're talking at a time when Donald Trump is making headlines practically every day, and you both spoken about how the budget can Trump-proof what goes on in the next financial year. The question is, will Nirmala Sitharaman Trump in budget 2025?
Oh, I think so. Because look at the kind of setup for the last couple of days. If you have to track a mood change through a trading week, I think the last couple of days stand out. I don't know if you're going to see a Nirmala candle on the charts today, but the pace seems set up, Neeraj, and I don't know what you think, for a pretty good budget session, because no harm is also good enough, and anything on top is icing on the cake.
I think the exact way to describe the market expectations, Tamanna and Alex, that no harm budget will do the market a world of good, because I think the street is entering this budget with nearly zero expectations. Don't do anything. Somebody made this joke yesterday that if the budget starts at 11 and ends at 11:01, the market will not be disappointed. just no bad news will be great news this time around. I mean, we've had 4 tough months, right, guys? So therefore, you hope that.
No, but from the economic survey, it doesn't seem like the government wants to rock the boat, if that is any reading of the tea leaves. But what about that one factor that, frankly, not just the Indian finance minister, no finance minister, no government has control over, is what President Trump is doing. And which is why, before we get to the global setup this morning, I just want to play out an excerpt of what President Trump said, his comments after tariffs have been imposed to the tune of 25% on Mexico and Canada and an additional 10% on China. He's made it clear he is not done yet.
We're going to put tariffs on chips. We're going to put tariffs on oil and gas. That'll happen fairly soon. I think around the 18th of February. And we're going to put a lot of tariffs on steel. We already have tariffs on steel, and we've saved our steel industry, but that was relatively small compared to what it'll be. But we're going to be putting tariffs on steel and aluminum and ultimately copper. Copper will take a little bit longer, and that'll happen pretty quickly.
Okay, the Dow was down about 300 points. After that, we'll just check out what futures, Dow futures are doing right now. So, of course, pain point in the markets because of this. And yes, you see Dow futures down as well. I want to pull up the implied open before I get to our first speaker today, just to get you a sense of what's happening in India. 87 points down is what is being expected. And maybe that's more of a Trump impact. 11 onwards, we might see a Finance Minister Nirmala Sitharaman impact. But to speak on the Trump impact part of it, Marco Papic is joining us. He's macro and geopolitical expert at BCA Research. Marco, thank you so much for speaking with us. It's a big day for us here as we track the Indian markets because of the union budget and what we expect it to do for our economy. But I suppose the bigger factor, and one which is an uncertainty, becomes what comes out of the United States in terms of tariff control, isn't it?
Yes, absolutely. And, investors sort of fall into two camps right now when it comes to tariffs. One is that tariffs are a tool of negotiating and therefore not something to worry about in the long term. President Trump can impose tariffs of 25% on Canada, can impose 50, 60, but eventually, they come together and they get a resolution. The other view is that actually tariffs are a way to raise revenue for the government over the long term. I think that the truth is somewhere in between. Some of the tariffs really are a tool of negotiating, and they will be removed, and so the market should look through them. But it is also likely that President Trump will increase tariffs across the board in some fashion in order to raise revenue. I don't think that's going to be that much, but I think it's going to be significant enough to cause more volatility in the markets over the next 3 months.
Volatility, certainly the name of the game. The last time we spoke, Marco, you spoke about the dollar and you spoke about the fact that it might just be the last hurrah. And since that point, the dollar has given up a little bit of ground, but it's been active overnight as well because of those tariffs. Where do you see it going, and what are the implications for capital markets outside of the US?
Yeah, I think the dollar action over the last month, since last time we spoke, definitely speaks to my argument that in 2025, it's unlikely that the dollar is going to go up another 3, 5, 6, 7, 8%. So far, so good. However, there's probably still more upside in the very short term, just because, as you've seen over the past 24 hours, the dollar did rally pretty strongly, given the announcement on the tariffs on Canada and Mexico. And obviously, that is going to be a headwind to emerging markets over the next 3 months, including India. But I think that once the clarity on the tariffs has been put in, once President Trump has finally announced those across-the-board tariffs, that's really what we want to see. Is it 10%? Is it 20%? Is it 2.5%? Is it 5%? That will be the last hurrah for the dollar. All this little stuff with individual countries, I wouldn't worry about it because those are discrete negotiations. With Canada, it's really about border security. With China, it's about fentanyl. I'm not too worried about that. It's really that across-the-board tariff. Once that comes in, we want to know where it is.
Got it. Marco, just one thing. I mean, I know it's with Donald Trump at the helm, almost everything is unpredictable. But if you were looking for one certainty over the course of the next 2 months? And I won't ask for more, because 2 months is almost 2 lifetimes in the current scenario of the US presidency. So if you were to look for some certainty in the next 2 months, 3 months, what have you, a particular time period, what would you most want? Because we know that tariffs will be a moving piece. So that is certainly not something that is going to be static. Is there anything that is something that can be banked upon?
Perhaps it's a little bit of a controversial view, but I think that what we can bank on is that President Trump will not deliver the type of a budget, speaking of a day of budgets. So let's stick with that theme. I don't think he's going to deliver the type of a fiscal expansion that investors think that he can do. Now, on one hand, you might say, well, that's disappointing, right? It means less US growth. But there's 2 reasons why that's very positive, particularly for investors in India. Number one, fiscal thrust in the US is not something that Indian investors should welcome, because it's actually what buoys the dollar higher. And I think one of the reasons the dollar has been not so responsive to the tariff threats is that investors are starting to realize that the fiscal outlays are not going to be as huge as what President Trump promised during the election. The second thing is bond yields, right? So the bond yields have settled. You've probably noticed that we're at 4.5% for a couple of days and weeks. That's very positive, because that will also allow equities to do generally well, not just in the US, but everywhere else in the world. So what I would say is that perhaps we're spending too much time on the tariffs and not enough on the American budget negotiations and process. And there, I think you will have a growth disappointment, but actually that will be relatively positive for financial assets around the world.
Marco, are you tracking emerging markets and India? And, just interesting to know your perspective as we wait to see what this budget unfolds. Important also because it's the first budget of the 3rd term of this government. And you're hoping for it to set the stage for the plan for the next 5 years. But any thoughts there?
I think what's really important is the FDI attraction. I think that's the most important part of anything that India can do. I think India has generally outperformed expectations in terms of financial markets. Stocks are crushing it. On the other hand, I think that India has, from a macroeconomic perspective, disappointed, actually. I mean, it's not just that growth is coming down, as you mentioned in the early part of the program. It's also that exports have not really done as well as people would have thought. So what India really needs to do is attract FDI. They can lead to more exports and more competitiveness. And I think that that's really where it's not so much the budget, it's more the foreign policy and geopolitics that I think will really matter for India. India has to continue to find a way to kind of navigate all these different blocks. It's done really, really well thus far. And I think that's going to be very important going forward. So like, for example, border negotiations with China, in my view, are probably the most important thing for Indian development going forward, because it's really Chinese industry that can move to India. It's not so much American. That's not where India is going to find alpha generation, if you will, going forward.
Interesting. Marco, thanks as always for taking the time. Pleasure speaking with you. Interesting insight to take from the global stage as well. Let's talk about what happened in trade yesterday, and perhaps, as Tamanna says, that sets the stage, because you've seen a shift in the mood. Foreign institutions once again sold, and this is something of a theme, of course. You've seen that over the past several sessions, to the extent of 1,190 odd crore, less than they have in the recent past, and that was matched quite comfortably by domestic institutions. Let's talk about the equity markets, though. They gained in a broad-based rally, and the Nifty 50 in fact gained over 250 points and ended above 23,500. The broader markets also climbed, and both the benchmark as well as the broader markets ended very close to the high point of the day. So that momentum was sustained through to the end of the session. The Nifty mid-cap 150 ended 1.7% higher. The small cap also gained by that much. And all sectors ended in the green. But interestingly, if you paid attention to what Hiral was showing you in the 7:30 program, which we started things off with, she spoke about a few sectors that have gotten beaten down over the course of the last year from budget to budget. And among them, you had energy, you had FMCG, you had realty, and all of those three recovered quite smartly on Friday. They were the lead gainers in an across-the-board move higher. Interestingly, I've also kept my eye on the India VIX, which is the volatility index, and we had a considerable cool-off in trade yesterday to the extent of 6.5% to 16.25. And that's an interesting talking point ahead of the special budget session, Neeraj.
It is, but I think just from a near-term trade perspective, right? And one doesn't know what quite will happen post, let's say 11:30, 12, if indeed the numbers around capital gains tax or capex or otherwise fiscal consolidation are different. But with an assumption or with a hypothesis that there isn't too much of deviation into any of the key landmark numbers that the street is working out for, I think the market has found a little bit of mojo, if you will, by virtue of the fact that we've now had an incessant 4-month ongoing correction, which is kind of reversed only in the last 2-3 days, and that is accompanied by 2 or 3 factors. One, that the numbers at the margin have started looking okay. I mean, quite contrary, right? Because
corporate numbers, you mean?
Yeah. Corporate numbers, earnings season, simply because the belief all through this, right, that the first 15 days, the numbers which come are good, and then you brace yourself for bad numbers.
It was the opposite, actually.
Yeah, this time around, that's the opposite. So that's part one. We saw some hints of capex pick up in December. I'm hoping and believing that likely would have continued in January. And select pockets have done well, as you know, Parag Thakkar, who's come to our studios, or some of the others have told us, right, that if you bet on the right horses, right, particularly in the good valued spaces like financials, for example, or even some of the spec chem names, right, people have made some money. So yes, portfolios have bled. The last 3-4 days have been good. One just hopes that the budget doesn't upset the apple cart, if you will, and then we look forward to Feb 7th and see what the RBI has to say. Because I think the next few days, I mean, yes, there is Delhi elections, and Tamanna, I don't know what you think about the election impact on markets per se, but otherwise today and Feb 7th and the days in between become really, really important. Hopefully the apple cart doesn't disturb. We need the markets to find some bit of mojo back. Yeah.
Frankly, in the larger scheme of things, Delhi elections will be right at the bottom of the barrel, if anything. So I think between earnings, Trump, I would push the Trump factor up higher. And capex spends, a few numbers to watch out for today, and I'm sure this is the consensus on this table. The capex numbers, by how much is the shortfall? The assessment is the 11.1 trillion rupees capex number will see a shortfall about 1 to 1.5 trillion. Does that cover up to some extent what is the extent of capex increase for next year? The expectations aren't too high. If you stick to the fiscal deficit targets, which are likely, and pencil in a 4.5% for FY26, that will be a positive as well. More than anything else, I think, you know, where the spends are going, what are the allocations? Is it on infrastructure? Are you back in the, you know, let's spend money as a government push, or are you stepping back? I think these are some of the signals that will be watched.
Yeah, just one small thing on the capex thing as well. I don't think the economy can also take the complete shortfall in the next 2 months.
That's
right?
a very important point.
So therefore, I think the street may well be happy if there is a reasonable shortfall, because you know realistically that is only as much that the economy can absorb, and maybe that number gets pushed to FY26, and which is fine.
I think it gives room on the fiscal prudence side, because ultimately you're talking about a glide path.
But the incomes haven't been that great as well. So there is a bit of a math jugglery that we'll all have to watch out for.
By the way, did anyone love Chief Economic Advisor yesterday reiterating that corporate India is swimming in profits? Let's hike wages. So the government is saying, don't depend on me. No, but the government is saying, don't depend on me to cut taxes and increase consumption. Companies, you go out and pay higher salaries. So I think everyone on this table is agreeing and happy with that idea. But nevertheless, let's start our conversations this morning. Kush Bora in the studios with us. Very good morning, Kush. Parag Thakkar with us in the studios. And we're also going to be speaking today to Saurabh Mukherjee and Prashant Khemka for their views on the budget. So full house and packed house. But I think, Parag Bhai, let me start with you. And you know, just get your sense, this anticipation of will something go wrong, even the implied open showing a little bit of negative. Are you in a positive frame of mind this morning?
Yeah, I am in a positive frame of mind. And as Dheeraj rightly pointed out, see, RBI is doing its bit. They infused 1,50,000 crore recently through VRRs and open market operations. I think 7th February will be today will be a trailer and real picture is 7th Feb. I'm expecting a lot of heavy weight lifting to be done by RBI now, because as we all know, in the entire world is short of fiscal space. Right? The fiscal space is very limited. You cannot satisfy everything, right, through fiscal. So it will, monetary is something which is easy to do. If you have an inflation figure which is trending down, then you can do monetary easing. And so I think major picture will be 7th Feb. That is my view.
Interesting. From the context of consumption, right, what will bolster consumption? And so if I infer that, what you're saying is the monetary push is going to bolster consumption. I want to know what Prashant Khemka and Saurabh Mukherjee have to say about this. I'll come to you, Prashant, first. What do you think is going to be the push? Because ultimately there's a lot of noise, there's a lot of clamor for some break on the taxes. Is that something that will push, or as Parag Bhai is saying, is it going to be monetary policy?
We are just not geared, neither myself nor our team, to think about such opportunities in the very short term. And the reason is we are geared this way is because there are, in my view, no such opportunities in such a short time period that you can. A budget is a very tightly held secret. Nobody knows what comes out till it comes out, is my view. Unless if you have some insights, then maybe there can be some short-term trade that can be created out of it, but it's not our style or not our view that money can be made or trades can be built around an event like budget. You'll know it when it comes up.
When it comes up, for sure. But I think it'll be interesting to see if at 12:30, and I'm presuming 12:30 is when the speech ends, is the first thing that we say on the table is ke picture abhi baki hai mere dost. I think that will be the most important thing. The other thing is how to trade this right now. Kush Bora, you wear a difficult hat simply because what the budget dishes out makes it completely difficult to call it out right now as to what the trade should be. But nevertheless, since you're sitting on the chair, I'm asking you, would you initiate trades which you will square before 11 a.m. or are there trades that you're initiating that you might as well keep for the next 2-3 days, assuming that the budget doesn't do too many big moves?
First up, a very good morning, guys. And excellent question to begin with, Neeraj. Especially from a trader's perspective, I personally prefer to make trades which I can hold on beyond the budget, almost agnostic of the budget, but then you can't remain agnostic of the budget, right? And I was going to start the conversation with something like, if you don't have any expectations, you can't be disappointed, correct? That's the kind of budget that we're getting into. But I think, Tamanna's probably given us another talking point, which is a hike in salaries and wages, right? So,
Chief Economic Advisor bol rahe hain. Acha, he's also saying ki have a health tax on packaged food. I thought that was excellent.
Yeah, I'm sure there are other measures of curbing that than just taxing. Adding
he doesn't like that idea.
I don't like that idea. No more taxes. Yeah. No. So just to come back to the trading question, I think I'll stick with the format which we did yesterday, and I think it played well. Which is I will give you a view from a technician's perspective and a trader perspective as well. Remember yesterday we spoke that from a purely technical standpoint, the Nifty was knocking on the doors of the 20-day moving average at 23,300. A breach above that will take us at 23,500. We're there. I think this momentum is going to continue for some time. The momentum indicators have seen an uptick. So I think my target of 23,800 and 24,000 is pretty much on the cards now. And from a purely technical standpoint, now my stop loss is revised to 23,300 and I will continue to hold my long positions. From a trader perspective, I'll do a similar trade on the Nifty, which is initiate a long position if I don't have one with a stop loss of 23,300. But again, because of the nature of the event and the day itself, I'll keep my positions light, but the bias firmly remains on the long side.
All right, let's take a look at what stocks you should have on your watch list today. And it's a mix of budget and impact, and it's a mix of some of the numbers that have come overnight. Big news on Hero as well, and we will address that. So even as the overall budget theme plays out, these are some to look at. Let me start with some of the budget stocks. ITC, of course, one. If there is any kind of a hike on cigarette taxes, that would be a negative. If it's a double-digit hike, definitely a negative. A mid-single to a high single-digit would be neutral. Less than mid-single-digit hike would be positive. L&T IRB, take a look at that because of CAPEX. Key to watch, CAPEX growth of less than 15% could be disappointing for these. In terms of the consumption play, Imami, Dabur, Jyoti Labs, Chambal Fertilizers, GSFC, M&M, some of those, L&T Finance, increased allocation towards rural schemes in agricultural sector will be important to watch over here.
Okay. Now, there's more, of course. In the housing space, we're talking about the affordable housing being one of the talking points there and what can be done there. Of course, overall housing, right? So you could see the likes of PNB Housing, LIC Housing, Awas Housing, an increase in the allocation for the housing schemes is certainly something to take into account today and watch very closely. Of course, there's a wider universe beyond the stocks that I've just mentioned. In the oil marketing space, IOCL, BPCL, HPCL, a lower subsidy allocation would be negative on account of the high losses in LPG segment. These are stocks that have buzzed quite significantly in the recent past, and you should also keep on your radar. In the power space, and this is an interesting one because I think that this particular scheme, the amount of money that has so far gone towards, and I'm talking about the corporate level, something like a Tata Power, how much of their portfolios in rooftop solar, because this is something of a dream project for this government, and there's a lot of potential there if you think about it. Adani Green, Tata Power, Wari Renewable could all react if there is an announcement of there's an increased allocation to bolster the scheme further. So certainly something to watch out for, Neeraj.
Yeah, I mean, and of course you keep an eye out for all of those rural beneficiaries, right, which we spoke about. So the Imamis, Daburs, Jyoti Labs of the world. Fertilizer stocks will make a move during the budget speech, no matter what happens. Please keep that in mind. Doesn't mean that those stocks will actually have those gains. So keep that in mind. And some brokerage notes that you want to keep an eye out for as well, I think, which will be very, very important, considering that in stocks like IndusInd and Bandhan, for example, that the numbers, Bandhan in particular, right? The numbers haven't looked that great, but is it pricing all of that in? So UBS, for example, on IndusInd Bank has maintained a neutral rating. They've cut the target to 1070. They say that it's a miss all round. The weaker NIMs and the fee income and higher credit costs are something to factor in. And there is weak business growth, of course. The slippages have increased to 2.5 versus 2.1% quarter on quarter. Management for now remains cautious of asset quality, but the stock looks cheap and to consolidate until there is more clarity on unsecured retail asset quality cycle and management succession. So this is something that you certainly want to keep an eye out for. And the one more name before I ask actually, Parag about some of these as well is Hero MotoCorp, because this is big, guys. 7 days before the results, Niranjan Gupta has stepped down as CEO. Vikram Kasbekar has been appointed as acting CEO, and Niranjan Gupta, remember, had joined the company in 2017, and Gupta will move to pursue other opportunities, which brokerage is, well, they have maintained a sell. UBS, for example, saying that the exits add to Hero's leadership woes. This is not great news at all. Okay.
This was a bit of a surprise because, all of our auto enthusiasts and reporters and analysts who covered the Bharat mobility, Niranjan Gupta was front and center on everything that they were releasing, and then suddenly this comes in. So Hero is a thumbs down today, IndusInd Bank as well, and Bandhan also, howler of numbers.
Yeah. The question only is priced in. So Parag, sorry, you want to come in?
So just one result we all forget, PNB. It was a very good result.
It was good.
4.9% QOQ deposit, loan book growth. They are at 72% CD ratio, so they have operating leverage, and they have a 91,000 crore worth of trading, technical write-off kitty. Okay, from which some recoveries can continue to happen. Management is already guided on the call that Q4 they are expecting 1,500 crores recovery. So NIMs were maintained at global NIM, I am saying, is 2.9 to 2.93%. So I think everything is in place, and I think on 26, the book value is 120, 27 book value is 138, and stock is at 100. So And PE multiple, if you just count, market cap is 1,16,000 crore. And this year they'll end with a PAT of 17,000 crore.
Are you buying PNB today, Parag?
So we have already bought.
So let me ask you a slightly difficult question, right? IndusInd Bank, bad numbers we know, but a private sector bank which has enjoyed heady valuation levels, currently available at 0.9, 0.8 book, PNB available at 0.7, 0.8 book maybe. I know you have a bias towards PNB, of course, you like it. My question is for somebody
with a disclaimer, of course.
With a disclaimer, of course. But nothing is out here is a recommendation, of course.
Yeah.
But is there merit in trying to look at a IndusInd kind of stuff?
So this is a very interesting conversation, I'll tell you. And of course, we own ICICI Bank, Axis Bank, HDFC Bank in our portfolios. And very comfortable with ICICI Axis. What used to happen was that private sector banks' ROAs were higher, right? And so they were getting higher multiples. Now that ROA was higher due to their high yielding loans to some of the segments. Now some of those segments are in problem. While PSU banks never ventured into that.
Unsecured based.
Unsecured or high yielding. Right? So their ROAs were always at 1.2%, and so their price to books were always comfortable. But now the thing is that there is no corporate slippage. Right? There are no large corporates who are slipping into NPAs, right? In fact, there are recoveries. So this cycle, PSUs are different. You have seen SBI's profit growing from 6,000 crore to 65,000 crore, right, in 10 years. Right? Because the operating profit was already there.
Right.
And it went into profits. Because the provisions declined.
So PSU banks to look at right now, what do you give us top 3 ideas?
So within PSU banks, I will prefer banks with low CD ratios below 75%, because that is where the operating leverage is there. So SBI, PNB kind of names.
And BOB disappointed you, I would say?
Because BOB again is sitting on a high CD ratio. So the operating leverage is not there.
Okay, so you're going to get this morning a lot of stock ideas. You are going to get budget news which is useful, de-jargonized, simplified, and you're going to get a lot of exclusives. So NDTV Profit has been breaking a lot of exclusive stories in the last month on what the architects of the budget have been working on. Among them is possibility of relief in income tax slabs, a boost to the PM internship scheme. Remember, you've heard it all here first on NDTV Profit. In fact, Rishabh is standing at North Block this moment to tell us what we can expect.
Right, the fog is clearing up here in North Block in New Delhi, where the finance minister will arrive soon and then depart for the parliament for her budget speech. Some key exclusive stories that we broke in the run-up to the budget. The first one is the fact that a new income tax bill may be proposed. This will sort of simplify the tax framework. It will ease compliance for businesses as well as individuals. Another sort of big breaking that we did was on the new tax regime that could be tweaked. We could see exemptions, larger exemptions for those with income of up to rupees 10 lakh. This for individuals, and this will be a big one if this does feature in FM Sitaraman's budget. The second sort of big set of news that we did was with regards to the custom dates, custom duty rate rationalizations. We could see that happening as well coming up in this budget. Some high-end items, some medical devices, electronics items may see some rate adjustments. We also might see some custom duty being slashed on US items given the constant tariff threats that are coming in from US President Donald Trump. We're also seeing that the PM internship scheme could be revamped. The age bracket could be, the age horizon could be broadened of that. And what we're also seeing is that a special policy package for artificial intelligence, which is the buzz of the town, a special policy package with regards to that could also be introduced. We're also seeing that the next phase of the asset monetization plan of the Modi government might also find mention in the finance minister's speech. Apart from that, the Desh bill, Desh stands for Development of Enterprise and Services Hub, that could also find mention given that India is now constantly increasing its its impetus on exports as a growth lever. So those were some of the key exclusives, and now we tune into the budget as soon as the finance minister's speech begins.
Absolutely, Rishabh, you said it. You took the words right from my mouth. And in fact, but there's lots to talk about before that. Markets will start, and we'll have to see what the initial expectations are. And they are at this juncture for a slightly lower start. I want to say slightly because this has changed quite dramatically. It's not really moved according to what the implied open has suggested over the past 3 days. Let's see if that pans out in trade today as well. Of course, it's going to depend on what the finance minister says at 11 o'clock. We've got lots to talk about before the start of trade, so come back. Stay with us. We'll be back before you know it.
STT definitely needs to change.
Old tax regime.
The 1991 budget was truly a game changer.
I mean, the rest is history.
Union budget.
Budgets.
General elections.
Union budget.
Two more, Yashwant Sinha and P. Chidambaram.
Arun Jaitley.
Arun Jaitley, I'd have to say.
I think Manmohan Singh for sure because of the iconic 1991 budget speech.
STT definitely needs to change because now if returns are not that good, it'll start pinching people.
Income tax.
I think income tax because that's what matters to me.
Old tax regime.
Depends. Old tax regime currently.
I would say healthcare and education.
I'd believe infra.
Oh, certainly more allocation towards infrastructure. That's what's keeping the wheels turning right now.
Game changer, but not in a positive way, was the budget when farm loans were waived off.
There are a couple of them actually. 1991, Manmohan Singh, that was the budget which opened up the economy. Then 97, Chidambaram, who reduced the tax rate from 40% to 30%. In 2001, I think, if I'm not wrong, Yashwant Sinha, who reduced all the duties on customs that led to the computer age or the IT age taking off in India.
I think the budget in 2022, where capex was done in a very big fashion.
There were several actually. 1991 was something that stands out, and I mean the rest is history.
As I said earlier, Manmohan Singh's 1991 budget, I was a very young child at that point in time, but as far as I understand from reading about it and watching a lot of
Right, on to the budget coverage on NDTV Profit, and joining us on this very special day and a special session I might add on a Saturday, which not too many people would be happy about, but that's okay. Ashish Somaya, CEO of White Oak Capital AMC, Dheeraj Agarwal, MD of Ambit Investment Managers. Gentlemen, both of you, thank you so much for taking the time out and being with us. Ashish, the belief out here in the studio is that as long as there is no negative, that will be a big positive because the market is not going into the budget with too much of expectations. And I think the last 3-4 months, not primarily because of the budget, but the market move itself shows that there was no pre-budget rally of sorts really, except for the last 2 or 3 days, which may be due to different factors.
Yeah, so the most ironic thing I heard yesterday was that the market is rallying because the market has realized that the expectations are low.
Yeah, okay.
So, I mean, we are on the same page. I think you described the state of affairs. But, I think it's in the nature of market to, hope for a surprise or hope for something. If you see the economic survey, it doesn't lay the foundation. I mean, it talks more of, it's giving a very realistic kind of sense. That's also not talking very ambitious or not talking big plans or, laying out a map for aiming 8% or something. Even the economic survey says that, whether it's FY25 or FY26, we are going to be in the 6.4, 6.8 kind of ballpark. So I think we should be realistic and we should wait for the actual thing to come out.
Yeah, well, Dheeraj, what do you say to that? I thought that line was fabulous. The market is rallying because the market doesn't expect too much. But be that as it may, I think the point is well laid out, right? That we don't expect too much. We just expect that there is no tinkering with the key things, right? So what is that one thing that you would be watching out for, Dheeraj? Would it be around capex spends, and is it a realistic number? Is it around taxation, which is always the one news that the market looks out for, or is it something completely different?
So I think I'll split the market and the economy, right? And market in the direction the budget will provide. Remember, this is the first full budget, or rather the first budget, actually proper budget of the new government after being elected in June. And there has been fears or expectations or concerns that one lesson that the government might have taken after the June setback in results is that they need to be slightly populist. So what I would look for in the budget is signs of continuity for structural reforms and structural work for the economy, and not really too much of backtrack on that. I do understand there is some need for maintaining a bit of a balance for consumption versus capex. But apart from that little bit of tinkering on the balance, what I would like to see is a continuity of what this government has done over the last many years, which is lay the foundation of a stronger and a better economy going forward. And as Ashish said, no matter what the government does in this particular budget, I think the fact that there is a little bit of an economic slowdown is here to stay.
Right.
Yeah, and we can't really...
Can I ask you why you think it's here to stay? And by the way, what you just saw were live visuals of Finance Minister Nirmala Sitharaman reaching North Block, getting ready to present the budget. Dheeraj, why do you think it's here to stay? And when you say it's here to stay, for how long? I mean, is there nothing that can be done in the budget, or what can be done in the budget to change that perspective?
So I think a bit of a slowdown for a year is here to stay, at least maybe year and a half.
Okay.
And the reason for that are multifold. So it's not just the capex flip or the consumption flip. Remember, I mean, we also overextended a little bit, for example, on consumer loans, and that is slowing down. That is slowing down because even the central bank is seeing some risks there, and they're guiding towards slowing that down a little bit at the margin. That would obviously have a cascading impact on the economy as such. And a little bit of a consolidation in the economy after a few years of strong growth is actually not a bad thing. I mean, if you continue to grow at a very high pace for very long, it tends to get a little overheated. So what I want to see from the budget is how would India do over the next 5 years, rather than an immediate 20% bounce in the market or immediate sort of a quick fix that could result in the economy suddenly turning around and the markets bouncing back to the highs. And I think that's what is more important from at least my point of view, and I think even from most of the economists of the market's point of view, to see that the long-term trend remains intact.
Okay. While Ashish, so I'm going to slip in one question on the industry, right? Because really, I think a lot of mutual fund investors are going to be watching this as well. And from that perspective, a lot of people speaking in the recent past that while the gross number on SIPs has been very solid, has been rising from strength to strength, some people have been pointing out to the fact that net number has actually been pretty static. But the fact is that the number has been coming through, and the fact is that the net flows into equity mutual fund schemes have been very strong. The only question is, they've had patience to this point. Is there a worry at all that if there is going to be a bit of a slow growth in the next financial year, as Dheeraj just pointed out, that some of that patience will wane?
Yeah, so Alex, we've seen nothing in the numbers which actually suggests, whether I see gross inflow. I mean, we've had the entire month of January gone by, and I can say it's actually, if I talk about myself or for our firm, it's been actually one of our best months ever since the time we launched our mutual funds, say about 30 months back. And even from an industry perspective, one hasn't seen anything in the data to suggest that there is any letup. I understand that, some of, like tenure completions in SIP or some closures, or that has gone up a little bit as reported in December. But you know what, I always insist on not seeing the net number, because see how many SIPs, the industry has crores of SIPs. On that base, in any given month, if few SIPs, close a little bit more, or some more tenure completions are witnessed, my point is that the closure is always a function of the total base. Whereas new registration is a function of level of confidence in future outlook and the need to invest at any point in time. So I don't think that there are any trends which suggest any letup in terms of the confidence or in terms of the flows. And yes, if returns remain muted, like now last 6 months, the return is practically nothing. Till now, we have not seen any lack of patience, but I do appreciate that if returns remain muted for say another 3 to 6 months, then you will see some amount of letup in terms of the gross inflow. That's always some cyclical element in the numbers. But structurally, I don't think anything is really changing in the near term.
What is the strategy, Ashish and Tamanna here? Great to speak with you as always, and especially on budget morning. In terms of ensuring that there is not too much of a disappointment, what would be the strategy right now? Are you seeing enough bottom-up opportunities? Is the budget something, and these decisions are not made on budget day. It's just an opportunity for us, or an occasion of us to talk about the larger picture. Where is the turnaround coming from in your view? Are you going defensive on a pharma, on an FMCG kind of a play?
See, we actually strictly believe in running, kind of a balanced portfolio construction. So there are no massive, style or sectoral preferences on a top-down basis. So generally, if you see our portfolios, obviously they're benchmarked to BSE 500, and hence, we are pretty much invested across. But yes, if I look at, our bottom-up views and where the team is finding more ideas will automatically get reflected in where we are overweight. So if you take, for example, BFSI, maybe financials is, not necessarily just the banks, but the broader set of financials. If you say, for example, digital, if you say, for example, manufacturing or industrial as a theme, while it has run up in the last 3 to 4 years, but since you specifically asked about new ideation, our team obviously does a lot of work, and new ideation seems to be happening in terms of say manufacturing, in terms of say export-oriented units, and many of those areas. The other one where we are significantly overweight is the entire spectrum of healthcare. And if you see in the last 6 to 9 months, the market itself has shown some rotation. If you see 2022 and 2023 and the first 4 or 5 months of 2024, it was largely driven by policy-driven sectors, largely driven by macros, largely driven by railway, PSU, infrastructure, all public policy pronouncements and macro indicators. Whereas last 6 to 9 months, one can clearly see two things. One is that the market has become more heterogeneous, which we typically say it's a stock pickers market. And second, also, there is a rotation. The stuff which did very, very well in the last 3 years is not doing so great in the last 6 months. And the stuff which massively underperformed in the last 3 years has started to come back in the last 6 months. So there is a bit of rotation in the market, and I think that is here to sustain.
Ashish, thanks so much for that perspective, and thanks indeed for joining us this morning. Dheeraj as well for joining us this morning. Pleasure speaking with the both of you. We have Soni Patnaik, who's AVP at JM Financial Services, joining us in the studio. Thanks so much, Soni, for taking the time. How would you position yourself? So we asked this question to Kush at the start today, and he's given us a very interesting answer. I want to know what you think. Would you take a strong position ahead of the budget?
Hi, good morning, everyone. Thank you so much for having me in the studio. See, I think budget event aside, I would just look at how the data points are placed out. For me, most important would be how the rollovers have happened on the derivative perspective from the January to February series, and they're actually on a very higher side, right? So it's 81% of our rollovers that Nifty has seen from Jan to Feb series. It's usually so high as that, and it has happened at a support level. Support was somewhere around 22,800 to 23,000. So, just assuming that people would have actually shorted at those levels at a support level is a bit too far-fetched. There's a possibility that actually they have taken a long bets for the Feb series, and a short covering move may be seen towards a 23,800, which is the next level of resistance. I don't say that we'll see a 1,500 or 2,000 point of rally in Feb series, but a quite possibility that it actually goes up to 23,800 to 24,000, and that's the level that I do watch out for. Aside the volatility that we may see today, I think it's wise to just hold on to your longs and keep on adding to the dip as long as the 23,200 level is protected and defended on a closing basis. So the data point is as simple as this: hold on to your longs, stay hedged, but not to panic in whatever volatility we may see today.
Quick question though, quick follow-up there, and these levels coincide very squarely with what Kush had mentioned as well, that he's watching for 24,000. Sonia, I'll just ask you, is the Bank Nifty the best way to play the upside, or would you believe there is any other index which is looking stronger, or any stocks which are looking stronger?
Certainly. So I think index-wise, Bank Nifty is certainly holding better, although yesterday it was a bit of an underperformer. But if you look at the overall data points, it was Bank Nifty and the private banks that led Nifty out of the woods of that consolidation range. And it would be Bank Nifty again to go ahead and give you that breakout. So for me, Bank Nifty, crucial would be to watch out if it's able to take out a 50,200 mark, which is a 200 exponential moving average. It's going to be very crucial for Feb series. So if it takes that out, there's a possibility that Bank Nifty can head towards 52,000, which is what the option chain is indicating. 49,000, strong support. Let's hold on to that with fingers crossed.
I have to take a break. But Soni, Kush, you guys have stocks this morning?
Yes, absolutely. I do. Have.
Okay, so that's our teaser for this break. First of all, so fab to have Soni Patnaik in the house, Kush Bora and Parag Thakkar. We're a full table here, and it's going to be great coverage. Very short break. We're coming back with their top picks and a lot more. The day that shapes the future of 1 billion dreams.
From the fields of agriculture to the backbone of defense.
From ambitious infrastructure projects to everyday tax policies.
Every decision counts.
How will this budget balance growth and fiscal prudence?
What will it mean for jobs, and what will it mean for your portfolio?
Join us for the most comprehensive coverage of Budget 2025
as we decipher the impact
of this budget on you.
I present the budget for a historic
The union budget is around the corner. What could be announced and how will it impact the market? UBS comes out with a key report. UBS thinks that impact of the budget on the stock market would be muted as the capital expenditure and consumption boost could be limited in this time around. But what does UBS estimate the government could announce? We bring you what UBS expects in 5 key aspects. The first one's of course the impact on the stock market. government's fiscal deficit, which occurs when the government's total expenditure exceeds its income. The third aspect would be infra companies to be impacted in this key budget, changes in the capital market structure and taxation, and finally, what government companies could be divested this time around. Now, UBS feels that the budget might not boost the market as the expenditure on consumption as well as capex might be lesser compared to the previous budget. Now, this time it is assumed that if the fiscal deficit is contained at 4.5% of the GDP in 2026, it could of course be a shortfall met by borrowings. Apart from this, UBS feels if the capital expenditure for 2026 is budgeted at a similar levels of
All right, just about 2 minutes left for the pre-open session of Budget Day. It's a special session on Saturday. Doesn't feel like a Saturday, and there's lots of reasons why. 2 hours to go for the Finance Minister's budget speech to begin. And of course, keep in mind the backdrop of what Prime Minister Modi has said yesterday. Very, very important to listen to those words because he says this is an important budget. We want to set the stage for Viksit Bharat. It's the first budget of my third term, and we hope that there are blessings on the middle class. And of course, that was the big clue. I don't know if there is a consensus within the studio that there is going to be, even if it's optical. Parag bhai, let me come to you on this. Even if it's optical, some relief.
100%. The Prime Minister, as you very rightly said, Prime Minister's speech clearly tells you that. And actually speaking also, middle class is suffering, right?
Yeah.
Because there was a huge amount of inflation which happened after Russia-Ukraine war, and wages have not gone up. Again, CEA points out to that also, that wages have not gone up in line with the inflation, right? So connecting the dots, definitely there should be some relief for middle class. Of course, whether it moves the needle for consumer companies or not is yet to be seen, but sentimentally, of course, definitely, and optically, definitely something is coming for middle class.
Yeah, I mean, it will move the needle on the economy maybe, even if it doesn't move the needle for a lot of FMCG stocks, etc. and stuff like that, because I think consumer is now so divided amongst the listed and the small private names or the regional private names as well. So that's interesting. But the key thing before we ask stock ideas from our guests is Parag, from your end, you believe banks, PSU banks in particular, but banks are the centrifugal force around which your portfolio would be dominated for the near term.
So because of valuations, second in PSU banks, I'll stick to only those who have a CD ratio below 75%. That is why SBI and PNB. Of course, ICICI Bank is our top holding, and followed by Axis and of course HDFC. So I like select banks where you don't have asset quality problem. And in PSU banks, of course, there is no asset quality problem at all, but those with the operating leverage. So CD ratio below 75%. That permits you to lend, right, more than you gather deposits. Yeah. So in this environment, when deposit gathering is a challenge and liquidity is a challenge, in spite of RBI infusing so much money, the banks with lower CD ratios will always benefit.
How the tables have turned now.
Exactly.
In the last 10 years.
People say, right, history often repeats but doesn't rhyme this time around. People need to relook that with a fresh lens, because what is historically true for PSU banks may not be true this time.
No, and just that historical idea that bad books, corporate, corporates not paying back, asset quality, and today you have a completely different.
And the asset quality is improved quite significantly.
You see the profits of PSU banks, SBI 69,000 crore, PNB 17,000 crore. You see the PAT and the market caps.
So when CEA
and the balance sheet size and their market caps.
When Chief Economic Advisor says big profits raise hikes, I think SBI employees should be listening to this fast. All right, we promised stocks. We promised stock before we went into the break from Sony and Kush. So let's start with that. Yes, Kush.
Just one quick update, on the Nifty. While the number of contracts, that are short on the Nifty is, I think, a little less. Sony was telling me about 1.7 lakh odd, and that's down from 3.3 lakh, 3.3 lakh contracts. The percentage short that FII still have is 89, 88%, right? So that's something. So as we said, no news is good news. Any kind of positive impetus will actually kick in that short covering rally also, and hence the 23,800, 24,000 kind of levels on the Nifty. Now, as far as stocks go, I said I like to trade or invest agnostic of the event, but the stocks do have a flavor of the budget event. So Colgate-Palmolive, we've been discussing that. I think in the recent past, Parag Bhai had also mentioned this. The stock had done rather well after that. It's seen a fair degree of correction, but now there is a base formation and a recovery in place where the stock's taken on the 20-day moving average on the back of good volumes. So from a near-term perspective also, 2900, 2980 are the targets, 2740 is where you place that stop loss. The second one is almost a consensus buy now, which is Maruti Suzuki. The stock's already seen a fair bit of revival, but the reason it turns into a call now for me is because for the last 15 odd sessions, the stock was resisting around the 200-day moving average. Yesterday, it broke above that, again on the back of good volumes. So this momentum could well continue for levels of 550 and 12,800, with 12,050 being the stop loss.
What about you, Soni?
So I'll have both on the buy picks. The first would be in NCC. Now NCC, purely on data points, yesterday I've seen very strong short covering. Somewhere to the tune of 6% is a short covering that we witnessed yesterday, and it has broken very well, very strongly above a 20 EMA mark on technical chart. So NCC remains a buy from current levels, and you can keep a stop loss of 246 for targets of 260 to 262. The second buy pick is from the financial space, which would be HDFC AMC, which has seen a very strong recovery from lower support levels of 3600, 3700. So one can actually buy in HDFC AMC at current price and on small declines up to 3900, keep a stop loss of 3800, and a strong target towards 4200 plus levels can be seen.
Okay, so quite a few stocks over there. This one, I just want to quickly go through what's buzzing in the pre-open session and the early minutes yet. But I would say that some of that budget push can be seen. IRB Infra, let's pull up IRB Infra for you. Capex announcements expected to come in. Agri push, look at a Deepak Nitrite this morning, look at a Gujarat Fluoro, that is being seen as well. A Godrej Agro, Suzlon has been on a tear through the last many days, continues to be. Vedant Fashion also comes to mind. Set of numbers seemed decent, and Vedant Fashion also in focus this morning, but Deepak Nitrite definitely moving there. Bajaj Finserv, again, good set of numbers. Remember, we went very, very quickly over the numbers this morning as we opened the show, but there are a good set of numbers, Bajaj Finserv among them. Punjab National Bank, let's pull up Punjab National Bank since we've spent so much time talking about it this morning and see what's happening over there. PNB also seems like it will perhaps have a good morning, at least the first few minutes. On the other hand, a Poonawalla FinCorp, again, impact of numbers. I want to see what's happening to an IndusInd Bank as well. Street seems disappointed, at least if you go by brokerage reports on IndusInd Bank, but the numbers looking decent. I mean, at least the stock looking okay in this first couple of minutes. Bandhan Bank is the other one that I want to pull up as well, and let's take a look at what's happening with Hero. Bandhan Bank about 5.5% down in the pre-open session. Hero not showing any action right now. So these are some of the plays that we will see. In terms of the budget play, Parag Bhai, how would you look at this? And we said briefly that yes, fertilizers will show some movement, but if you had to pick a theme, government capex push plus focus on strengthening the rural sector further, what would be the key pick of stocks?
So one point which is there, irrespective of the budget, just because of monsoon and all, rural consumption is picking up, right? So that is one of the theme which is irrespective of the budget. Even if second theme which I told you, and where I think government has done a wonderful job in my view, is PSU banks. They just cleaned up banks. The profits have shot up, and there is no intervention from government in terms of whom to lend or not to lend, and the full credit to government for completely turning around PSU banks. From budget perspective, I can come to that housing is a sector which should be pushed, and some sort of
affordable housing,
some sort of tax deduction which we get on the interest paid on housing, that should be increased, because there is a need to incentivize housing buying, because housing actually is a counter cyclical thing. It pushes, it creates a lot of jobs, right? So it creates demand for cement, steel and various other allied sectors. So I think housing, apart from rural and middle class, of course, what we discussed, housing is one area which I am looking at very closely, where government, if they can do something on that and increase that tax deduction, I think it will be very useful.
And so how should you play housing therefore?
So basically, see, I'll tell you, I can talk about our portfolio. We have Awas Finance and LIC Housing in our portfolios to play this theme.
Right.
Because Awas is 15 lakh and below ticket size with a credit cost of just 0.13 bips, guidance of 0.25%. So best asset quality and 20% growth kind of story. LIC Housing Finance is like PNB, trailing P is 6-7. So how can you go wrong in this kind of stocks? Even if suppose one result is bad, suppose if NII growth is disappointing in LIC Housing Finance.
And it was this quarter.
It was this quarter. So I am not so much worried. It's 6-7 P trailing P for a business where you are lending money for 7 years. So your 7 years earnings are in your pocket. So why to worry?
You looked at the numbers closely. What did you make of LIC Housing Finance?
Yeah, it was a tough quarter. This time around, margins have taken a bit of a knock.
Yeah.
Of course, some credit cost support was given to profit after tax, but outside of that, margin pressure is there.
So LIC Housing, IndusInd, Bandhan, you looked at IndusInd as well, looking on the weaker side, but IndusInd seems to be doing okay.
Yeah, seems to be doing okay in trade, but the commentary, Tamanna, seems to suggest that at least for another quarter or two, the pain will last. So especially within that MFI basket.
Okay, that's the shot. That's the money shot of the morning, right? Finance Minister Nirmala Sitharaman with the Bahi Khata. They're getting ready to go in and present the budget. That's the budget document. It's actually a tablet, but in the traditional Bahi Khata cover, going to present the budget, and we're all waiting to see what's going to be seen in it. The budget session officially began from yesterday as well. I saw someone did a piece of, this is her 8th budget as finance minister, and she also holds the record for the longest budget speech as well. I don't know if there anyone wants to come in on a betting pool on how long this budget will last, but that will be interesting to see.
The only reason why I think it could be long is simply because this is in a sense chance of laying out the vision for the next 5 years for PM Modi's 3rd term. I think there could be a lot of announcements around this. Considering the state of world affairs that we are in as well, you never know, that could be the case too. So
and no matter what, I believe that the devil will be in the detail. As always. So while
actually,
the speech,
not this time.
I would disagree as well. Okay, but you tell us why first.
I always believe that there are a couple of surprises which do spring up as part of everything that you read.
But she doesn't do that. That used to happen. That used to happen for a while, where you wait for the budget document, and then there is one booby trap that comes in on some tax that you didn't see. But what we have seen last few years is that the finance minister, all of the tough stuff as well, gets mentioned in the speech, largely speaking. No.
Yeah, and. Sorry.
I mean, that's also because the tough stuff has been around individual taxation and slabs, and therefore that warrants mandatory mention of sorts.
Nothing is mandatory. Nothing is mandatory. No, officially nothing is mandatory. The finance minister can actually just place the speech and say, this is the budget, thank you so much. It's part of the whole thing of setting the vision and giving sort of a message.
Yeah, but my only reason why I believe that this might not be too many is because I think the two most important numbers will have to be detailed out in the speech, which is the capex estimates for FY25 more than FY26 also, just to get a sense of what is it that they expect in the next couple of months, and taxation. The market dearly wants no changes to long-term, short-term, and I think both of those, which are the key numbers, will be laid out in the speech itself. So, I mean, yes, there could be individual surprises, but otherwise not so. But anyways, 9:08 done. Very quickly, some stocks. We need to talk stocks, right? Right now, the market is starting off. Some of the key pockets which have done really well in the last 3 or 4 days, right? And Kush Bora, I'll come to you very quickly on that. Suzlon, Inox Wind. Post Suzlon numbers and the commentary, they've gotten a new lease of life. Is there more here?
There seems to be, for sure, in the sense, there is a fresh lease of life. It's just that the volumes and the move already in the short term is quite exaggerated. So I would actually buy it on a dip if at all I get one, and that could be closer to the 55, 56 mark. For the last 2-3 sessions, the stock's been on an upper circuit yesterday as well. So I don't think that's an opportunity. Closer to 55 is perhaps your opportunity.
Okay, Parag Thakkar, very quickly, these wind energy companies, there will be some mention about energy transition for sure. We have an NDTV Profit exclusive rooftop solar, etc. and stuff like that. But Suzlon, Inox Wind, Wari, etc. Anything?
So basically, it is out of my circle of competence, so I'll not comment on it, and they are not there in my portfolios also.
Okay.
I would like to see them to go through the cycle.
Okay, fair call, fair call. Okay, Sony, based on the pre-open session, for some of the things, like, I mean, is there a trade, for example? I know I'm coming back to IndusInd Bank quite often, but because it's not started off as badly, is the chart saying, or the position saying that, hey, we know the results are bad, it's discounted, we want to actually go long?
So maybe not,
or
for, no, particularly not for this stock. Perhaps, I think it's just wise to wait it out. And if you want to still go on any banks, I think better would be to bet on HDFC Bank, which has shown a very strong data point, very strong rollovers of 96%. It's aggressive, and there's a possibility it can actually head again toward the 1800 level. So I think hold on to that stock would be better than getting into IndusInd Bank for now.
Sony, any views on a Suzlon or an Inox Wind?
So Suzlon on technical charts is decent, I would say, but I think as Kush has already mentioned that it's better to actually enter into a dip, and the dip would be somewhere towards the 4500 mark, 45 mark, and it's a positional dip. I think just hold on to that. You can accumulate in those levels, and from there again it comes back to the 60-65 is where you will have a decent profit to book out on. So I think it's better to just wait for the dip to come.
Yeah, and another interesting stock to see actually, if we have time, is Wockhardt, and we have an exclusive conversation with Dr. Havil Khorakiwala. We've not had the chance to play it out, but Wockhardt has been one which has been buzzing because of a new stock. All right, you're seeing live pictures right now from outside North Block. Is that the budget document? Yes, that's the budget document being brought in. I just love this shot. In those sacks, those budget documents being brought in, because of course they will be distributed physically to all the members of parliament as well. There it comes. So that whole process, just the whole process of budget making is also so fascinating. And while we look at it purely from the impact of financial markets, there's so much more to see. Look at how the pre-open session has ended. I think that's important to note as well. You're pretty much flat. You can expect perhaps not as bad an opening as the Nifty implied had put into place, but pretty much flat. The question right from here is, what is the positions that you can take before the speech comes in, so that you are not scrambling as you move forward? And I suppose that's the big one. What is the one top call, Kush, that you would give our viewers before we go into the pre-open session?
Gen irrigation, it's been consolidating near the 200-day moving average with some sort of a positive bias. I think that's the one that you can look at for targets of 75 and about 78 from a near-term perspective. And the stop loss comes in, as I said, at the 200-day moving average close to the 68 mark.
What about you, Sony?
Macrotech developers, I think that's a stock to look out for. Very strong correction, and it's giving you a good reversal from lower levels. It has actually given an option chain breakout above a 1200 mark. So as long as it defends 1200, possibility of it heading towards 1260 is quite possible.
Wow, well, those are some ideas to certainly work with for sure. We'll of course keep in mind, one is the top ideas that you do. Some of these ideas might be relevant till 11 a.m. for the trade as well. So please bear that in mind, because the budget might change things on a few sectors, if not the entire market at large. But 30 seconds left for what is a special trading session this time around on the budget day, which is a Saturday. Doesn't feel like a Saturday. As Kush Bora was saying, TGIF didn't quite feel like TGIF yesterday. But the key thing is, viewers, that while the global markets are shut, will Indian markets make a large exaggerated move based on what the budget dishes out? Or will the budget be kind enough to not really make wholesale changes and be what it should be, which is that it is a statement of accounts? We'll get to know. But first, Trump tariffs take center stage for world markets last night. Are they impacting our markets this morning? That is the key thing as well to notice. Actually not 1/3%. So not bad, you have to say, considering the fact that Dow didn't particularly have a great closing. Banks though, yet again, underperforming. Though actually it's very, very flat for almost everything. Nifty IT2, let's bring it up. Mid caps 0.5%. Small caps, let's pull them up and see. Well, Nifty IT is flat. Small cap index, which had a rocking day yesterday, up another 0.5% yet again. They have all found their mojo. Get the heat map up on the screen very quickly and see what's moving around and what's not. ONGC, I thought the numbers were okay. We didn't discuss it enough. We'll talk about it now, but 3% lower. Hero MotoCorp, to the resignations. Not an exaggerated reaction, but down 2% for sure. Then a BPCL, Coal India, TCS, etc. But the newsmakers are these two here. Then on the gaining side, Sun Pharma 2.5%, Bharat Electricals about 1%, NTPC 1%, Apollo 1%, less than 1%. So that's peppered. But Tamanna, heartening to see. I mean, in terms of newsmakers, it's Sun Pharma on one side and ONGC and Hero MotoCorp on the other side. I dare say, I thought Hero would have an exaggerated reaction. It hasn't.
Yeah.
And I'm a bit surprised by ONGC's reaction for sure.
Yeah, ONGC seeing a bit of stress. BPCL joining in right now. So oil and gas, is it expected that nothing much for oil and gas in the budget? I'm not so sure. Nestle, after its huge run-up post results yesterday, is also seeing a bit of a downtick. Hero Moto seems to be stabilizing, though it is a bit of a shocker that the CEO steps down for personal reasons just a few days before the results have to be announced. So that's that. But let's pull up the broader markets for you very quickly. This morning of the budget special trading session, that's why we're up and about on a Saturday, 0.5% up for the mid-cap 150. Not bad at all. About 0.75% up on the Nifty small-cap 250 as well. Let's pull up the sectoral index for you. It's not a big cheer on the street yet, but definitely not looking like any kind of fear or concern ahead of the budget at least. I mean, a Nifty small cap 250 being the top gainer on budget morning is not half bad. So are realty stocks. Are we expecting something for affordable housing? Perhaps we'll wait and watch. Energy stocks also not doing too badly. Oil and gas in a bit of a drag, but that's largely, I would say, between an ONGC and BPCL as well. Let's look at specific stocks this morning. IndusInd Bank, what is the impact of results? Optically, the results frankly don't look very good, but the street seems to be fairly positive on an IndusInd Bank. Let's look at a Bandhan as well. Coming off its gains really. Bandhan Bank about 0.5% down right now. Hero MotoCorp we spoke about because of the change in management, about 2% down this morning. But Punjab National Bank, pretty good numbers over there, and an upgrade from Motilal Oswal as well, completely flat, as is an LIC Housing. So results is not the focus today. Is budget the focus? Let's see. A clutch of fertilizer stocks. What are rail stocks doing? Fertilizer stocks up in the green. Deepak Fertilizer, Chambal Fertilizer. I wonder if we can pick up Deepak Nitrite as well. That would be interesting to see. Rail stocks, IRB Infra. Let's pull up some of these and see what's happening. Rail capex expected to go up. Yes, those engines are chugging this morning. Titagarh, Jupiter Wagons about 5% up. Texmaco also about 2.5% up. IRB Infra, stock to watch, 6% up. Capex and big capex expected in that bucket. Then look out for a Larsen & Toubro as well. Look out for a BHEL, a whole host of stocks you should see. Suzlon, 5% up. Once again, that's on its own trip, frankly. Wari Energies, good numbers. Solar focus maybe coming in this morning. So these are some that we should look at as well. Harsh, I find it interesting, the focus all on budget and what positions you can set in the next hour and a half.
Absolutely, Tamanna. So, when you're looking at the way in which the market's moving, you're largely seeing capex plays and skewed more towards those which have been, or where last couple of years, we haven't seen sizable increases with regard to allocations. And I'd be curious to know from a technical perspective, Kush first, what do you make of some of these railway counters, 5% higher today? Is there a trade on either side on any of these? Because the move is strong.
So, Harsh, I'm a bit skeptical and a little cautious on some of these names. And, I think we've discussed this in the recent past, that the moves that they made, somewhere in the early of January hasn't sustained. You could very well say that it's in line with what the markets have done, but it's not been a sustained move. There's a lot of expectation that's already built into the price over the last 2 sessions, 3-4 sessions, including today as well. So if the announcements are there, but not up to the mark or up to the market expectations, then I'm afraid these could give way. Purely technically speaking, something like a Texrail, a Texmaco rail is actually doing very well. had conquered its 20-day moving average, resisting around the 50-day moving average, but the volumes are fairly decent on this one. So that's the one that I have on my radar. Jupiter Wagons, after I think a howler of numbers, has actually corrected quite a bit, but then you're seeing a recovery underway. So while I remain optimistic, it is an optimism with a bit of caution. So cautiously optimistic on some of these names. Hope that the budget has enough and more for this momentum to continue on some of these names.
All right, big morning, big morning. First few minutes have looked pretty decent. Rahul Arora is joining in. He's CEO, Nirmal Bang, Institutional Equities. Rahul, very good morning to you. And interesting way to spend a Saturday, especially today. Would you say that the fact that the market has shown some amount of confidence, faith and optimism in what we'll hear in the next couple of hours is a good sign to start off with?
Morning, Tamanna. Thank you for having me on the show. I think it was quite a salute going into the budget, right, yesterday. And I think, corporate earnings probably had a lot to do with it. But I think no negative news will be positive news. The market has seen a reasonable correction. I think stocks have fallen 2x or 3x of what the actual market percentage fall is. So I think, I don't think there's too much room for tinkering. I think, most of the numbers are consensus. From a market borrowing perspective, 14 and 11 lakh crores are a gross and net, 4.5% fiscal deficit. We're expecting about a 10% growth in capex. Not too much more than that, I think. Even on the taxation front, it is pretty much personal income taxes that are driving tax growth. So I don't think there's too much of a tinkering that can be done there, because the growth that you're seeing of 10-12% in direct taxes is not coming that much from corporate taxes or anything else so much as it is from individual income taxes. So hopefully maybe at the bottom of the pyramid, Tamanna, which is something that has been probably spoken about ad nauseum, because if you even look at the consumer companies' results, even this quarter they're struggling. There's no question. And the only reason you keep talking about tax breaks or doing something at the bottom of the pyramid is to revive consumption. So I think they'll keep doing what they are on the manufacturing side of the economy. The good part is that the defense companies so far have delivered on earnings. The EMS companies as well have delivered. There's been a lot of focus on PLI there. And valuations in both these sectors have become reasonable. So I think from a sectoral perspective, I'd be looking at consumer, EMS and defense from this budget. But I think on the broad arithmetic, a 10-12% tax growth, 4.5% fiscal deficit, and probably yields inching closer to 6.5% as we go along. That should probably be the summation of the budget. Hopefully nothing negative. We'll digest this and move back to corporate earnings on Monday.
Rahul, good morning. And you may or may not be able to see, but the studio out here is raising a toast to your birthday today. So many, many happy returns of the day. Have a great one. And may the FM give you a birthday gift as well.
Thank you so much, Neeraj Bhai. I think my biggest gift over the last many years has been having friends and brothers like you who have, that we wish for each other's good health, success and prosperity. And that means more to me than anything else. So thank you so much for remembering and acknowledging it on national TV, Neeraj. Really appreciate it.
Yeah, Rahul, we're waiting for the birthday cake in office. Now that we have, you have not
Tamanna, I would have personally bought it, but the BKC traffic is so miserable these days that getting in and out would be half the birthday spent. But I will have one sent across soon enough. I promise you that.
We'll have the virtual cake on your behalf.
Yeah, but before I ask my question, Kush, you want to ask something too?
Rahul, first up, a very happy birthday. See, a lot of us market participants have these superstitions, right? So do you have one where मेरे birthday पे market ऊपर जाता है और मेरे birthday पे market नीचे जाता है? Do you have one of those? I'm keen to listen if you've got one or empirical evidence.
This is the question of the morning.
No superstitions as such, but the only thing that I have done for many years, I can tell you, is I don't leave my house without touching my mother's feet, and I don't leave my house without seeing Saurav Ganguly and Novak Djokovic's photographs. These are three people that really inspire me, and no more superstitions beyond that. I just hope we have a good day at the bourses, and
So
we
Rahul,
can have a good Saturday evening for all of us.
Yeah, most certainly. Rahul, very quickly. So if there is no tinkering with taxes, long-term, short-term capital gains, and if the capex estimates turn out to be okay, would that be a budget well done?
Absolutely, no question. And I think like I said, if there's no negative surprise, I think, even the pharma earnings that have started coming in are looking all right. I don't see any reason why the market can't rally today and going into Monday as well. Because I think, Neeraj, let's put it into perspective. I think the economic survey has been too optimistic in terms of projecting growth. 6.3 to 6.8% is too optimistic on current evidence. But let's say that number is closer to, say, 6.2%. We're still the fastest growing economy in the world. Yes, China valuations had become cheaper relative to India valuations a while back. And yes, of course, some monies have gone into the US after Trump has been elected. But I think these are more short-term phenomena. I don't think an Indian market that's heading towards a 4% fiscal deficit in a year or two from now, maybe by FY 27-28 towards the FRBM target, and a 6% growth. And Neeraj, I think this budget will probably set the tone. And we've got some hints from the recent Reserve Bank of India's operations that we potentially may be looking at a beginning of a small rate cut cycle, but that may also augur well. So I think all things considered, the start of the result season wasn't that good, but like you rightly said, if there's nothing negative, combined with what our growth projections and earnings are, I don't see any reason why the market could not have found a short-term bottom.
Rahul, what were you thinking when you heard about all the tariff noise this morning? And perhaps you won't see an impact today. Today is all about the budget, but 25% on Mexico and Canada, 10% additional on China, and then a promise of round 2 on the 18th of Feb, and a lot more actually.
So I think there are two parts to this, Tamanna. One of this is not entirely unknown. I think if you've heard his speeches and even the presidential debates that he has had in the run-up to the US elections, he has spoken about this ad nauseum, and I think there have been enough and more articles written about it in the New York Times and Washington Post over the last many months. So I don't think this has come as a surprise. If anything, India could be a beneficiary on the items these tariffs are levied on, because if there is an alternate country that they look to source these or procure these materials from, and India is a producer of that, we could stand to benefit. I think we have made a great start on the External Affairs Ministry with speaking to the counterparts in the US by allowing ourselves to take back illegal immigrants there. I think that will go a long way in terms of easing tariff concerns on a market like India. Add to that, our currency has been relatively stable. Our external sector has been very stable from the current account deficit standpoint. So I think the macros and the most important point, Tamanna, I think if you look at the deficit that China has with the United States, I think it is close to $350 billion. India is just about $45 billion, give or take. So we are a fraction of what China is. So I don't think we'll go anywhere close to that. So anything that affects global trade that India produces is only going to stand us in good stead. So it is very similar to the China plus one theory that was spoken about at the beginning of the lockdown in COVID. We did benefit through sectors like EMS and chemicals, and I don't see any reason why that cannot persist going forward. And last point on that, from a foreign flows perspective, if you're looking at countries or global large investors that are looking to allocate capital, you would not go to countries where tariffs are being applied, because you would view it as a destabilizing equation between the US and that country. And if the US and India are able to find that equilibrium, we'll be incremental beneficiaries of foreign flows to that effect as well.
Rahul, Harsh also joining in. Curious to know, last 3 to 4 budgets, the focus has been on government capex, but the handover to private capex was always expected to happen, but hasn't really happened. That's where I believe somewhere we've fallen short. What's going to be that change in this budget that you're expecting to actually drive private capex?
So you've touched on a very important point, and it's a very good observation. I think if you look at the CMI announcements for the financial year, if you look at center, private sector, and state, they're all down 20 to 30% in terms of announcements. I think a bulk of the announcements that had happened in the previous fiscal year, and I'm talking pre-Hindenburg, were predominantly by one group that was looking at, which is the Adani Group, which was making a lot of announcements into alternate energy, ports, so on and so forth. So capex was pretty much being driven and announcements by one or two large business groups in the country. That took a little bit of a backseat, but I don't see any reason why that cannot revive in a very substantial way. I think the point about capex growth that you make, that's going to be, and the reason I say 10% is because the center, in their calculations, they also factor in the amount that they're giving to states for their capex in their capital expenditure number. And if you see, a lot of states have actually used that amount of money for what we would call populist measures. So and because we've had a lot of state elections, let's be fair. So I'm not sure how much the government of India would be, incrementally keen to devolve to the states from what they consider capital expenditure. But you're absolutely right, because I think, to the point that we were discussing with Tamanna a little earlier, when you have a period where global trade is going to be in a state of influx, the X and M component of GDP is not going to be in your control. So you're left with, consumption, investment, which is government and private sector. And then, of course, you have government spending. Private capex is not happening in a material way, neither is consumption. So the onus of GDP growth is going to lie on government reviving capex. The other important part is NHAI awardings haven't been that great over the last 2 years. And if you look at most road contractors, they haven't been reporting the best of results as well. So I would not be surprised if the government decides to make some more announcements to that effect, and they center it more around increasing PLI schemes and look at giving a boost to sectors like EMS as well as defense in this sector, and so also for roads. I think, Mr. Gadkari was doing a remarkable job. It's gone off the boil the last couple of years, but there's no reason to suggest why it can't come back in a material way.
Okay. Yeah, interesting piece. Okay, Rahul, stay on. Let's stay on, Sony. Just before we let you go, though, 15 minutes into trade, is the screen looking okay on this budget day? Is there anything specific you'd like to point out?
Absolutely, Neeraj. I think it's looking quite more than decent. It has not given you any sort of a volatile movement till now. VIX is cooling off. Like I said, it could be more of a sideways trade, and stock specific is also actually performing quite well. One particular stock which has caught my eye would be Hudco, which is actually closed above a 200 exponential moving average, and a positional basis looking quite strong. So possibility that stock can actually head towards the 250 plus levels quite strong. I think just hold on to this stock. 225 very good supports, and that's all from the stock specific and the markets. Let's hope out the budget plays out well and not too much of a volatile movement for the day.
Yeah, well, that would be welcome. Less volatility on budget day. Usually we don't see that, but let's wait and watch. But Sony, take a moment to thank you for joining. I really appreciate your time this morning, by the way.
Likewise, thank you so much for having me.
And we hope to have you back in soon.
Absolutely. Sooner than soon.
All right, very short break. So much happening on the other side. We have a fantastic lineup of speakers. When we come back, stay tuned. The day that shapes the future of 1 billion dreams.
From the fields of agriculture to the backbone of defense.
From ambitious infrastructure projects to everyday tax policies.
Every decision counts.
How will this budget balance growth and fiscal prudence?
What will it mean for jobs, and what will it mean for your portfolio?
Join us for the most comprehensive coverage of Budget 2025
as we decipher the impact
of this budget on you. STT definitely needs to change.
Old tax regime.
The 1991 budget was truly a game changer.
I mean, the rest is history.
Union budget.
Budgets.
General elections.
Union budget.
Two more, Yashwant Sinha and P. Chidambaram.
Arun Jaitley.
Arun Jaitley, I'd have to say.
I think Manmohan Singh for sure, because of the iconic 1991 budget speech.
STT definitely needs to change, because now if returns are not that good, it'll start pinching people.
Income tax.
I think income tax, because that's what matters to me.
Old tax regime.
Depends. Old tax regime currently.
I would say healthcare and education.
I'd believe infra.
Oh, certainly more allocation towards infrastructure. That's what's keeping the wheels turning right now.
Game changer, but not in a positive way, was the budget when farm loans were waived off.
There are a couple of them actually. 1991, Manmohan Singh, that was the budget which opened up the economy. Then 97, Chidambaram, who reduced the tax rate from 40% to 30%. In 2001, I think, if I'm not wrong, Yashwant Sinha, who reduced all the duties on customs that led to the computer age or the IT age taking off in India?
I think the budget in 2022, where capex was done in a very big fashion.
There were several actually. 1991.
Welcome back. Very special day. We have on a trading Saturday the budget of 2025 to be introduced. But while we are at it, let me quickly introduce Radhika Gupta joining us, MD CEO at Edelweiss Mutual Fund, and we also have Pankaj Murarka, CIO at Renaissance Investment Managers, also joining us. Always great having you all. Even more special when it's in person. So thank you so much, both of you, for joining us. But I'm going to go to Parag. Parag, you know, the one thing or the one stock which is standing out despite tepid numbers is IndusInd Bank. Do you believe a bottom here has been made? There's been several questions, one time price to book, 1 year forward. Despite the poor numbers, stock is up 2%. So just a quick view on that one.
No, I think stock was oversold, definitely. And the numbers expected were horrible. And so it has not come so much horrible. So I would say that, and if you must have noticed, now the result reactions are often based on the positioning. Before that day, right? And so that positioning swings. But as I told you, because whatever, and of course there are some good positive commentaries coming out of at least in microfinance sector from some states. But definitely we are more focused on secured lenders, and that is why we hold ICICIs of the world, and as I told you, SBI PNBs of the world.
Yeah, lest Parag Thakkar think that we are talking to him only about banks. That's not the case. It's just that financials are dominating the conversation space right now. And just keep in mind that I think his earlier view was that PSU banks might have a different cycle this time around than what's seen in the past. It might well be the cycle of the PSUs. We'll actually talk about that with Pankaj Murarka as well. So as Harsh getting in both Pankaj and Radhika in the setup as well. And good morning from my end to both of you as well. Radhika, are you a contraindicator today? No, I'm just kidding.
I'm an indicator of low expectations that will be beaten by this budget.
That's great.
The optimistic answer.
I should have known I can't beat you at words.
You can't beat me. I've done reality TV. You don't beat me at this.
That's true. Let me add this. You're wearing Republican colors, and it's all
Oh
about
my.
what Trump is doing.
Trump is an alumni of my school, so let me leave it at that. You won't beat me on that one also. We went to the same college.
Okay, but anyways, so now all levity aside, how do you feel, Radhika? The market seems to be going into the budget with not too much of expectation, and that's a good thing.
Yes.
What is it that the budget can do to upset the apple cart? Let me reverse the thing per se.
So I think this is a unique budget in the sense that it's one of the few budgets where you're going in the last few years with economic uncertainty. Otherwise, you were going into the budget on a reasonably strong footing. Now, I think the market has always wanted a standard set of things from the budget. Fiscal prudence, which they've done a decent job of. So I think the one thing that the market will look at very carefully is capex, because if you look at this year's number of capex of 11 lakh crores, even if we do whatever we do, we'll be far off from meeting it. So I think the market will look at that. Not doing anything on consumption perhaps may upset the market, because given the conditions we are going into, some movement on consumption, what can really upset the market is, I think, further tax change, which I think is unlikely to happen, but really spurring up consumption. I mean, I think, Neeraj, the meta worry is that over the last few years, with everything you've done, why hasn't private sector capex started to happen? That animal spirit of the Indian economy, why hasn't that kicked off?
What's your hot take on that?
I think people are, it's chicken and egg. I think people are waiting for demand to kick in order to start taking those bets. And demand is not kicking in because people are not taking those bets. And you've done things. You've had corporate tax cuts, you've had PLI schemes to a certain extent. But I think that's the meta worry.
Pankaj, what's your take? Yes, we haven't seen capex kick off, but December was a good month for capex. Some very strong numbers that came out. Can the budget fortify that, or will there be disappointment?
No, I think, Neeraj, let's acknowledge the fact we're coming at a stage where private investments is weak. And there is a cyclical slowdown in the economy at 6.5%. I don't think so. We are discussing whether the economy is in a slowdown.
It is. It is.
That's not a point of discussion. We need to acknowledge that.
No, sorry, just an aside, because earlier Rahul Arora said that even 6.3 is optimistic.
No, I don't think so. I am not so bearish. I think India's base case growth is somewhere around 6.5%, which is what the RBI also believes, and we are somewhere there. But I certainly think we can do much better in terms of our growth. Given the fact that we're coming on this backdrop, there are certain positives that we as an economy bring to the table. We are at an environment where when we talk about corporate capex is not picked up, we need to acknowledge, I have now come to a conclusion that in a cyclically slowdown economy, there is a structural slowdown in private sector capex. Because it's been 15 years, I have not seen annual spirits in corporate India. The last time I saw that was in 2006 and 7.
Wow.
It's been out 17 years, I have not seen that. Something seriously needs to be done. If you look at the private sector capex, the government has done its bit to an extent, because the central government capex has gone from 3.5 lakh crores to 10.5 lakh crores this year, even after undershooting their budget estimates. It's gone 3x, it's grown at 16% CAGR. The private sector, government was hoping that the private sector will take over the baton. They have not. The environment or the mood when I talk to corporate CEOs still is of measured or cautious optimism. They're optimists, but they're very measured in their approach, and they don't want to put their... The good thing is, but private sector balance sheet and the financial sector, banks balance sheet are in a very healthy state. The question is what is holding back the animal spirit. In segments of economy where the government have stepped in, investments have actually picked up. So you look at defense. Defense has done phenomenally well over the last 4 years because the government has stepped in. Railway capex has done well because the government has stepped in. You look at PLI. So all the manufacturing driven capex has really picked up, driven by incentives from PLI. I think what I would expect, my expectation going into the budget, given the fact, while this is the first budget of the new government, but we also need to acknowledge that it is the 12th budget. It's a government in continuity. It's a government in succession. You can't call it a first budget. To me, it's the 12th budget. I would like them to play, I would expect, given the fact that the mood of corporate India is slightly more cautious or cautiously optimistic, government needs to take the lead. I would be very disappointed if it's not a very bold budget, because you would not get this opportunity again. The government needs to take the lead.
By bold, okay, 2-3 things which are bold. Let's razor sharp.
Aggressively double down on reviving investment in the economy. Whatever they did has helped, but probably we need on a much bigger scale. So if government bought PLI-linked incentive in 2020 and 21, and over the last 3 or 4 years they've expanded that, that has really helped, that has picked up. But we need much more bolder. I think double down on investment-related incentives in the economy.
But do we have that bandwidth? Sorry.
Resources are there.
Fair.
While we still have to manage our fiscal deficit, resources are there. And government can find resources. So aggressively, you just have to double down on that. And we are at a stage where some of the major economies, let's say the biggest manufacturing capital of the world, China is facing trade headwinds. India is unlikely to face those kind of trade headwinds from US. So we have an advantage from a global perspective where global companies are wanting to shift their supply chain to India.
Yeah.
We cannot let go of this opportunity. I must acknowledge we have missed the bus, or we have let go of this opportunity multiple times in the last 20 years. We should not let go, drop the ball this time. Wow. We need to go out and seize that.
What a strong statement there. In fact,
if we don't do that, I'm sorry, we are missing the bus again. So we need to do that. At the same time, we need to acknowledge that we are coming out of an environment where real incomes have declined. Household needs help. So you need to do something for the middle class. Some tax reduction for the middle class is important because you need to help, because on real income of household have declined in the last 3 or 4 years. Inflation has been pretty high or pretty steep. So you have to play, just to summarize, you have to play on all fronts. I would want a finance minister who's playing more like a Sehwag than a Rahul Dravid today. and you just can't let go of this opportunity.
So just to what Pankaj said and what Radhika also mentioned, just connecting the dots between the two, and of course I completely agree with middle class getting squeezed out of due to inflation, and so the demand has taken a hit, and so private sector capex is not coming in. So for example, just to take from Pankaj's example, electronics we have done really well, right? Mobiles, because we are already consuming mobiles, we are importing it. Now we are manufacturing it. So for mobile, the demand was already there in the system, and we have created a incentivized structure in terms of PLI to manufacture it. So now we have to create demand. Actually, we need a demand booster in many sectors, I would say.
I would go to the extent that while as per the FRBM, we are supposed to get to a fiscal deficit of 4.5% next year in terms of this as B estimate. Even if she pushes the target out by 1 year, but if she doubles down on investments and reviving economy, the market and the economy will be extremely
unlikely. They are very strict on their fiscal deficit target.
Which is why I am saying we need out-of-the-box solutions. The economy is in the middle of a slowdown.
Let's
you have to do unlikely things.
Okay, let's ask another guest about whether this has happened, and Radhika would have strong views here, but I need to get in Vikas Khemani in the conversation. By the way, I also need to thank Rahul Arora. Rahul, please enjoy your birthday. We've kept you waiting, but thank you and enjoy your birthday. But Vikas Khemani, founder of Carnelian Asset Management and Advisors with us. Vikas, the mood on the table out here in the studio is that there needs to be maybe some unlikely things done in order to revive animal spirits, because like it or not, private capex has not turned out, right? What is it that can be done within the limited fiscal space that the finance minister has?
Hi, Neeraj. I think, first of all, I'm sure there are lots of initiatives this government will take or is taking will take to kind of push the economy forward. Of course, government front-ended lots of public sector investments has been doing. I think first half of the economy, maybe due to elections, infrastructure investments slowed down or government spending slowed down, and I think that got compounded actually by squeezing the liquidity, and that is where I think the recent measures of RBI is quite helpful. I think, in my opinion, I am not as negative as some of the other co-panelists on the private capex. I do believe that it's going in the right direction. Of course, there can always be more. There's no doubt on that. The key reflection of that is in the order books of all the companies. I think most companies are expanding, but obviously you do not want to see the capex cycle of the previous time where reckless lending happened and that eventually created a problem in the banking system. So I think very often we compare with the China model and push that kind of investment cycle here. We must not forget that India is also a very ROE conscious market. If tomorrow promoters or companies do investments, keeping the target of the China's ROE or other countries' ROE, I think the markets won't like it, right? So I think that clearly the orderly capex should happen and is happening. The only thing probably one is not feeling as much is because it is not reflecting the credit cycle, but at the same time that is getting funded through internal accruals and the equity. So I do believe that. I think, of course, a lot can happen to accelerate investment cycle, and I'm sure government is conscious, and there would be some measures on the in the budget to push that forward. And other thing I would make is that actually what numbers they put in the budget really doesn't make as much difference as the execution, because we have seen that execution is what is going to drive the real thing, and I think that matters the most. And at least I was reading some article somewhere yesterday that government plans to spend a lot of money in this current quarter to kind of where they lost out in the first half of the year. So I guess some of those things are being done. So I would say that we are on right track.
Also joining in, I want a quick take. So from a global standpoint, demand seems to be difficult in terms of recovery. So we are relying on domestic. Now we've spoken for too long about how GDP per capita has to go up. It's not really moving in a significant fashion when you're looking at it over the last 5 years as well. What is it going to take in this budget to get there?
I think clearly, in my opinion, the income tax rates in India, especially the personal income tax rate in India, is very high, and I think middle class takes very, very big knock of it. In my opinion, even the maximum marginal rate is very, very high. So we definitely need to bring down the income tax rate. But like government did bring down the corporate income tax to a reasonable level. I think that needs to happen, and if that happens, I'm sure it will be very, very positive sentiment, which will boost consumption, which will boost also ease the bit of pressure on the middle class. So I think that is one thing, in my opinion, and I guess that's the most likely outcome of this. But the rest, I would say that government has been doing a lot more great things in terms of pushing forward the same agenda, execute more faster, more sharper. That is, in my opinion, far more important. And identification of the problem is there, but execution, I think, should be, in my opinion, a lot more accelerated.
Okay, let's do a quick round the table. And of course with Vikas on what is the top expectation on this budget, and no prizes for getting it right, but bragging rights. So, so let me start with you, Pankaj. You talked about a lot of things that you think should happen or hope will happen. What do you think will actually happen? One thing.
I think there'll be some relief for middle class households. So essentially, I'm expecting for some relief on personal taxes, expanding of the exemption limits or lower tax rates on the middle income household. I think there's a real acknowledgement. It's been about 3 or 4 years where real incomes for middle income households have declined. So we really need to solve that to help our consumption, because
and a big hint from Prime Minister.
Yeah, exactly.
Mahalakshmi.
So I think,
Mahalakshmi
I hope so. Yeah, so I hope so. Mahalakshmi, Goddess Lakshmi, really.
Okay, so tax cut for middle class. Radhika, what about you?
I'll expand it and say, he mentioned bold thinking on capex. I think you should do really bold thinking on this tax cut and middle class. So it's not incremental 20,000 rupee, 30,000 rupee. I don't think that's the need of the hour. I think severe reduction in tax slabs, really rethinking some of these old limits. Like the investment limit is, I think, 1.5 lakh. The interest on housing, I mean, it hasn't been revised for years and years.
Yeah, and it's been over a decade.
I mean, 1-2 lakhs of interest income in a city like Mumbai, Delhi, Pune, where real estate prices and rental incomes have gone. I think those need overhaul, actually, and absolute rethinking for the current reality. So part of it is expectation, part of it is a lot of hope, but I think you really need big, bold thinking on consumption.
Sorry, but where does the money come from for doing all of this?
So look,
GST,
that's what I was going to say.
You're not getting that much.
Tax collections are up. They're not bad.
Okay.
And plus,
and by the way, I agree with him. I know Neeraj made a face when he talked about pushing out fiscal deficit targets.
I don't think it will happen.
I talked to my bond CIO, and usually bond market guys are fiscal deficit. He's like, this time if they let it slip a little bit in favor of growth, it's not such a bad thing. I would go that far.
उनको चलेगा.
नहीं, वो हो जाएगा. But my making a face is not about whether it should be done or no. My making a face is that I don't think it will happen. So that's
but we have a right to be wishful now.
The point is, when you're giving your 12th budget, if you can't be bold and you still have 4 years to go,
see, that's an incentive.
Then whom do we expect to give up out of the box reforms?
Who else will do it?
In these circumstances, it should happen.
You still have 4 years to go.
Correct.
To do your course correction.
So for once this middle class, 100% I agree. Some relief has to be given through some way. I think tax, reducing the tax bucket and all, which Pankaj mentioned. I completely agree with Radhika on housing part, which I also mentioned earlier.
Yeah.
That housing tax, that deduction has to increase, because if you want to, as she said, right, that if you want to buy a house in Bombay, what does that 2 lakh rupee deduction mean to you? So that has to, and remember, my center stage of my thinking is that right now we need demand acceleration in the country. See, you can not just say that PLI, I'll give PLI, so plants are put. As I told you, electronics, demand was already there. And so you just balance it, that now you are not importing it, you are not increasing your current account deficit, and you are manufacturing it, which is a very good thing to do. But in some sectors, you need to create demand, right? If there is no demand for tractors, how Mahindra is going to put the plant? So to revive the capex cycle, private sector capex, I think you need to revive demand.
Maybe just one more point on this whole thing when we are discussing this. I think the highlight or the headline of the economic survey really acknowledges this. Deregulation. On one hand, we want to revive animal spirits in private sector. On one hand, we want to regulate. central governments, state governments just need to get out of the way. Just unleash the private sector.
This is what Chief Economic Advisor said yesterday.
Exactly.
Government,
so
please get
just
out of
get
the
out
way.
of the way.
Wow.
Let the private sector. These are corporates who can decide for themselves what is good and what is not good. Let the government not sit on judgment in terms of what you can do and how much you can do. Let people fail. Let companies fail. That's very much a part of the ecosystem.
I don't know if I'm a minority, but I'm not somehow so hopeful. I'm hoping I'm wrong here, and I'm hoping I'm here something like this. But
Vikas is not so rapid fire round, but okay.
No, I am with you on fiscal thing. Fiscal, I don't think so. They will compromise.
Okay, Vikas, what is the one thing that you think will happen this budget?
Common expectation is about the sort of personal income tax. But my important, point is that I think the firms should also do something to get money towards the fixed deposits or to the banking system. I think because the tax rates and the previous incentives being removed, there's no more incentive to invest into fixed income, and that as a result of that, you have a very small amount of money going towards the banking system and credit side. And that, I think, if you ask me, is a very big risk today. And eventually, banks will give it to for the corporates, but most banks are struggling in the growth in the deposit, and that's where I think, in my opinion, some tax incentives should be brought back so that the middle class is incentivized to invest into credit products.
Yeah, I think, Vikas, it's an interesting point, right? I mean, you're just making this point that it's very rare to see a stock market enthusiast and investor talking about encouraging money or capital flow towards fixed deposits, but maybe because banking needs it.
That's the right thing to do for the economy.
Yeah. No, I get your point completely.
I mean, because Radhika is over here and she's like, if the money is going to go to FDs.
No, I'm actually not saying that.
Flow.
By the way, I have told, whenever I've had the opportunity, I've spoken to many people in government and said it's actually not about FD, but right now, today, what you've created, and look, I'm a mutual fund person, but you've created a situation where equities are at 12% long-term tax and fixed income is fully taxable, whether it's in the form of debt mutual fund or FD. It's a little bit of a wide gap from an asset allocation point of view. So you can rethink FD, but you can rethink debt mutual funds also.
Radhika,
Neeraj isn't liking
you just set the cat amongst the pigeons. I should have. Am I wearing green? Yes. I think me and Radhika are opposites today.
But she is not suggesting increase in the equity. She is suggesting reduction in the tax
saying that at all.
on
Never would I say
fixed
that.
income side.
Now does that change?
No, I know she was not saying that.
I would never say that.
Exactly.
Just one more point on the fiscal deficit. Since we're discussing, or I made that point of letting go of fiscal deficit targets. Probably the FM can borrow courage from US. Look at US. They're in 5th year of this economic cycle. Yeah? They are running 6% fiscal deficit.
Correct.
I understand that we don't have the privileges that US has of having a sovereign currency.
Yeah.
But if an economy like US is running 6% fiscal deficit in the 5th year economic cycle, I certainly think we can let go of 30-40 basis points to accelerate our growth.
Okay, little
just
poor
one
joke.
more thing.
Poor joke. Courage of the US is President Trump back again after promising to put tariffs everywhere.
Just one thing I wanted to say on this. See, disinvestment, we are not doing anything. Yeah. We actually missed a bus of a huge PSU rally. Right? Huge PSU rally. IRCTC and Hindustan Zinc, if I add the government stake value at today's price is 80,000 crore.
But that's off the table now because that's unpopular. So don't expect anything
what
which
I'm
is
saying
not...
is,
that's been the grouse always, right?
No, but that intent is also clear. They do not want to let go of the family silver. The idea is let's fix it and run it.
PSUs need to be looked at.
But just the point that, we need to slip into a break, but this has always been the grouse, and the government is not able to disinvest at the right valuation, which has always been the pain point. Don't think it's changing, unfortunately. But all of you, thank you so much for being with us today. It's great, this conversation that's happened today. Vikas, thank you so much for being with us on the show today as well. Really appreciate your time. We need to slip into a very quick break, but more budget coverage on the other side. Stay tuned.
This is the day that shapes the future of 1 billion dreams.
from the fields of agriculture to the backbone of defense.
From ambitious infrastructure projects to everyday tax policies.
Every decision counts.
How will this budget balance growth and fiscal prudence?
What will it mean for jobs and what will it mean for your portfolio?
Join us for the most comprehensive coverage of Budget 2025
as we decipher the impact
of this budget on you.
Well, the union budget is right around the corner. It's a very interesting time leading up to the budget as well for the policymakers as well as, us as shareholders, because we see a lot of movement in the Nifty as well as speculations are rife with what could be some of the measures that are announced in this particular budget as well as has been in each one going into the same. We look at some of the key moves that have seen in the Nifty before as well as after the budget and get you some of the biggest measures that were announced in these budgets and what could have led to the strong Nifty reactions. Let's first look at 2024 because we had two budgets announced in this particular year. One was post the elections as well, and we did see a 1.5% move in just a week after, and that momentum was continued in the month as well. Leading into this budget, there were a lot of speculation, so we saw a downward reaction of the Nifty in the past week, and we did see some of the measures such as the standard
All right, just about an hour to go for the big day. Live pictures coming in outside Parliament. Finance Minister Nirmala Sitharaman walking in with the budget document. This is the heightened expectations is very interesting this time round. We keep saying that budget is actually just a statement of accounts of the country. No, this time it's a statement that India is making to her people and to the world as well. Meanwhile, markets are up in anticipation. 23,557 on the Nifty. Not half bad for budget morning at all. The setup has been going on for the last couple of days as well. But look at some of the big movers this morning that we are seeing. Definitely the budget play in action can be seen very clearly. If you look at some of the fertilizer stocks that have been moving and IRB Infra that has been moving, KPI Green. So I would say more action in the broader markets than on the main line as well. Ashish Gupta joining us this morning, Chief Investment Officer, Axis AMC. Ashish, very good morning to you and thank you so much for your time on Budget Day. I know it's a Saturday. We're all up, awake in anticipation and excitement, waiting to see what happens. What is on top of your list of expectations?
Good morning, Tamanna. No, I think, as you said, this is an important budget. It's really the first full budget of the new term. And I think, to my mind, the fiscal deficit is really what we need to see if the paths of consolidation continue. Of course, there are growth imperatives as well, but I think in the volatile global macro environment that we have, it is important that India continues to demonstrate its strong macro fundamentals. And it will be important that the government continues on the path that it had indicated last time, that in FY26, the fiscal deficit will drop below 4.5%. So I think that is the first part. And I think it is important also because this is needed to ensure that the cost of capital for the private sector continues to come down. So to my mind, that is the most important indicator. I know there are a lot of expectations around potential tax incentives to boost consumption. But to my mind, more than taxation changes, the focus has to be on improving non-tax revenues. And I think even your previous panel spoke about it, how do we get the non-tax revenues up? Over the past few years, we have seen tax to GDP improve significantly, but non-tax revenues have not gone up. So I think if we can get some impetus on that, that will actually enable the government really to up spending and support growth.
Ashish, what's the best way to do that? Good morning, Neeraj here. What's the best way to do that, non-tax receipts? Because, I mean, the needs for funds are enormous. The ways to get them, very, very limited, right?
Sure. So I think divestments are really the only way, and it also need not be strategic divestment. It not just be letting go of control. Over the past few years, we have seen, given the improved profitability of many public sector enterprises, improved governance in many enterprises, there have been significant re-rating of these companies. Their valuations are in many sectors comparable to their private sector peers. So the government diluting their shareholding in these companies is something that is certainly possible. In fact, the government can actually also potentially look to go below 51% in many of the companies. But even if they continue to hold majority, there is still a significant room to raise resources, at least this year. But if that path has to be continued, I think then the government also has to think about in which corporations can they operate with below 51% shareholding.
Ashish, in your view, what would be the couple of big disappointments if they were to come, both from a market's perspective and even from an economy perspective?
I think, to my mind, first of all, I think the biggest thing I'm watching out is fiscal deficit. So if there is any kind of dilution in the paths of fiscal consolidation, that will be a disappointment. I know there are growth imperatives, but as I said, given how the global macro is set up, we don't want to give that signal. The second to my mind will be if there is any further changes in the tax structures, particularly direct tax structures, that because already in the last couple of years there have been significant changes. So I think too much tinkering around doesn't really help. You need the new tax regime to stabilize rather than make very frequent changes.
Okay. Ashish, just a word on what has been the big talking point, right? That fisc deficit number, which at 4.9 is a given. Now, assuming that the receipt picture is yes, not looking all that great, but the capex done or the expenditures done have also kind of lagged this time.
Yeah.
If the fisc deficit number for the current year is at 4.8 and she sticks to the glide path or improves upon it, normally it would be a positive. But in this case, would the markets be disappointed with it? Because that would mean that the government is steadfastly on the fiscal consolidation path at the expense of spending on economy, because currently the economy needs some bit of boost to revive demand. So would a aggressive fisc consolidation be looked upon as a negative as opposed to a positive, or not so?
Sure. So I think if the fisc consolidation is much more aggressive than the 4.4, 4.5% that has been indicated, yes, I think that will also be seen as potentially a negative signal from a growth perspective, because we know actually it is government spend that has been a key driver for growth for the last 4-5 years, including on the investment side. And given the fact that you have, so actually, as you rightly said, FY25, 4.8, 4.9% is very easily achievable, right? So I don't think there are going to be too many surprises there. And whether FY25 ends at 4.8 or 4.9, it does not really matter from a growth perspective because that is already in the past. So it is really what is the FY26 government expenditure that is going to come through? Is it going to grow in double digits or not? That is the key that we have to watch out for.
Okay. Ashish, in terms of what budget can do from a capital markets perspective, we've been speaking about economy, we've been speaking about consumption, but purely from a capital markets perspective today, what would you say is the top factor that will give some relief?
So, frankly, some of the challenges that the government has this time around. So, in the past couple of years, the government has had very good tax buoyancy. So, if you see every year, tax revenues have grown faster than the GDP growth, and that has enabled the government to really up the capex spend and overall expenditure. I don't think the market is expecting that flexibility to be available this year. So in that sense, the expectations from the budgets are not very high. Capex growth we still expect to be in double digit, but as Neeraj highlighted earlier, it is coming on back of the fact that FY25 capex spend probably will be lower than what was budgeted. Right? So from revised estimates, you will have a double-digit growth, but if you potentially look budget estimate to budget estimate, you might not have a double-digit growth. While there has been ask for some boost to consumption, some measures to boost consumption coming from the budget, but I don't think markets have really kind of priced in that, or so if you see the market behavior, price actions over the past few weeks, it is not as if market is going into the budget with some very high expectation. So I think as long as there's no big disappointment in the budget, we don't think there should be too much negativity, even if there's no fresh big bang measure to boost consumption.
Thank you so much, Ashish. Ashish Gupta there from Axis AMC on what is expected from the budget, and hope you have a great rest of the day. We're waiting and watching. Just about 45 minutes ought to go for the budget speech to start. But meanwhile, quick look at the markets and what's buzzing at this point. Mahima is joining us with a list of top buzzers in trade right now. Mahima.
Right, so it's a mix of stocks which are buzzing on the back of earnings, as well as, pre-budget, there are some trades being taken in certain sectors. To start with, Idea Forge is the top gainer today, buzzing ahead of budget, and the stock did see a significant tanking post its earning. So there is some, buying there seen. Now the second one is Prestige Estates. This is on the back of a Jefferies note, which has upgraded Prestige Estates to buy from underperform and has raised the target price to 1600 versus 1420 earlier. What they're saying is that the large capex program is on track for the company and providing headroom for scale up going ahead. The next one on the list is MedPlus Health Services. This is buzzing on the back of its earnings again. Margin expansion was on account of increased contribution from private labels, is because of which the stock is buzzing in trade today. The next one is Inox Wind, again on the back of earnings, where revenue was up 81%, EBITDA up 123%. Margins have improved from 18.4 to 22.7. Net profit up 116 from a 1 crore amount. In terms of why the EBITDA has seen such a uptick, 82% YOY jump in execution of a 189 megawatt There was an inventory reversal of around 364 crore and 28% annual drop in EPC, O&M and common infra expenses has taken place. Another set of stocks that is buzzing in trade today is the railway stocks. This is ahead of budget, of course. SJVN, Jupiter Wagons, Titagarh are all buzzing. one separate set of stocks that are buzzing are on the back of potential support for battery energy could have some space in the budget today, which is why we are seeing an uptick in JSW Energy, Tata Power, NHPC, Vari Energies, Adani Green, Amara Raja and Exide Industries. Now these are the top gainers of course, but we also have some top losers. The first one being Aster DM on the back of numbers, where their profit was around down due to one-off merger expense, which is why it's seeing hit. Otherwise the numbers were in line. The revenue was up 10%, EBITDA up 25%, and margins have improved from 15.9 to 18%. The second one is 5-star business, which is taking a hit in trade today, where net profit was up around 26% and total income was up around 28%. And lastly, Karnataka Bank is also seeing some profit booking in trade today after its earnings, where net profit was around 284 crore versus 331 crore. Gross NPA at 3.11%, net NPA at 1.4%, and the net interest income was down by 4%, which is why we are seeing a downtick in that particular stock. So all of these counters either in green or red, but are buzzing today.
Okay, so a lot of buzzers. One of them is actually Wockhardt as well. Let's pull up the Wockhardt stock because it's their new super hit Zenic, which has got a nod and will go into second phase of clinical trials. In fact, we spoke exclusively with Wockhardt chairman Habil Khorakiwala on this wonder drug Zenic. Listen in.
We have just completed phase 3 clinical trial, and this clinical trial establishes Zenic is a superior treatment, which is very rare happening in antibiotic or any drugs. Second is that we should be expecting this drug to launch in India by early next year, and in US maybe middle of next year, because we will be filing in US sometime in middle of this year, and then we expect sometime in the middle of next year to receive approval.
All right, now to our budget masters who are with us in the studio and will be with us through the budget speech and will tell us, based on their expectations that they'll lay out right now, how did the budget fare, if you will. Pranav Sehta, National Leader, International Tax and Transaction Services, EY, Mihir Vora, CIO of Trust Mutual Fund. Both of them with us in the studios. Gentlemen, both of you, thank you so much for joining in. Really appreciate your time. There was a hot debate around what is it that the budget can do within the limited space does it have. Can it overshoot the fiscal deficit target a little bit in order to spur capex demand, etc.? Mihir, initial thoughts.
See, I think there is limited, space for the government to maneuver, especially given the fact that we need to balance investments and infrastructure, etc., versus boosting consumption. So there is a fine balance to be maintained. The good thing is that, at least from the stock market point of view, till say the middle of yesterday, there wasn't much of expectations. Markets have been kind of discounting a lot of slowdown, etc. And just because the Prime Minister made some good comments on the middle class, there was a bit of an expectation. But apart from that, I don't think we are going in with too many expectations in the budget. So no bad news will be good news, I would say. Okay. In the budget, and anything else will be a bonus.
I find this interesting. So you're linking that comment. And if you have that soundbite, we should quickly play it as well, where Prime Minister talked about how Goddess Lakshmi will shower her blessings on the middle class as a kind of trigger for the market, that there is going to be a big boost for consumption. Is that the biggest ask right now, Mihir?
I think that's not the biggest ask, because as far as consumption is concerned, for the rural masses, states are already doing a lot. All the 12 states which have introduced different schemes for women, etc., all put together is already 2 lakh crores of stimulus. They are almost 0.6% of the GDP, which is already being given to women as stimulus. So I think rural-wise, the centre doesn't need to do much in any case.
There are enough of those Ladli, Behna and all of those schemes. So
that's almost 2 lakh crores on an annualized basis. So that's a decent stimulus in any case. For the urban middle class, what can be beneficial is you do see some tax breaks, etc., because we are seeing some signs of stress in the urban consumption theme. So anything which boosts sentiment for the urban middle class will be good. But I think more important to see is whether the thrust on central government capex continues, because that's been one of the big drivers of the economy for the last 5 years. We've almost seen 25 to 30% compounded growth in capex spending since 2020, and that's been one of the pillars why we could come over the corona slowdown. I think that still needs to continue because the private sector still hasn't kicked in to the extent required. So a continuation of schemes of government schemes on railways, roads, defense, etc., plus more sectors and larger outlays for the PLI schemes is something that would be more important in my view.
I'm just going to play out that sound clip from Prime Minister, and then we'll ask Pranav Saita whether there is enough space and what is the possibility of those tax cuts we're all anticipating.
मैं माँ लक्ष्मी से प्रार्थना करता हूं कि देश के हर गरीब एवं मध्यम वर्ग समुदाय पर माँ लक्ष्मी की विशेष कृपा रहे। साथियों, ये देश की जनता ने मुझे तीसरी बार ये दायित्व दिया है और इस तीसरे कार्यकाल का ये पहला पूर्ण बजट है।
Okay, so a couple of things that we need to talk about. I think on the personal tax front as well as I would say on indirect taxes, the tariff response as well. So Pranav Saita, let me start by asking you about the personal tax front and this idea that the boost to consumption can come with some tax tinkering. We've seen, and tinkering is the word, very, very little here and there, which doesn't actually do much for consumption.
Yeah, I think it's more about the sentiment and the expectation than much ahead of that. But I do feel that something will be done in terms of helping the middle class get a little more boost to consumption. May not be very significant in the ultimate analysis on the pocket of the middle class, but still that helps in terms of the sentiment, as well as the fact that the government is thinking about them. And that's, I think, one thing that will happen. I also do feel that to some extent there will be an impetus given to Make in India, maybe through PLI, indirect taxes, schemes and so on, or maybe through some amount of restoration of a concessional tax regime on manufacturing. I do hope that comes. Since we are talking of expectations, I do hope that something that comes, because across the world we are seeing an impetus being given to domestic manufacturing and so on. So I do feel that will help to a large extent.
Which sectors do you think there's a possibility of seeing this in?
I would feel that this might be across the board, but at least in sectors which can promote a lot of employment generation or job creation. I think that's one thing that the government will want to focus on, to somehow bring about that animal spirits back again. And unless manufacturing is given that fillip, job creation is not going to be easy given our demographics. So I do hope and feel that that's something that they will also focus on.
Mr. Saita, good morning, of course, and it's always great having you. All right.
Sure.
Just wondering, one of the problems for the capital markets has been the incessant outflows. Now, taxation changes can't change that. It needs to be economic conditions. Right. But taxation changes at the margin influence whether or not there are enough incentives out there or disincentives to come in or go out, right? Is there anything that you hope, or is there anything that you fear in the budget, fine print or otherwise, that could have a bearing on this?
I hope not. In fact, I do feel that if they maintain the stability, consistency, clarity, and providing certainty, investments will come in. The chief thing here is to ensure that there is ease of doing business. That's, I think, where the second generation of reforms is really required. Because unless, and the economic survey speaks so much about it, deregulation. I think if that's what happens and the government capex on infrastructure keeps up, which over the last 8-10 months has been a little muted, I think those two things, deregulation and providing the right kind of infrastructure, will be the best fillip that one can give to investments, both foreign as well as domestic investors. Otherwise, even Indian businessmen probably will invest more abroad than in India, is what we are seeing these days. So I do feel that that's something that will be very important. One, keeping the regime stable and predictable, which I think the government has done a good job so far and will continue to do that. Second, capex, which has been great over the last few years, but the last 8-10 months have been really very tepid, and that I think needs to pick up, government capex infrastructure building.
And third is, as I said, to some extent ensuring that deregulation and the next generation of reforms, for which also I think that taking states along will also be very important and critical. So somehow building that consensus which they built, I think when they brought in GST to a large extent, that consensus building and taking states along, because that's where a lot of the next generation of reforms will have to come as well from, whether it is land, labor, some of the infrastructure and so on and so forth.
That's an important point because in some sense, what states do or don't do has a large bearing right now on how the economy does, because there is a red alert out there on the fiscal health of a lot of states who are doling out freebies currently in order for political compulsions, if you will. So what to your mind is arguably one of the most important things to watch out for from this perspective in the budget, if at all?
See, ease of doing business can't be addressed in the budget. It has to be built, based on consensus and taking the states along. I think, but even more important is how to eliminate the real grassroots level harassments. I think that's a key part of ease of doing business, and that's what needs to be addressed in terms of, I don't know, governance structures or reforms, anti-corruption movement. So, in fact, if that improves, I don't even think we need PLI. So PLI essentially directly or indirectly is a cost of or trying to make up for all these inefficiencies at the grassroots level. So I think that would probably require more of a mindset change rather than any thing in the budget or fiscal incentives, I would say.
Yeah, but just to that point, Neeraj, now either you look at subsidies as a red flag or you look at them as a consumption boost, because in the course of this conversation we've ended up looking at it both ways. For now, at least, if that's what's propping up the economy to some extent, wouldn't that at least be positive from a market's perspective?
See, subsidies are now going to be a global phenomenon in my view.
A global
phenomenon, because I think the end game everywhere is the world, especially the developed countries, are so much deep in debt that the only way out structurally is to inflate their way out of the problems, whether it's the US or Europe, anything, right? Which will mean that you will see asset prices, continue to be high. Inflation will be there structurally as a sticky way, and which will mean that the lower income category, population will have to be directly or indirectly subsidized, whether it's UBI or, as we saw in COVID, the US was giving $1,000 checks to people. I think that will have to continue because inflation is going to be sticky, especially in the places where you have seen so much debt building up. Even, for example, President Trump's measures to, introduce import duties will, initially at least, till the time you have US ramping up its own manufacturing, initially it will be inflationary in nature. So that's going to be a structural issue. As we speak, in the last couple of months, again we have seen food grains, etc., prices go up. FMCG companies already talking about raw material price increases.
Yeah.
So I think inflation is not going to go in a hurry, which means that subsidies will be a structural part of any economy.
No, just on the tariffs bit, and I wanted to get your view, Mr. Saita, because we did a story that we're expecting in this budget a custom duty drop on 7 to 8 items imported from the US. It's, in a sense, perhaps you can look at it as a preemptive move as all of this tariff talk goes on. What does India need to do to be on the right side of this tariff trade war, this global tariff war which is going to erupt?
I would feel that yes, some definitely signals might come along, but primarily anything that we do will be measured. I would feel we would wait for what exactly US comes up with, and I don't think India is on the top of the list of countries which will face the heat of tariffs.
Yeah.
So we would wait, I think, to see how it goes along. But yes, any and every items which are primarily inputs where India is value adding on that and sending out again, particularly, I think that's where we will see definitely tariffs coming down.
I think our fight is not really with the US.
Yeah.
The duties have to be with China, right? Imports from China is the bigger one.
Yeah, but just that, I think, so we've done a small exclusive 3-4 days back. It's a very small, tiny item, but 7 or 8 key items from the US might see some bit of duty changes.
Right.
Maybe it's ahead of the Trump-Modi meet or Modi-Trump meet, as the case
Symbolic.
may be. Symbolic in nature, but yeah, something like that to come out as well. So pretty interesting things that might happen.
Yeah. Ramdev Agarwal joining us on the conversation this morning, Chairman and co-founder of Motilal Oswal Financial Services. Mr. Agarwal, thank you so much for speaking with us here at NDTV Profit. Absolute pleasure on what is turning out to be perhaps an exciting morning, more optimistic than we would have thought at the start of this week.
Hello, yeah, good morning. So clearly things are kind of evenly balanced, and there's a lot of hope that the FM is going to shower goodies for the middle class and women class. That looks to be what even PM's expectation is. So I would think that the commitment to what you call Viksit Bharat, that's coming out very clearly, and one of the ways to increase the GDP growth rate from say 6.5% to maybe 7.5% would be the giving some kind of incentive to the middle class for consumption. That looks to be the theme right now.
And do you think that that's the single most important perspective? I'm just wondering, on a budget morning, and we're speaking half an hour before the budget, what does a Ramdev Agarwal have on his checklist to look at? Will you be looking at the capex figure, the fiscal deficit figure? What is the top point that you're looking at?
Yeah, so I've noted down 3 points. One is the middle class. What exactly they end up doing for the middle class, and where FM has said clearly, PM knows what exactly is going to come. So his wishes are around middle class and women class and poor. So clearly we are going to see some bundle of measures out there. Whether it stands up to anything in the market or not, that's one thing. Second is the commitment to 8% growth, whatever it takes. I mean, it is for the leadership to say that we are committed to 8% year on year. There will always be some cost here and there, but growth solves a lot of problems. So how committed they are, bureaucracy as well as the policymakers and leadership, to 8% thing. Third, the credit flow. I think one of the biggest things which has hurt the economy in last 12 months, in my limited understanding, is the credit flow into the entire economy, which has come down from 15-16% to 10-12%. If we remain at 10-11%, do whatever, I don't think we'll ever touch 6.5%. That's my sense.
Okay. Mr. Agarwal, good morning. Neeraj here. I love the backdrop, budget bullets. Maybe dodge any bullets that might come our way if they do. But here's my question, sir. One of the things that some of the panelists have stated today, of course, the unequivocal focus on growth, and therefore, if the FM and the government, or the FM in her wisdom, decides to deviate a little bit from the fiscal glide path, if that shows an intent to invest for growth or creating demand. So if the next year's number is not 4.5, right, and it says that it is being done to stimulate growth, will the markets take it well, or will the markets be disappointed?
I don't know about the market, but I'll be very happy. As I said that, to me, growth is paramount, and if you can do fiscal, to me, if you can do the growth and then consolidate fiscally, that will be very good. But I would not put fiscal consolidation as a priority over the growth. Because once growth comes, even fiscal consolidation is possible, because your tax revenues, they get boosted.
Okay, that's one. And something that I'll ask Meher Vora also, but just a follow-up question to that, Mr. Agarwal. We want to do a lot of things. There is very limited resources as well. This time around, we know that this year the revenue picture also has not looked that strong, right? So let's assume the fiscal path is maintained, if you will. There is not, I mean, we haven't done enough capex, and let's assume that number stays as is and doesn't really increase too much, if you will, and therefore misses the budgeted estimates too. Will that be a disappointment, or will that be a need of the hour because revenues also have been lower?
I mean, let's see the actual number, what comes out. My sense is that if they're able to boost the GDP growth and nominal GDP growth rate, even if with a little higher inflation of about say 5%, I think they will have enough revenue, and so they will have enough resources if they want to do if they want to maintain and actually increase nominally the capital expenditure, because the best place where the capital expenditure will give rewards to the economy is going to be infrastructure, and that only government can do. So clearly the momentum which we are seeing in last few years, where government is coming very aggressively onto the infrastructure side, that momentum should be maintained, and if anything, whatever was the budgetary provision last year, the next year should be somewhat higher, at least 10-12% nominally, so that it may remain percentage of GDP same, but nominal value will be 8-10% higher.
The other piece, Mr. Agarwal, that from a market's perspective, what does it look to? The last few years have seen this unequivocal focus towards creating manufacturing assets, giving PLI schemes, etc. That may well continue. But if there are tax changes or other changes done in order to boost consumption, all right, and boost household income, does it change the texture of the market in that the market starts rewarding consumption themes, staples, what have you? And is that fair too?
See, Neeraj, actually market is looking for earnings growth. I mean, from whichever sector it comes. It is not necessary from the only consumption side the earnings growth should come. If aggregate earnings growth, which is now flattened from last year 1,000 rupees EPS for Nifty, it has come to about 1,050 for the current year. Next year, if it doesn't scale up to 10-12% from 1,050 to say more like 1,200 or 1,150, I think market will not be excited. So it doesn't matter from which sector it comes, whether it comes from infra side, consumption side, energy side, you take your pick from which side it comes. But my aggregate earnings growth should be more like, I'm speaking as a capital market guy. If my earnings growth next year looks to be, my head of research revises the earnings growth projection for 25-26 to by 12 to 15%, that will be the big day, whether it comes by tax cut, whether it comes by earnings growth, I mean per se top line growth, or margin expansion, that is all, but 12 to 15% earnings growth next year is almost a must to hold the markets at 23,000.
Okay, I know I'm just on earnings growth, Mr. Agarwal. Want to get your view. Have you, if there's a scale of disappointment or optimism, how are you feeling from what you've seen so far? Because Q3 and second half was supposed to be the better picture being painted. This is what we all heard in the end of Q2. What have been your thoughts when you've seen the earnings growth? Because at the end of the day, budget will go one day affair. After that, you will have Trump doing whatever Trump does. But this is the core number that we need to watch.
Yeah. So clearly last year, thanks, I mean, if you see the economic survey, Mr. Anantharaman has gone about saying that the slowdown is not structural, it's seasonal, in the sense that because of elections, the government capex slowed down, at least in the first 9 months, and that has led to whatever Q3 5.4% or somewhat like that. It's not a structural slowdown in the economy, it is more of a seasonal, and that's why he is, in one of the interviews I heard yesterday, he said, of course in the economic survey is written that their expectation is about 6.3 to 6.8, but he is the guy who is insightful today, because he has written the whole thing. So my sense is his expectation of about 7% for 25-26, I would think that he would be on the right line of thinking, and if that 7% comes with 4.5-5% inflation, I think we'll have good time. I mean, in the sense that corporate earnings will pick up by more than 12 to 15%.
Got it. Mr. Agarwal, I have one final question, and that is not necessarily budget linked, but you could argue it's budget linked. And I'm saying that let's assume the budget dishes out most things that you say, if not all. I would love to know at the start of 2025, how bullish, bearish, neutral is Ramdev Agrawal from a 12-month perspective? I know you're very bullish over the long term. Just trying to think for the slightly shorter term, which is 12 months.
Yeah. So 12 months looks to be, I would not be very bullish, let me tell you. I would be a little more on cautionary basis, in the sense that I would expect about first half I would not be that bullish, but second half I'll be very, very bullish. So on the whole, for the year, with little pain in the beginning, I think we should do well. And so I never, so I would be cautiously optimistic for 25-26, particularly back-ended.
I want to get your view, Mr. Agarwal, on what we've been seeing in terms of tariffs. And while, if I would look at it from three factors: one, what the government does; one, what corporate India does in terms of its earnings and its performance; and then one is geopolitical. And geopolitical factors are going to be dominated by tariffs. All the announcements this morning, how did you look at it? And is this an opportunity for India or a threat?
I think it will be both ways, in the sense that I think it will be more of an opportunity, because the big daddy in the global manufacturing is China. And if China is being restricted, clearly the tenor of Trump's tariff policy looks to be make Chinese imports a little uneconomical, so that the local manufacturing becomes a little more viable. To that extent, if there is not so much of tariff on Indian imports, probably it will be a huge tailwind, longer term tailwind for Indian manufacturers to step up their effort and export a lot more to the US. But that looks to be pretty, simple analysis of what is going to come. It's a very complex thing. We have to play as it comes. So let's not speculate anything till final things have come.
Okay, fair enough. We don't know yet. I mean, if tariffs for China, good for India, we don't know what's going to happen from the Indian perspective. But in the context of this budget, Mr. Agarwal, what do you think we need to see? Would you wait to hear some clear policy direction there?
Yeah, so clearly, as I said, their ultimate North Star is the Viksit Bharat by 2047. And it is very well clearly laid out that compounded growth of about 8% is required. We are at about less than 6% right now, as it turns. So you have to have very, very clear policy guidelines. And I mean, where there is will, there is a way. And once Mr. Modi has set his eyes on Viksit Bharat and 8% growth, all the forces and the policy making will come together, whether it is a deregulation of the businessman or ease of doing business, regulators coming, little soft pedaling on the operators. I mean, say like credit flow into the economy. Once you slow down the credit flow into the economy, a lot of other measures don't work. So I think first they have to do the plumbing of increasing the credit flow into the economy. And that, I think, at least economic surveys talked about it. Let's see whether it comes or not. Maybe it may not be in the budget, but at least follow on to the budget. There could be rate cut. There could be. I would expect a lot more monetary action than the fiscal action as we go forward in next 1 month.
Just, I know we've been saying one last for a while, but this is really the last one. I'm just wondering, how are you looking at the pain point in the markets right now? And do you see Feb 1st and then Feb 7th after the monetary policy opportunity for a pivot here? Just wanting to get what's in your head right now when you think about where Indian equity is going.
Yeah. See, broader market last year, actual portfolios did very well, like anywhere between 35 to 40, 50% return on the back of the broad index doing just about 8-10%. So clearly we have beaten the index last year. This year, I think index will come and beat us all. So most likely, it will be very tough for most of the active managers to beat the broad index. And hence, there could be a churn from mid and small to large cap. But that happens only when foreigners, they start buying big time, because they love to buy large cap, and large cap valuations have become very reasonable. So let's see when the tide turns, and it turns when you don't expect it. So quite possible times are coming when things may change and surprise us the pace at which it changes. So I would think that there are a lot happening in the Indian economy. Large caps are reasonably priced. Mid and small are still slightly elevated, and that IPO market is kind of bringing it down one by one because the offerings are there relentlessly. So it's one of the hottest IPO market. I think one of the things which I didn't say, and I think it didn't come even in the economic survey, is the flow of the risk capital, unprecedented flow of risk capital in the economy. If it is harnessed well, it can change the complete trajectory of economic growth and the pace at which we can develop. So that is what is going to happen in next 1 or 2 years. And I would like to see how the FM helps that flow and uses that risk capital flow into the economy very, very creatively.
Well, let's hope a lot of these wishes turn out to be true. Mr. Agarwal, thank you so much for joining in today and giving us your thoughts. Really appreciate your time.
Thanks.
All right, that's an important market view from Ramdev Agrawal of Motilal Oswal. And just before we ask the follow-ups to some of these points, and in fact, I think the points collaborated between what Mr. Sehta said, what Mihir Vora said, and what Mr. Agarwal had to say. But before we do that, just a quick perspective from our research team as well, which has been waiting to talk about what should you watch out for ahead of the budget. Remember, it's not a bad market in that we are at about 1/3% in the green ahead of the budget, and small caps continue to trudge higher. In fact, it's not a trudge really. With the 1.7% gain yesterday and the 1% uptick today, small caps are really doing well. What are the stocks to watch ahead of the budget? Somit is here with a list of some of those. Somit, tell us the names and why you have chosen those.
Well, firstly, top on the list is ITC, because in the last 3 budgets we have not seen any major tax hike related to cigarette come in, and so Street is expecting that there would be definitely a tax hike on cigarettes this time. So if it's a double-digit tax hike, then definitely it's negative for ITC, but a mid to high single-digit tax hike would be neutral, and a low single-digit tax hike would definitely be positive for ITC. Apart from that is the capital goods and road infra companies like L&T, IRB Infra, Dilip Bilcon, that would be in focus. Now the Street is saying that if the capital expenditure growth is less than 15%, then it could be negative for the capital goods and the road infra companies. Then there are rural focused companies like Imami, Dabur, Jyoti Labs, Chambal Fertilizers, GSFC, M&M Finance and L&T Finance. So any increased allocation towards rural spending, agriculture spending, rural schemes would definitely be positive for these rural focused companies. Then there are housing finance companies like PNB Housing, LIC Housing, Awas Housing. All these stocks would remain in focus because any increased allocation towards CLSS scheme, that is the housing scheme, or PMAY scheme would definitely be positive for this housing finance companies. Then there are oil marketing companies like IOCL, BPCL and HPCL, and these stocks would definitely remain in focus given the fact that they have incurred huge LPG subsidy losses in FY25. So any lower allocation towards subsidy, LPG subsidy would definitely be negative for the oil marketing companies. And lastly, it's Adani Green, Tata Power and Wari Renewables. All these stocks would remain in focus because government has clearly showed their focus or intent towards increasing solar energy. So any increased allocation towards rooftop solar would definitely be positive for Adani Power, Wari Renewables and Tata Power.
For that, Samit, so those are some of the stocks that you should look at, and some of them have already run up actually in anticipation. There's just about 13 minutes left for the speech to start. We're taking a very short break and coming right back. How do you set up for trade in this last bit before the speech? Stay tuned for that and more. This is the day that shapes the future of 1 billion dreams.
From the fields of agriculture to the backbone of defense.
From ambitious infrastructure projects to everyday tax policies.
Every decision counts.
How will this budget balance growth and fiscal prudence?
What will it mean for jobs and what will it mean for your portfolio?
Join us for the most comprehensive coverage of Budget 2025
as we decipher the impact
of this budget on you. STT definitely needs to change.
Old tax regime.
The 1991 budget was truly a game changer.
I mean, the rest is history.
Union budget.
Budgets.
General elections.
Union budget.
Two more, Yashwant Sinha and P. Chidambaram.
Arun Jaitley.
Arun Jaitley, I'd have to say.
I think Manmohan Singh for sure because of the iconic 1991 budget speech.
STT. STT definitely needs to change because now if returns are not that good, it'll start pinching people.
Income tax.
I think income tax because that's what matters to me.
Old tax regime.
Depends. Old tax regime currently.
I would say healthcare and education.
I'd believe infra.
Oh, certainly more allocation towards infrastructure. That's what's keeping the wheels turning right now.
Game changer, but not in a positive way, was the budget when farm loans were waived off.
There are a couple of them actually. 1991, Manmohan Singh, that was the budget which opened up the economy. Then 97, Chidambaram, who reduced the tax rate from 40.
Welcome back. Thanks so much for tuning in, staying tuned to NDTV Profit. Now, this is something that has come up in conversation in the last 1 hour, 15 minutes. And that is it okay to miss the fisc glide path targets if the intent is to spur growth? And Mihir Vora, you look at these numbers very, very closely, right? The fisc deficit, the income that the government has, the fixed expenditures, etc. One, does the government have enough headroom for FY26, not just FY25 by the way, to keep that momentum on capex example and at the same time boost consumption? And if it does not, is it okay to miss the fisc deficit glide path target for FY26 if they are doing it in the right spaces, which makes the market believe that they are wanting to spur growth? And what would you have, even if they have the budget, or even if they have the numbers, is it prudent to do that, or would you not want it?
See, I don't think the RBI and the government are in a mindset to deviate too much from the glide path that has been shown to the market, because I think we as a country are very conscious about the fact that we tried so hard to get into the global bond indices, and that does come with some kind of soft commitments and understandings about where the fiscal direction should go. So the mindset is not really to deviate. That's one. Having said that, if you look at the tax collections and if you introduce a little more discipline in the taxation regime, there is a scope for tax to GDP to go up. In spite of having introduced GST, etc., the tax to GDP ratio is creeping up very slowly. So there is a scope for better compliance, better this thing, not terrorism but compliance, right? There is scope there. So I'd rather that they focus on increasing the tax to GDP rather than increasing taxes. And if we can get a nominal GDP growth of closer to 12% rather than 10.5%, then there will be scope for extra spending, I would say.
Okay, Mr. Seta, just the same question to you really.
Yeah. So I don't think they will want to miss the fiscal deficit number for next year as well.
Yeah.
Maybe year thereafter, because of the 8-pay commission, this, that, there might be some aberration. But at least for next year, I think they'll still stay with the fiscal deficit number. At the same time, I do feel that they will want to bring growth much higher than what we are currently seeing. And while it's a wish, I'm not sure whether it will happen. If it means that government capex, in order to be maintained, needs some revenue, I think the best course and the correct course for them to take would be more aggressive on the disinvestments. I think, while I'm not sure they will do it.
Believe it, sir.
Sorry?
While the market even believe that if they're aggressive, because they are not meeting the targets even for this year, right? Or the last year, or the year before that, what have you?
Yes. So the point that I'm trying to make is what they ought to do And probably if they do this, they should not give up on infrastructure building, government capex, because that's what will crowd in even private investment.
Sure.
But giving up on growth would be a bad idea, because taxes will really come from growth as well. The buoyancy in taxes will come to a large extent also from growth. So I don't think they should sacrifice growth. They will not want to sacrifice fiscal deficit. So I am trying to say that if you sacrifice growth, in any case taxes will come down and fiscal deficit will be a problem. So you must maintain growth, and if that requires disinvestment, but capex, government capex has to be there. So that's the way I would feel they should balance their books, but government capex should not be sacrificed. Fiscal deficit they won't, and I think they should not. We've tasted the fruits of a good macro stable environment, and I don't think they'll want to give that up very easily.
You know, just some of the focus areas that we need to look at, and Mihir, let's get, we have 5 minutes to go for the speech, so let's get a little specific on the markets just for a bit. And we were speaking in the break about how a lot of people just don't want to trade on the budget day, but there are a lot of people who do, and many of them watching us right now. Thank you for all your views, even on our YouTube stream. Just trying to understand whether the typical rail, solar energy, defense push is something that is a safe play this morning.
100%, because these are structural plays and the direction is very clear, whether it's indigenization of defense manufacturing, whether it's the shift from coal and non-renewables to renewables. So those are structural changes and those are not going to go away. So irrespective of the budget, these are certain themes which are going to be there for the longer term, I would say.
Okay, and if the budget gives focus, that's an added impetus.
That's an added impetus. Absolutely.
Okay. So, well, watch out for that bucket, if you will, of pockets wherein there has been the continued focus and that continues too as well. Mr. Seta, you're not a markets person, but very, very quickly, if there is some tax changes, etc., in order to spur consumption, you think that would be a welcome move? And does that spur the sentiment around consumption?
Absolutely, I think so.
Okay.
Okay, so interesting piece on, and this budget important because the last budget was in July, and Mihir, you walked in and said budget phir se aa gaya itna jaldi. That sets up perfectly for this piece that our colleague Hiral has done, where she's tracked markets since the last budget in July and today. Important because what a change in mood since these two events. Take a look.
If we can just move to the key 9 aspects which the markets had considered, which the budget 2024 had considered, that will be key. Firstly, disappointed investors, as Neeraj also mentioned, however, rewarded some taxpayers, right? So that was one of the key focus areas. But there were 9 things that Nirmala Sitharaman actually looked at. One was productivity and resilience with regards to agriculture. So schemes with agriculture that were announced. Employment and skilling was their next focus area. Moving on, the others were in terms of inclusive HR development and social justice, manufacturing and services where PLI schemes were announced to some extent. Urban development was the other aspect, and energy security with renewables was one of the focus areas. Infrastructure, which is the crux, capex has been slowing down. What do they do from here on? Innovation R&D was again what they focused on as well. And very lastly, if you see in terms of next generation reforms. Now, whether all of this has actually helped markets or not, absolutely not. Nifty, a downtick of 5% since the previous budget, where you had broader markets which actually went ahead and underperformed as well, to the tune of almost around 7 to 9.5%. So that's the mid cap and the small cap underperformance. Now, very interesting. The performance tells you that the markets were not happy because all your domestic oriented sectors were the ones which have underperformed. From energy to oil and gas, real estate, PSU banks and FMCG, down to the tune of almost around 11 to 21% from the previous budget to now. What has outperformed? It's your export-oriented sectors, Nifty IT, Nifty Pharma, up to the tune of almost around 3 to 6%. So you clearly know that it's the domestic policies which have not really been working for Indian
India Inc., it's the export-oriented ones. And similar is the trend if you see in terms of gainers and losers. From a TV slab to Wipro, Bajaj Finance, Holdings and a Bharti Airtel, gains to the tune of almost 12 to 26% that did come in. What was losing? Adani Green did lose out. Yes, there was a Hindenburg impact coming in there. But you had a BHEL, IndusInd Bank, Tata Motors, JSW Energy, all in the range of around 30 to 36%, which were under pressure. Let's look at the broader markets. If you see Nifty 500, you have 366 stocks that have actually given negative returns since the previous budget out of Nifty 500. So that tells you the quantum of underperformance that has come in there. And if you talk about the mid-cap companies, BSE actually is outperformed with gains of nearly 2.3 times. But Lloyds Metal, Paytm, Coforge, Dixon, these are the ones which were losing to the tune of around 30 to 75%, gaining, I beg your pardon, to the tune of 30 to 75%. Whereas names like Cochin Shipyard, Vodafone Idea, MRPL, SJVN, Exide Industries, all down in the range of around 35 to 45%. Small caps, you have Amber Enterprises, Piramal, KFin Tech, Aster DM, MCX, all up in the range of 40 to 50%. Whereas if you see in terms of the losers, if you can have that slide, there you go. Honasa, Sterling, Chennai Petro, Tanla, Jupiter, these were the names which were losing out. So that's in terms of the performance, but let's also look at a few of the other reasons which impacted the markets. You had the largest ever FI sell-off that came in to the tune of almost around 2.7 lakh crore. Secondly, you have analysts who have gone ahead and cut estimates as well with regards to earnings for FY25 and 26. Apart from that, if you talk about the geopolitical concerns, they have been looming on the domestic markets. And very lastly, if you see in terms of the election year, that has seen lower government spends.
Okay, first visuals coming in from Parliament. And the customary noise around it as well. Remember, it's also the start of the budget session. Honorable Speaker in the chair, let's listen in.
Government's efforts to A. Accelerate growth, B. Secure inclusive development, C. Invigorate private sector investments, D. Uplift household sentiments, and E. Enhance spending power of India's rising middle class. Together, we embark on a journey to unlock our nation's tremendous potential for greater prosperity and global positioning under the leadership of Honorable Prime Minister Shri Narendra Modi. As we complete the first quarter of the 21st century, continuing geopolitical headwinds suggest lower global economic growth over the medium term. However, our aspiration for a Vikasit Bharat inspires us, and the transformative work we have done during our government's first 2 terms guides us to march forward resolutely. Our economy is the fastest growing among all major economies. Our Our development track record for the past 10 years and structural reforms have drawn global attention. Confidence in India's capability and potential has only grown in this period. We see the next 5 years as a unique opportunity to realize Sabka Vikas, stimulating balanced growth of all regions. The great Telugu poet and playwright Gurujada Apparao had said, Deshamante matti kadoy, Deshamante manushuloy, meaning a country is not just its soil, a country is its people. In line with this, for us, Vikasit Bharat encompasses zero poverty, 100% quality good school education, access to high quality, affordable and comprehensive health care, 100% skilled labor with meaningful employment, 70% women in economic activities, and farmers making our country the food basket of the world. In this budget, the proposed development measures span 10 broad areas focusing on Garib, youth, Annadata and Nari, spurring agricultural growth and productivity, building rural prosperity and resilience, taking everyone together on an inclusive growth path, boosting manufacturing and furthering Make in India, supporting MSMEs, enabling employment-led development, investing in people, economy and innovation, securing energy supplies, promoting exports and nurturing innovation. For this journey of development, our four powerful engines are agriculture, MSME, investments and exports. The fuel, our reforms, our guiding spirit, inclusivity, and the destination, Vikasit Bharat. This budget aims to initiate transformative reforms across 6 domains. During the first 5 years, these will augment our growth potential and global competitiveness. The domains are taxation, power sector, urban development, mining, financial sector, and regulatory reforms. Agriculture as the first engine. Now I move to specific proposals, beginning with agriculture as the first engine. Prime Minister Dhan Dhanya Krishi Yojana, developing agri-districts program. Motivated by the success of the aspirational district program, our government will undertake a Prime Minister Dhan Dhanya Krishi Yojana in partnership with states. Through the convergence of existing schemes and specialized measures, the program will cover 100 districts with low productivity, moderate crop intensity, and below average credit parameters. It aims to 1. Enhance agricultural productivity, 2. Adopt crop diversification and sustainable agricultural practices, 3. Augment post-harvest storage at the panchayat and block level, 4. Improve irrigation facilities, and 5. Facilitate availability of long-term and short-term credit. This program is likely to help 1.7 crore farmers. Building rural prosperity and resilience. A comprehensive multi-sectoral rural prosperity and resilience program will be launched in partnership with the states. This will address underemployment in agriculture through skilling, investment, technology, and invigorating the rural economy. The goal is to generate ample opportunities in rural areas so that migration is an option but not a necessity. The program will focus on rural women, young farmers, rural youth, marginal and small farmers, and landless families. The details are in Annexure A. Domestic best practices will be incorporated, and appropriate technical and financial assistance will be sought from multilateral development banks. In phase 1, 100 developing agri-districts will be covered. Atmanirbharta in pulses. Our government is implementing the National Mission for Edible Oil Seed for achieving Atmanirbharta in edible oils. Our farmers have the capability to grow enough for our needs and more. 10 years ago, we made concerted efforts and succeeded in achieving near self-sufficiency in pulses. Farmers responded to the need by increasing the cultivated area by 50%, and government arranged for procurement and remunerative prices. Since then, with rising incomes and better affordability, our consumption of pulses has increased significantly. Our government will now launch a 6-year mission for Atmanirbharta in pulses with a special focus on Tuar, Urad and Masoor. Details are in Annexure B. Central agencies such as NAFED and NCCF will be ready to procure these 3 pulses as much as offered during the next 4 years from farmers who register with these agencies and enter into agreements. Comprehensive program for vegetables and fruits. It is encouraging that our people are increasingly becoming aware of their nutritional needs. It is a sign of a society becoming healthier. With rising income levels, the consumption of vegetables, fruits, and Shri Anna is increasing significantly. A comprehensive program to promote production, efficient supplies, processing, and remunerative prices for farmers will be launched in partnership with the states. Appropriate institutional mechanisms for implementation and participation of farmer producer organizations and cooperatives will be set up. Makhana board in Bihar. For this, there is a special opportunity for the people of Bihar. A Makhana board will be established in the state to improve production, processing, value addition, and marketing of Makhana. The people engaged in these activities will be organized into FPOs. The board will provide hand-holding and training support to Makhana farmers and will also work to ensure they receive the benefits of all relevant government schemes. A national mission on high-yielding seeds will be launched, aimed at 1. Strengthening research ecosystem, 2. Targeted development and propagation of seeds with high yield, pest resistance, and climate resilience, and 3. Commercial availability of more than 100 seed varieties released since July 2024. India ranks second largest globally in fish production and aquaculture. Seafood exports are valued at 60,000 crore rupees. To unlock the untapped potential of the marine sector, our government will bring in an enabling framework for sustainable harnessing of fisheries from Indian Exclusive Economic Zone and high seas, with a special focus on the Andaman and Nicobar and Lakshadweep Islands. For the benefit of lakhs of cotton growing farmers, I am pleased to announce a mission for cotton productivity. This 5-year mission will facilitate significant improvements in productivity and sustainability of cotton farming and promote extra long staple cotton varieties. The best of science and technology support will be provided to farmers. Aligned with our integrated 5F vision for the textile sector, this will help in increasing incomes of the farmers and ensure a steady supply of quality cotton for rejuvenating India's traditional textile sector. Kisan credit cards facilitate short-term loans for 7.7 crore farmers, fishermen, and dairy farmers. The loan limit under modified interest subvention scheme will be enhanced from 3 lakh rupees to 5 lakh rupees for loans taken through the KCC. For Atmanirbharta in urea production, our government had reopened 3 dormant urea plants in the eastern region. To further augment urea supply, a plant with annual capacity of 12.7 lakh metric tons will be set up at Namrup in Assam. India Post, with 1.5 lakh rural post offices, complemented by the India Post Payment Bank and a vast network of 2.4 lakh Dak Sevaks, will be repositioned to act as a catalyst for the rural economy. Details are at Annexure C. India Post will also be transformed as a large public logistics organization. This will meet the rising needs of Vishwakarmas, new entrepreneurs, women, self-help groups, MSMEs, and the large business organizations. Our government will provide support to NCDC for its lending operations for the cooperative sector. MSMEs as the second engine. Now I move to MSMEs as the second engine, which encompasses manufacturing and services with a focus on MSMEs numbering 5.7 crores. Currently, over 1 crore registered MSMEs, employing 7.5 crore people and generating 36% of our manufacturing, have come together to position India as a global manufacturing hub. With their quality products, these MSMEs are responsible for 45% of our exports. To help them achieve higher efficiencies of scale, technological upgradation, and better access to capital, the investment and turnover limits for classification of all MSMEs will be enhanced to 2.5 and 2 times respectively. This will give them the confidence to grow and generate employment for our youth. The details are given in Annexure D. To improve access to credit, the credit guarantee cover will be enhanced. First, for micro and small enterprises from 5 crore to 10 crore rupees, leading to additional credit of 1.5 lakh crores in the next 5 years. Second, for startups from 10 crore rupees to 20 crore rupees, with the guarantee fee being moderated to 1% for loans in 27 focus sectors which are important for Atmanirbhar Bharat. And for well-run exporter MSMEs, for term loans up to 20 crore rupees. Also for the micro enterprises, we will introduce customized credit cards with a 5 lakh rupee limit for micro enterprises registered on Udyam portal. In the first year, 10 lakh such cards will be issued. Fund of funds for startups. The Alternate Investment Fund, AIFs, for startups have received commitments of more than 91,000 crores rupees. These are supported by the fund of funds set up with the Government of India's contribution of 10,000 crore rupees. Now, a new fund of funds with expanded scope and a fresh contribution of another 10,000 crore rupees will be set up. A new scheme will be launched for 5 lakh women, scheduled castes and scheduled tribes, first-time entrepreneurs. This will provide term loans up to 2 crore rupees during the next 5 years. The scheme will incorporate lessons from the successful Stand Up India scheme. Online capacity building for entrepreneurship and managerial skills will also be organized. Measures for labor-intensive sectors. To promote employment and entrepreneurship opportunities in labor-intensive sectors, our government will undertake specific policy and facilitation measures to enhance the productivity, quality, and competitiveness of India's footwear and leather sector. A focused product scheme will be implemented. The scheme will support design capacity, component manufacturing, and machinery required for production of non-leather quality footwear, besides the support for leather footwear and products. The scheme is expected to facilitate employment for 22 lakh persons, generate over 4 lakh crore rupees, and exports of over 1.1 lakh crore rupees. Measures for the toys sector. Building on the National Action Plan for Toys, we will implement a scheme to make India a global hub for toys. The scheme will focus on development of clusters, skills, and a manufacturing ecosystem that will create high quality, unique, innovative, and sustainable toys that will represent the Made in India brand. Support for food processing. In line with our commitment towards Purvodaya, we will establish a National Institute of Food Technology, Entrepreneurship, and Management in Bihar. The institute will provide a strong fillip to food processing activities in the entire eastern region. This will result in 1. Enhanced income for the farmers through value addition to their produce, and 2. Skilling entrepreneurship and employment opportunities for the youth. Manufacturing mission, furthering Make in India. Our government will set up a national manufacturing mission covering small, medium, and large industries for furthering Make in India by providing policy support, execution roadmaps, governance, and monitoring framework for central ministries and states. Details are in Annexure E. Given our commitment to climate-friendly development, the mission will also support clean tech manufacturing. This will aim to improve domestic value addition and build our ecosystem for solar PV cells, EV batteries, motors and controllers, electrolyzers, wind turbines, very high voltage transmission equipment, and grid scale batteries. Investment as the third engine. Now I move to investment as the third engine, which encompasses investing in people, investing in the economy, and investing in innovation. Investing in people. Saksham Anganwadi and Poshan 2.0. Saksham Anganwadi and Poshan 2.0 program provides nutritional support to more than 8 crore children, 1 crore pregnant women and lactating mothers all over the country, and about 20 lakh adolescent girls in aspirational districts and the Northeast region. The cost norms for these nutritional support will be enhanced appropriately. Atal Tinkering Labs. 50,000 Atal Tinkering Labs will be set up in government schools in the next 5 years to cultivate the spirit of curiosity and innovation and foster a scientific temper among young minds. Broadband connectivity to government secondary schools and PHCs. Broadband connectivity will be provided to all government secondary schools and primary health centers in rural areas under the BharatNet project. Bharatiya Bhasha Pustak Scheme. We propose to implement a Bharatiya Bhasha Pustak scheme to provide digital form Indian language books for schools and for higher education. This aims to help students understand their subjects better and in their language. National Centers of Excellence for Skilling. Building on the initiative announced in the July 24 budget, 5 National Centers of Excellence for Skilling will be set up with global expertise and partnerships to equip our youth with the skills required for Make for India, Make for the World manufacturing. The partnership will cover curriculum design, training of trainers, and a skills certification framework and periodic reviews. Expansion of capacity in IITs. Total number of students in 23 IITs has increased 100% from 65,000 to 1.35 lakh in the past 10 years. Additional infrastructure will be created in the 5 IITs started after 2014 to facilitate education for 6,500 more students. Hostel and other infrastructure capacity at IIT Patna will also be expanded. Center of Excellence. Center of Excellence in AI for Education. I had announced 3 centers of excellence in artificial intelligence for agriculture, health, and sustainable cities in 2023. Now a center of excellence in artificial intelligence for education will be set up with a total outlay of 500 crores. Expansion of medical education. Our government has added almost 1.1 lakh undergraduate and postgraduate medical education seats in 10 years, an increase of 130%. In the next year, 10,000 additional seats will be added in medical colleges and hospitals towards the goal of adding 75,000 seats in the next 5 years. Daycare cancer centers in all district hospitals. Our government will facilitate setting up of daycare cancer centers in all district hospitals in the next 3 years. 200 centers will be established in 25-26 itself. Strengthening urban livelihoods. Our government has been giving priority to assisting urban poor and vulnerable groups. A scheme for socio-economic upliftment of urban workers will be implemented to help them improve their incomes, have sustainable livelihoods, and a better quality of life. PM Swanidhi scheme has benefited more than 68 lakh street vendors, giving them respite from high-interest informal sector loans. Building on this success, the scheme will be revamped with enhanced loans from banks, UPI-linked credit cards with 30,000 rupees limit, and capacity building support. Social Security scheme for welfare of online platform workers. Gig workers of online platforms provide great dynamism to the new age services economy. Recognizing their contribution, our government will arrange for their identity cards and registration on the e-Shram portal. They will be provided healthcare under PM Jan Arogya Yojana. This measure is likely to assist nearly 1 crore gig workers. Investing in the economy. Public-private partnership in infrastructure. Each infrastructure-related ministry will come up with a 3-year pipeline of projects that can be implemented in PPP mode. States will also be encouraged to do so and can seek support from the India Infrastructure Project Development Fund, which is a scheme to prepare PPP proposals. Support to states for infrastructure. An outlay of 1.5 lakh crore is proposed for the 50-year interest-free loans to states for capital expenditure and incentives for reforms. Building on the success of the first asset monetization plan announced in 2021, the second plan for 2025 to 30 will be launched to plow back capital of 10 lakh crore in new projects. Regulatory and fiscal measures will be fine-tuned to support the plan. Jal Jeevan Mission. Since 2019, 15 crore households representing 80% of India's rural population have been provided access to portable tap water connections. To achieve 100% coverage, I am pleased to announce the extension of this mission until 2028 with an enhanced total outlay. The mission's focus will be on the quality of infrastructure and O&M of rural piped water supply schemes through Jan Bhagidari. A separate MOU or separate MOUs will be signed with the states and union territories to ensure sustainability and citizen-centric water services delivery. Urban sector reforms. Building on the July budget proposals, urban sector reforms related to governance, municipal services, urban land and planning will be incentivized. Urban Challenge Fund. The government will set up an urban challenge fund of 1 lakh crore rupees to implement the proposals for cities as growth hubs, creative redevelopment of cities, and for water and sanitation purposes announced in the July budget. This fund will finance up to 25% of the cost of bankable projects, with a stipulation that at least 50% of the cost is funded from bonds, bank loans, and PPPs. An allocation of 10,000 crore is proposed in 2025-26. Power sector reforms. We will incentivize electricity distribution reforms and augmentation of intra-state transmission capacity by states. This will improve financial health and capacity of electricity companies. Additional borrowing of 0.5% of GSDP will be allowed to states contingent on these reforms. Nuclear energy mission for Vikasit Bharat. Development of at least 100 gigawatt of nuclear energy by 2047 is essential for our energy transition efforts. For an active partnership with the private sector towards this goal, amendments to the Atomic Energy Act and the Civil Liability for Nuclear Damage Act will be taken up. A nuclear energy mission for research and development of small modular reactors with an outlay of 20,000 crore will be set up. At least 5 indigenously developed small modular reactors will be operationalized by 2033. Shipbuilding. The shipbuilding financial assistance policy will be revamped to address cost disadvantages. This will also include credit notes for shipbreaking in Indian yards to promote the circular economy. Large ships above a specified size will be included in the infrastructure harmonized master list. Shipbuilding clusters will be facilitated to increase the range, categories, and capacity of ships. This will include additional infrastructure, facilities, skilling, and technology to develop the entire ecosystem. Maritime Development Fund. For long-term financing for the maritime industry, a Maritime Development Fund with a corpus of 25,000 crore rupees will be set up. This will be for distributed support and promoting competition. This will have up to 49% contribution by the government, and the balance will be mobilized from ports and from private sector. UDAN regional connectivity schemes. UDAN has enabled 1.5 crore middle-class people to meet their aspirations for speedier travel. The scheme has connected 88 airports, and operationalized 619 routes. Inspired by that success, a modified UDAN scheme will be launched to enhance regional connectivity to 120 new destinations and carry 4 crore passengers in the next 10 years. 4 crore additional passengers in the next 10 years. The scheme will also support helipads and smaller airports in hilly, aspirational and northeast regional districts. Greenfield airports will be facilitated in Bihar to meet the future needs of the state. These will be in addition to the expansion of the capacity of Patna Airport and a brownfield airport in Beta. Western Kosi Canal project in Mithilanchal. Financial support will be provided for the Western Kosi Canal ERM project, benefiting a large number of farmers, cultivating over 50,000 hectares of land in the Mithilanchal region of Bihar. Mining sector reforms. Mining sector reforms, including those for minor minerals, will be encouraged through sharing of best practices and institutions of a state mining index. A policy for recovery of critical minerals from tailings will be brought out. Under the special window for affordable and mid-income housing, SWAMI, 50,000 dwelling units in stressed housing projects have been completed and keys handed over to home buyers. Another 40,000 units will be completed in 2025, further helping middle-class families who are paying EMIs on loans taken for apartments while also paying rent for their current dwellings. Building on this success, SWAMI Fund 2 will be established as a blended finance facility with contribution from the government, banks and private investors. This fund of 15,000 crore rupees will aim for expeditious completion of another 1 lakh units. PM Gati Shakti data for private sector. For furthering PPPs and assisting the private sector in project planning, access to relevant data and maps from the PM Gati Shakti portal will be provided. Tourism for employment-led growth. Top 50 tourist destination sites in the country will be developed in partnership with states through a challenge mode. Land for building key infrastructure will have to be provided by the states. Hotels in these destinations will be included in the infrastructure harmonized list. The following measures will be taken for facilitating employment-led growth. Organizing intensive skill development programs for our youth, including in institutes of hospitality management. Providing mudra loans for homestays. Improving ease of travel and connectivity to tourist destinations. Providing performance-linked incentives to states for effective destination management, including tourist amenities, cleanliness, and marketing efforts. And introducing streamlined e-visa facilities along with visa fee waivers for certain tourist groups. Continuing with the emphasis on places of spiritual and religious significance, in the July budget, there will be a special focus on destinations related to the life and times of Lord Buddha. Medical tourism and heal in India. Medical tourism and heal in India will be promoted in partnership with the private sector, along with capacity building and easier visa norms. Investing in innovation. To implement private sector-driven research, development, and innovation initiatives announced in the July budget, I am now allocating 20,000 crore rupees for this purpose. A deep tech fund of funds will also be explored to catalyze the next generation startups as a part of this initiative. In the next 5 years, under the PM Research Fellowship Scheme, we will provide 10,000 fellowships for technological research in IITs and IISc with enhanced financial support. The second gene bank with 10 lakh germplasm lines will be set up for future food and nutritional security. This will provide conservation support to both public and private sectors for genetic resources. We will start a national geospatial mission to develop foundational geospatial infrastructure and data. Using PM Gati Shakti, this mission will facilitate modernization of land records, urban planning, and design of infrastructure projects. A Gyan Bharatam mission for survey, documentation, and conservation of our manuscript heritage with academic institutions, museums, libraries, and private collectors will be undertaken to cover more than 1 crore manuscripts. We will set up a national digital repository of Indian knowledge systems for knowledge sharing. Now I move to exports as the fourth engine. We will set up an export promotion mission with sectoral and ministerial targets driven jointly by the Ministries of Commerce, MSME, and Finance. It will facilitate easy access to export credit, cross-border factoring support, support to MSMEs to tackle non-tariff measures in overseas markets. A digital public infrastructure, Bharat Trade Net, for international trade will be set up as a unified platform for trade documentation and financing solutions. This will complement the Unified Logistics Interface platform. The BTN will be aligned with international practices. Support will be provided to develop domestic manufacturing capacities for our economy's integration with global supply chains. Sectors will be identified based on objective criteria. Facilitation groups with participation of senior officers and industry representatives will be formed for select products and supply chains. Through this, there are huge opportunities related to Industry 4.0, which needs high skills and talent. Our youth have both. Our government will support the domestic electronic equipment industry to leverage this opportunity for the benefit of our youth. A national framework will be formulated as guidance to states for promoting global capability centers in emerging Tier 2 cities. This will suggest measures for enhancing availability of talent and infrastructure, building bylaw reforms, and mechanisms for collaboration with industry. Our government will facilitate upgradation of infrastructure and warehousing for air cargo, including high-value perishable horticultural produce. Cargo screening and customs protocol will be streamlined and made user-friendly. Reforms as the fuel. Over the past 10 years, our government has implemented several reforms for convenience of taxpayers, such as faceless assessment, 2, taxpayer charter, 3, faster returns, 4, almost 99% returns being on self-assessment, and 5, Vivad Se Vishwas scheme. Continuing these efforts, I reaffirm the commitment of the tax department to trust first, scrutinize later. I also propose to introduce the new income tax bill next week. I will detail the indirect tax reforms and changes in direct taxes in Part B. Financial sector reforms. The FDI limit for the insurance sector will be raised from 74 to 100%. This enhanced limit will be available for those companies which invest the entire premium in India. The current guardrails and conditionalities associated with foreign investment will be reviewed and simplified. The services of India Post Payment Bank will be deepened and expanded in rural areas. NABFID will set up a partial credit enhancement facility for corporate bonds for infrastructure. Public sector banks will develop Grameen Credit Score framework to serve the credit needs of SHG members and people in rural areas. A forum for regulatory coordination and development of pension products will be set up. To implement the earlier announcement on simplifying the KYC processes, the revamped Central KYC Registry will be rolled out in 2025. We will also implement a streamlined system for periodic updating. Requirements and procedures for speedy approval of company mergers will be rationalized. The scope for fast-track mergers will also be widened and the process made simpler. As proposed in the interim budget, we signed bilateral investment treaties with 2 countries in 2024 to encourage sustained foreign investment, and in the spirit of First Develop India, the current model BIT will be revamped and made more investor-friendly. In the last 10 years, in several aspects, including financial and non-financial, our government has demonstrated a steadfast commitment to ease of doing business. We are determined to ensure that our regulations must keep up with technological innovations and global policy developments. A light-touch regulatory framework based on principles and trust will unleash productivity and employment. Through this framework, we will update regulations that were made under old laws. To develop this modern, flexible, people-friendly, and trust-based regulatory framework appropriate for the 21st century, I propose 4 specific measures. A high-level committee for regulatory reforms will be set up for a review of all non-financial sector regulations, certifications, licenses, and permissions. The committee will be expected to make recommendations within a year. The objective is to strengthen trust-based economic governance and take transformational measures to enhance ease of doing business, especially in matters of inspection and compliances. States will be encouraged to join in this endeavor. An investment friendliness index of states will be launched in 2025 to further the spirit of competitive, cooperative federalism. Under the Financial Stability and Development Council, a mechanism will be set up to evaluate impact of the current financial regulations and subsidiary instructions. It will also formulate a framework to enhance their responsiveness and development of the financial sector. In the Jan Vishwas Act 2023, more than 180 legal provisions were decriminalized. Our government will now bring up the Jan Vishwas Bill 2.0 to decriminalize more than 100 provisions in various laws. I now move to fiscal policy. In the July budget, I had committed to staying the course for fiscal consolidation. Our endeavor will be to keep the fiscal deficit each year such that central government debt remains on a declining path as a percentage of the GDP. The roadmap for the next 6 years has been detailed in the FRBM statement. Revised estimates for 2024-25. The revised estimate of the total receipts other than borrowings is 31.47 lakh crore rupees, of which the net tax receipts are 25.57 lakh crore rupees. The revised estimate of the total expenditure is 47.16 lakh crore rupees, of which the capital expenditure is about 10.18 lakh crore rupees. The revised estimate of the fiscal deficit is 4.8% of the GDP. Budget estimates for 25-26. Coming to 25-26, the total receipts other than borrowings and total expenditure are estimated at 34.96 lakh crore rupees and 50.65 lakh crore rupees respectively. The net tax receipts are estimated at 28.37 lakh crore rupees. The fiscal deficit is estimated to be 4.4% of GDP. To finance the fiscal deficit, the net market borrowings from dated securities are estimated at 11.54 lakh crore. The balance financing is expected to come from small savings and other sources. The gross market borrowings are estimated at 14.82 lakh crore rupees. I will now move to Part B. Indirect taxes. My proposals relating to customs aim to rationalize tariff structure and address duty inversion. These will also support domestic manufacturing and value addition, promote exports, facilitate trade, and provide relief to common people. Rationalization of customs tariff structure for industrial goods. As a part of comprehensive review of customs rate structure announced in July 2024 budget, I propose to 1. Remove 7 tariff rates. This is over and above the 7 tariff rates removed in 23-24 budget. After this, there will be only 8 remaining tariff rates, including 0 rate. 2. Apply appropriate cess to broadly maintain effective duty incidence, except on a few items where such incidence will reduce marginally. 3. Levy not more than 1 cess or surcharge. Therefore, I propose to exempt social welfare surcharge on 82 tariff lines that are subject to a cess. I shall now take up sector-specific proposals. To provide relief to patients, particularly those suffering from cancer, rare diseases, and other severe chronic diseases, I propose to add 36 life-saving drugs and medicines to the list of medicines fully exempted from basic custom duty. I also propose to add 6 life-saving medicines to the list attracting concessional custom duty of 5%. Full exemption and concessional duty will also respectively apply on the bulk drugs for manufacture of the above. Specified drugs and medicines under patient assistance programs run by the pharmaceutical companies are fully exempt from BCD, provided the medicines are supplied free of cost to the patients. I propose to add 37 more medicines along with 13 new patient assistance programs. Support to domestic manufacturing and value addition. Critical minerals. In the July 2024 budget, I had fully exempted BCD on 25 critical minerals that are not domestically available. I had also reduced BCD of 2 other such minerals to provide a major fillip to their processing, especially by MSMEs. Now, I propose to fully exempt cobalt powder and waste, the scrap of lithium-ion battery, lead, zinc, and 12 more critical minerals. This will help secure the availability for manufacturing in India and promote more jobs for our youth. To promote domestic production of technical textile products such as agro-textiles, medical textiles, and geotextiles at competitive prices, I propose to add 2 more types of shuttle-less looms to the list of fully exempted textile machinery. I also propose to revise the BCD rate on knitted fabrics covered by 9 tariff lines from 10 or 20 to 20% or 115 rupees per kg, whichever is higher. Electronic goods. In line with our Make in India policy and to rectify inverted duty structure, I propose to increase the BCD on interactive flat panel display from 10% to 20% and reduce the BCD to 5% on open cell and other components. In 23-24 budget, for the manufacture of open cells of LCD, LED TVs, I had reduced the BCD on parts of open cells from 5% to 2.5%. To further boost the manufacture of such open cells, the BCD on these parts will now stand exempted. Lithium-ion battery. To the list of exempted capital goods, I propose to add 35 additional capital goods for EV battery manufacturing and 28 additional capital goods for mobile phone battery manufacturing. This will boost domestic manufacture of lithium-ion batteries, both for mobile phones and for electric vehicles. Shipping sector. Considering that shipbuilding has a long gestation period, I propose to continue the exemption of BCD on raw materials, components, consumables, or parts for the manufacture of ships for another 10 years. I also propose the same dispensation for shipbreaking to make it more competitive. Telecommunication. To prevent classification disputes, I propose to reduce the BCD from 20% to 10% on carrier-grade Ethernet switches to make it at par with non-carrier-grade Ethernet switches. Export promotion. To facilitate exports of handicrafts, I propose to extend the time period for export from 6 months to 1 year, further extendable by another 3 months if required. I also propose to add 9 items to the list of duty-free inputs. Leather sector. I propose to fully exempt BCD on wet blue leather to facilitate imports for domestic value addition and employment. I also propose to exempt crust leather from 20% export duty to facilitate exports by small tanners. Marine products. To enhance India's competitiveness in the global seafood market, I propose to reduce BCD from 30% to 5% on frozen fish paste, surimi, for manufacture and export of its analog products. I also propose to reduce BCD from 15% to 5% on fish hydrolysates for manufacture of fish and shrimp feed. In July 2024 budget, to promote development of domestic MROs for aircraft and ships, I had extended the time limit for export of foreign origin goods that were imported for repairs from 6 months to 1 year and further extendable by 1 year. I now propose to extend the same dispensation for railway goods. Time limit for provisional assessment. Presently, the Customs Act 1962 does not provide any time limit to finalize provisional assessments, leading to uncertainty and cost to trade. As a measure of promoting ease of doing business, I propose to fix a time limit of 2 years, extendable by a year, for finalizing the provisional assessment. I propose to introduce a new provision that will enable importers or exporters, after clearance of goods, to voluntarily declare material facts and pay duty with interest but without penalty. This will incentivize voluntary compliance. However, this will not apply in cases where department has already initiated audit or investigation proceedings. For industry to better plan their imports, I propose to extend the time limit for the end use of imported inputs in the relevant rules from 6 months to 1 year. This will provide operational flexibility in view of cost and uncertainty of supply. Further, such importers will now have to file only quarterly statements instead of a monthly statement. I now come to my direct tax proposals. In Part A, I have briefly underlined taxation reforms as one of key reforms to realize our vision of Vikasit Bharat. In respect of criminal law, our government had earlier ushered in Bharatiya Nyaya Sanhita, replacing Bharatiya Danda Sanhita. I am happy to inform this august House and the country that for new income tax bill will carry forward the same spirit of Nyaya in its drafting as well. The new bill will be clear and direct in text, with close to half of the present law in terms of both chapters and words. It will be simple to understand for taxpayers and tax administrators, leading to tax certainty and reduced litigation. Reforms, however, are not a destination. They are means to achieve good governance for our people and economy. Providing good governance primarily involves being responsive. The Tirukkural captures this in verse 542, which reads, "Vaanokki vaazhum ulagallam, mannavan kol nokki vaazhum kudi," meaning, just as the living beings live expecting rains, citizens live expecting good governance. Our government is committed to keeping an ear to the ground and a finger on the pulse and responding while balancing our national building efforts. The following measures will detail just how our government will, under the guidance of PM Modi, has taken steps to understand and address. I repeat that sentence, sir. The following measures will detail just how our government, under the guidance of PM Modi, has taken steps to understand and address the needs voiced by our citizens. My tax proposals are guided by this spirit. The objectives of my proposals are as follows. Personal income tax reforms with special focus on middle class. Rationalization of TDS and TCS for easing difficulties. Encouraging voluntary compliance. Reducing compliance burden. Ease of doing business. Employment and investment. I will come to my proposal on personal income tax towards the end. TDS and TCS Rationalization for easing difficulties. I propose to rationalize tax deduction at source, TDS, by reducing the number of rates and thresholds above which TDS is deducted. Further, threshold amounts for tax deduction will be increased for better clarity and uniformity. The limit for tax deduction on interest for senior citizens is being doubled from the present 50,000 rupees to 1 lakh rupees. Similarly, the annual limit of 2.40 lakh rupees for TDS on rent is being increased to 6 lakh rupees. This will reduce the number of transactions liable to TDS, thus benefiting small taxpayers receiving small payments. The threshold to collect tax at source, the TCS, on remittances under RBI's liberalized remittance scheme, the LRS, is proposed to be increased from 7 lakh to 10 lakhs. I also propose to remove TCS on remittances for education purposes, where such remittances is out of a loan taken from a specified financial institution. Both TDS and TCS are being applied on any transaction related to sale of goods. To prevent such compliance difficulties, I propose to omit the TCS. I also propose that the provisions of the higher TDS deduction will now apply only in non-PAN cases. In July 2024, the delay for payment of TDS up to the due date of filing statement was decriminalized. I propose to provide the same relaxation to TCS provisions as well. The government under the leadership of Prime Minister Modi believes in Sabka Saath, Sabka Vikas, Sabka Vishwas and Sabka Prayas. In line with this, we brought in updated return facility in 2022 for voluntary compliance by taxpayers who had omitted to report their correct income. Our trust in taxpayers was proved right. Nearly 90 lakh taxpayers voluntarily updated their incomes by paying additional tax. Taking this trust further, I now propose to extend the time limit to file updated returns for any assessment year from the current limit of 2 years to 4 years. I propose to reduce the compliance burden for small charitable trusts and institutions by increasing their period of registration from 5 years to 10 years. It is also proposed that disproportionate consequences do not arise for minor defaults, such as incomplete applications filed by charitable entities. Presently, taxpayers can claim the annual value of self-occupied properties as nil only on the fulfillment of certain conditions. Considering the difficulties faced by taxpayers, it is proposed to allow the benefit of 2 such self-occupied properties without any condition. To streamline the process of transfer pricing and to provide an alternative to yearly examination, I propose to introduce a scheme for determining arm's length price of international transaction for a block period of 3 years. This will be in line with global best practices. With a view to reduce litigation and provide certainty in international taxation, the scope of safe harbor rules is being expanded. A number of senior and very senior citizens have very old national savings schemes accounts. As interest is no longer payable on such accounts, I propose to exempt withdrawals made from NSS by individuals on or after 29th August 2024. I am also proposing to allow similar treatment to NPS Vatsalya accounts as is available to normal NPS accounts subject to overall limits. In my speech in July 2024, I had promised that all processes, including giving effect to appellate orders, shall be digitalized and made paperless over the next 2 years. So I'm happy to announce that digitalization is being made operational now. In July 2024, we brought in the Vivad Se Vishwas scheme to resolve income tax disputes pending in appeal. The scheme has received a great response, with nearly 33,000 taxpayers having availed of the scheme to settle their disputes. I have a few proposals to promote investment and employment. It is proposed to provide a presumptive taxation regime for non-residents who provide services to a resident company that is establishing or operating an electronics manufacturing facility. I further propose to introduce a safe harbor for tax certainty for non-residents who store components for supply to specified electronics manufacturing units. Presently, the tonnage tax scheme is available only to sea-going ships. The benefits of existing tonnage tax scheme are proposed to be extended to inland vessels registered under the Indian Vessels Act 2021 to promote inland water transport in the country. Extension for incorporation of startups. We continue to support the Indian startup ecosystem. I propose to extend the period of incorporation by 5 years to allow the benefit available to startups which are incorporated before 1/4/2030. In order to attract and promote additional activities in the IFSC, I am inter alia proposing specific benefits to ship leasing units, insurance offices, and treasury centers of global companies which are set up in IFSC. Further, to claim benefits, the cutoff date for commencement in IFSC has also been extended by 5 years to 31/3/2030. Category 1 and Category 2 AIFs are undertaking investments in infrastructure and other such sectors. I propose to provide certainty of taxation to these entities on the gains from securities, to promote funding from sovereign wealth funds and pension funds to the infrastructure sector. I propose to extend the date of making an investment by 5 more years up to 31st March 2030. Personal income tax reforms with special focus on middle class. Democracy, demography, and demand are the key support pillars in our journey towards Vikasit Bharat. The middle class provides strength for India's growth. This government, under the leadership of Prime Minister Modi, has always believed in the admirable energy and ability of the middle class in nation building. In recognition of their contribution, we have periodically reduced their tax burden. Right after 2014, the nil tax slab was raised to 2.5 lakhs of rupees, which was further raised to 5 lakh rupees in 2019 and to 7 lakh rupees in 2023. This is reflective of our government's trust on the middle class taxpayers. I am now happy to announce that there will be no income tax payable up to income of 12 lakh rupees. So, average income of 1 lakh per month, other than the special rate income such as capital gains, under the new regime. This limit will be 12.75 lakh for salaried taxpayers due to the standard deduction of 75,000. Slabs and rates are being changed across the board to benefit all taxpayers. The new structure will substantially reduce the taxes of the middle class and leave more money in their hands, boosting household consumption, savings, and investment. In the new tax regime, I propose to revise tax rate structures as follows: 0 to 4 lakh rupees nil, 4.8 lakh rupees to 4 to 8 lakh rupees 5%, 8 to 12 lakh rupees 10%, 12 to 16 lakh rupees 15%, 16 to 20 lakh rupees 20%, 20 to 24 lakh rupees 25%, and above 24 lakh rupees 30%. To taxpayers up to 12 lakh of normal income other than special rate income such as capital gains. I read that again. To taxpayers up to 12 lakh of income other than special rate income such as capital gains, tax rebate is being provided in addition to the benefit due to slab rate reduction in such a manner that there is no tax payable by them. The total tax benefit of slab rate changes and rebate at different income levels can be illustrated with a few examples. A taxpayer in the new regime with an income of 12 lakh rupees will get a benefit of 80,000 rupees in tax, which is 100% of tax payable as per the existing rates. A person having income of 18 lakh rupees will get a benefit of 70,000 rupees in tax, that is 30% of tax payable as per existing rates. A person with an income of 25 lakh gets a benefit of 1,10,000 rupees, that is 25% of his tax payable as per existing rates. Details of my tax proposals are given in the annexure. As a result of these proposals, Honorable Speaker, sir, revenue of about 1 lakh crore in direct taxes and 2,600 crores in indirect taxes will be foregone. Mr. Speaker, sir, with this, I commend the budget to this august House.
Item number
Finance Minister Nirmala Sitharaman leaving the best for the last. You heard the cheers in Parliament. You've probably not heard the cheers in our newsroom and across our PCR. Everyone whooping because this, as promised, is a budget for the middle class, for the salaried income taxpayer. There is now zero tax up to 12 lakh rupees. New slabs have been put into place as well.
1 lakh rupees.
Continue.
Okay, all right. So let's get those details in first. Pranav Saita, I think this is the moment which everyone was waiting for. We expected it. 10 on 10 for guessing it would happen, even though there was a clue from Prime Minister. But what does it mean, these changes in personal income tax?
I somehow think this just brings about an atmosphere of taxpayer excitement, consumption being permitted, and therefore that was the need of the hour, really. This is the time when the finance minister, without giving up too much of taxes, is trying to build the confidence and the taxpayer friendliness kind of environment, plus ensuring that the lost momentum in the economy, which we are seeing for the last few months, particularly on the consumption side, is fully addressed.
How significant are the changes in real terms?
I think these are really significant, unlike many of the previous budgets that we've been seeing for decades where there have been tinkering in the tax rates. This one is really done far more gracefully. I think this will have a very significant impact in terms of both consumption as well as the confidence and the feeling of a taxpayer that what he is contributing has really been recognized.
Okay, this is very important. The other big thing that happened aside of taxation is the fiscal consolidation path. Mihir, 4.8% current year, 4.4% next year. So fiscal prudence is the key. We don't have the number of the capex for the next year, but this year's capex the number is lower as well. So a number on of what the fiscal deficit tightening mean per se for markets. The markets came off a little bit. Two, just rolled into that, right? If the base is 10.18 lakh crores for this year, they can mathematically show a 15% growth in capex next year because the receipts number is 10% higher.
Sure. I just got some message saying that the capex number is less than 11 lakhs.
For FY26.
For FY26. So maybe not a 10-15% growth, but probably about 8-9% growth probably, which is a tad below expectations, but nothing to worry about beyond a point. But I think more important is the fact that almost 1 lakh crores of tax incentives in the form of reduced taxes are being given out, which is a decent amount of extra money that the urban consumers can spend.
Well, is Atul Lal disappointed with this? Managing Director, Vice Chairman Dixon with us. Mr. Lal, thanks for joining in. One, of course, more money in the hands of the taxpayer, which is always good. But the capex number, by the math that we seem to be doing, is less than a 6-7% growth on a reduced number of 10.18 lakh crores for FY25. Technically, FY26 number might actually match FY25 or be slightly below as per the earlier estimates. Your initial thoughts?
So undoubtedly, I think reduction and exemption of income tax for the salaried people up to 12 lakhs is a very, very major positive. It's going to trigger a positive sentiment. It's going to trigger demand. And that's what the call of the day was. One wants to congratulate Honorable Finance Minister for this very significant step forward. As far as capex is concerned, yes, there has been a minor reduction, it seems. But please appreciate that Finance Minister is on a fiscal consolidation path. And she's been meeting the targets. That means we are building for the future. We're not taking debt on the government side, which again is a very prudent and a positive step. For electronics industry specifically, I want to thank the Honorable Minister for rationalizing the import duties on IFPD. Is going to trigger domestic manufacturing. She has reduced the import duty on parts of open cell, which specifically for Dixon is going to be a big positive because they're setting up a display module plant. Also, rationalizing the duty structure for lithium-ion batteries is a positive for setting up the manufacturing ecosystem in this particular component. So on the whole, it looks very positive.
Mr. Lal, very good morning. Tamanna here. So many things to unpack. Good afternoon, actually, now. So many things to unpack. The FDI and insurance has been increased. 4.8% is the fiscal deficit target for next year, lower than 4.9%. 4.4% has been penciled in for this year. So complete prudence there. Just on the Make in India push and some custom duties which will benefit you specifically, you spoke about that. The messaging on the Make in India push for manufacturing, is it what you had hoped for? Did you expect more? Should we have seen more?
So Tamanna, undoubtedly the first phase of the government policy framework has ensured that all devices, electronic devices being sold in India are manufactured in India. By the initiatives taken in this budget, particularly of rationalizing the import duties on IFPDs, on open cell parts, on batteries, is further going to deepen the manufacturing. We are also expecting a rollout of the PLI for component industry in the non-semiconductor space. We didn't expect it to be announced in the budget, but we are fairly confident, as per our understanding, that it's going to be rolled out by the government shortly. That is going to create a very deep component ecosystem in a non-semiconductor category, which will help in growing the industry, which presently is almost $150 billion. It has grown manifold in the last 4-5 years to almost $500 billion in the next 4-5 years. So we feel electronics industry is on the right path, and we want to thank the government and the Honorable Minister for this policy framework for triggering this growth.
Just one point from you, Mr. Lal, in terms of the demand push, and I know we spoke about briefly right on top where tax slabs have come down, and the direction seems to be to push demand. Do you see an outlook for improved demand, especially in your segment where demand has already been fairly robust?
So demand was normal. we would like to increase more, because please appreciate the demand for consumer durable goods in very many countries, in our neighboring countries, is almost 5 to 6x what's there in India with a similar population levels. So demand has to go up more, which I feel strongly that with the rationalization and exemption on the income tax side for the middle class is definitely going to help. We would also request the government to rationalize the GST rates. I think some of the GST rates, particularly on things like televisions and other consumer durables, need to be brought down to 18% level, which presently we are at 28% level. All this will trigger growth, is going to help in eliminating the unorganized market, and also it's going to increase the sale, which will compensate for the tax reduction on the revenue side for the government. So that's also another ask for us. GST, of course, was not a part of the budget, but we request the government to look at it in the forthcoming months.
Interesting. Whenever we are speaking to anyone from industry, in whichever sector it is, the big request is from GST. More and more, all eyes are on GST for taxation, though there have been some custom duty tweaks right now. Just recapping some of the big things that are happening in various sectors. The number of life-saving drugs which will be totally exempt from custom duties has increased. 36 for cancer, 6 more on concessional duties. Big push for EV battery manufacturing and for 28 additional goods for mobile phone manufacturing as well. Big push for startups and of course fiscal prudence over there. The one big thing that stands out for you, Mihir?
I think as we discussed just in the opening, there was some expectation for something for the middle class that's come through, so that's a thumbs up, I would say. We still are not very clear about the capex number for FY26, but hopefully it should be around the vicinity of 10.5 to 11. That should be okay, I guess.
That should be okay, Mihir. Why so? Because then it's just about a 4-5% growth. Is it a budget that is saying that we're taking the tilt off capex full blown because the economy may not necessarily absorb, or is it the government saying that we've done enough, let the private sector now pick up the mantle?
A bit of both, because we've seen almost 25 to 30% CAGR for 5 years. So that probably rate is not sustainable. And we also saw that beyond a point, you're not able to push through that much also. So this year, while we had the budget, we were not able to push through the entire number. So maybe there's a physical limitation also to how much the government can do on its own. And probably it's time for the private sector to kick in. With incentives for taxpayers, a little bit of urban demand coming through. If capacity utilization in the systems comes through, then you probably will see the private sector also get into the investment phase.
Cross fingers for that, and we'll get more sectoral things going as well. But Mr. Sehta, just one quick thing on taxation before we get in Shanti Egambaram and of course Hiral Johnson as well. But Mr. Sehta, somebody is asking about with the DTC in the offing, what do these limits that have been revised, what's the relevance? I mean, would some of these still hold? Is there any implication of the DTC coming in and the changes that have been made this time to the income tax limits?
Not at all. I don't think so. The new bill that she's talking about is primarily to bring about simplicity, more clarity, certainty, and so on. I don't think the tax thresholds and the rates that she has announced is likely to undergo any change whatsoever. That's coming in next week. And these proposals are effective from next year. So I don't expect that the bill will do anything.
Okay, one quick follow-up, Mr. Sehta. Yes. Was there something that you were anticipating in terms of taxation with regards to foreign institutional investors, easing of any kind of processes or etc., which hasn't come about, or will it be in the fine print?
No, I think that will come in the fine print. But what I do feel is the customs changes are pretty good, both in terms of trying to promote exports, help industry, rationalize the structure, simplify and bring finality to some of the proceedings. So a lot of things there as well.
In fact, the FY26 capital expenditure has been set at 11.2 lakh crore. That's the number that has just come in. Exactly. Okay. So that's going to be interesting. That's a good number basis the estimates that you were putting in as well. So does this mean actually tell you that, yes, this is going to be a capital focused budget and the vote bank is going to be happy with this as per the schemes that have been announced as well?
Which vote bank is it?
Exactly. We're talking about,
because the market vote bank, which is
exactly.
For this vote.
But with this number and the tax slab, you're taking a push in terms of consumption to some extent. So I think there is some bit of positivity, Tamanna, with regards to the middle class.
Yeah, no, of course. Before you answer that, I just want to get a view from Shanti Ekambaram. She's been waiting by, of course, Deputy Managing Director of Kotak Mahindra Bank. Ma'am, thank you so much for speaking with us here at NDTV Profit. And let's start with your first view, first take on the budget. Capex number has just come in, as Hiral has told us. It's maybe better than what was expected. We didn't manage to spend all of the budgeted Capex last year. What do you think is the one big highlight in your view?
I think putting more money in the hands of middle class for consumption, savings and investment was expected and was delivered in my view. The fiscal prudence of 4.4 is very good. While we have to get into the details, one of the things we saw this year was that growth had slowed down because of the slowdown of capital expenditure by the government. So while the number that you talked about just now says 11 lakhs, how much they spend and how much they upfront the spending is a direct impact on growth. You know, what ails us right now is the economy has slowed down and we need to pump prime the growth of the economy. I think the budgets have snippets of how to do it, whether it's agriculture, MSME, putting more hands in hands of people. But in my mind, fiscal prudence and putting money in the hand of the middle class, to me, are the two things that really stood out amongst the many small nuggets that were there in the budget.
Okay, Mr. Ekambaram, the thing that we are grappling with is, and good afternoon Neeraj here, is that one, there is a lot of change made to taxation as you said, and on the revised base of 10.18, an FY26 capex number of 11.2 lakh crores, which has just come in now, suggests that near circa 10% growth. So that and no big and fiscal consolidation attained to as well. In some sense, the three big things, the troika of the three big things that people were watching out for, seem to have been ticked partially, if not fully.
So, which is what I said. They have committed to 11 lakhs capex, but I think it needs to be upfronted. Last year, one of the issues, Neeraj, was that it was back-ended, of course, due to elections and many other factors. Second, by doing 11 lakh crores, yet increasing, maintaining fiscal prudence is a question that's not fully answered because the tax receipts, there's a reduction of 1 lakh crores by way of giving, the middle class the exemption up to 12 lakhs. But there is also the increase in tax collection significantly by about close to 7 or 10%. So I think we need to do the math, the secret behind the numbers. But right now at a macro level, higher capex, lower fiscal deficit, more jobs for the middle class, and keeping it is a little bit of a mystery that we have to work out. But if it happens, I think that's the best thing for the economy. I think we have to address growth. Fiscal done, monetary will probably follow, but I think we have to address growth because you saw the economic survey. 6.3 to 6.8 is far lower than what India needs to grow, which is 7.5 to 8%.
Mr. Ekambaram, Hiral on this side, taking both these aspects into consideration, how are you expecting then the RBI to move this week, next week on Friday, because that's the other aspect on the rate cut cycle that everyone is watching out for?
So what is very important pre to a rate cut is really liquidity. And if you saw that the markets have been in a seizure on liquidity. But I think last week, Reserve Bank came with a slew of measures that gave a ton of liquidity to the market. In my view, that's a precursor to a rate cut in the February policy. And I personally expect a 25 basis points rate cut. I think from an inflation standpoint, we are not yet there. But I think it's always a balance between growth and inflation. Yes, inflation has not reached a sustainable 4%, but I think growth has slipped quite a lot. So my own expectation is a 25 basis points rate cut. But more importantly, we will be looking for the narrative on how liquidity can be provided because it is important for credit flow to the various sectors. It's important for deposit flow to the banks. And it's important for a good market to find the right rates.
You know, I'm just wondering, Mr. Ekambaram, you said growth is the push that is required. From the capex figure that we have, do you think that there is enough boost for that growth? Because yes, consumption on one end, middle class, sounds good, feels great, superb headline tomorrow. But the growth issue, do you think that that has been addressed adequately?
I don't think just spending by the government is going to sort of, only spending by the government will give us the growth. I think we have to stimulate private sector. And I think 2-3 things that they talked about in the budget: ease of doing business, right? Whether it's, facilitating exports, whether it is facilitating manufacture in India, whether it is boosting the MSME sector to invest more, or bringing productivity and gains in agriculture sector. It cannot just be achieved by only the government spending capex. They have to stimulate the economy across various sectors, and investment from the private sector has to follow. Second, foreign capital investments across segments. I mean, for example, the insurance sector raising the stake to 100%, provided they invest the premium in India, was surprising. At least I did not expect it. So I think it is important to stimulate. So the rest of what they talked about need to happen. Very important, ease of doing business, and amongst the various segments I talked.
Ambaram, for joining us. So execution is going to be key from here on as well across parameters. But let's actually head across to Alex, because he's going to get us the breakup with regards to the FM's big budget bonanza that has come in for the middle class. I think from what I read, it's going to be the biggest income tax relief since 1997. That's what the word that we're picking up. Alex, break it up for us.
Well, I don't know if I'll go that far back, but certainly if you think about it, and I've been working for about 14-15 years, right? So if you go back to about 2010 or thereabouts, 10 lakh rupees was the threshold for the highest tax slab. And that was, at that point, thought to be a decent amount of money to be earning every year. And above that, it was taxed at 30%. Now take a look at inflation. If you assume that over the last 15 years, we've had 7% or thereabouts inflation, then the value of that 10 lakh is approximately 24-25 lakh at this juncture. The slab changes that have been done today acknowledge the impact of inflation on the pocket of the middle class, and it's been changed to give some relief. And a relief is maybe an understatement. Take a look at the major announcement. Of course, these are how the new tax slabs look. You'll be forgiven for not knowing exactly what it stood at last year, because I'll remind you, right? So 0 to 3 lakh was the lowest tax slab, that is raised to 0 to 4 lakh. It's 0%. 3 to 7 was the earlier slab. It is now standing at 4 to 8%, which is 5%. 8 to 12 goes up to 10%. 12 to 16 goes up to 15%. 16 to 20 is 20%. 20 to 24 is 25%. And above 24 is 30%. In the previous new tax regime, any income above 15 lakh rupees was taxed at 30%. So already there's a huge relief that is being provided. What is more, the earlier rebate was on income up to 7 lakh rupees. What that meant is that if you earned up to 7 lakh rupees in taxable income, you would not effectively be paying any tax. That has now been raised to 12 lakh rupees in the new tax regime, which means that if you are earning a taxable income of up to 1 lakh rupees per month, you're not going to be paying any tax in the form of income tax. The clarification that is going to be required is going to be what she meant, what the finance minister meant about the special income. She specified about capital gains. And the interpretation currently is that if you earn even less than 12 lakh rupees, but if you have an element of capital gains in that total income that you earn in the year, then you will not be able to claim that rebate, and you will have to pay basis the slabs. This is something that has to be clarified.
Okay, Alex, thanks so much for that. And I want to draw the attention back to markets, because they are, well, if not taking it on the chin, certainly languishing. IT is down 1.45%, but I think the index which deserves a special mention is BSE Cap Goods Index. Capital goods is being taken to the cleaners. From an ABB to a Siemens to a BEL, L&T, all of them are getting a punishment because the street seems to be disappointed. For now, with the capex numbers, 10.18 lakh crores for FY25, and on top, on that base, 11.2. But if you look at the earlier estimates of nearly 11 lakh crores, there is almost no growth in capex. Mihir Vora, you are showing me a chart around capital expenditure, but clearly the street right now is very, very disappointed with the capex number that has come out.
Yeah, I think it's a bit of a knee-jerk reaction, I would say, considering that the base was already low. You are seeing a 10% increase in the budget, and I think this, combined with the fact that you are probably providing almost 1 lakh crores of subsidies to the taxpayer, is not a bad outcome, frankly, as we discussed in the morning.
But
it's going to be a balancing act.
The capital-intensive industry or
Absolutely,
sector,
yeah.
is this a disappointment? The valuations that they are trading at, so on and so forth.
See, this has been one of the sharpest hit sectors in any case in the last 3 months or so, right, from the peak.
Right.
So I don't think too much was being built into the prices in any case. Probably in the last couple of days we saw this uptick, and that's what's being corrected.
Okay, whole host of speakers joining in right now for their view. We are speaking to Mayank Shah from Parlay. Great time to get a view on consumption. We're joined by KK Mistry. Want to get his view very quickly on what we can expect as well. We have the Macquarie view on markets as well. So we'll get to all of it one by one. Sandeep Bhatia also joins in. Sandeep, great to speak with you today as well. So Sandeep Bhatia, Mayank Shah and KK Mistry joining us for this leg of the conversation. And, I actually, Mayank, I should see the biggest smile on your face. More people have money to buy your biscuits. So, which is why let me start with your take first.
Absolutely. So, that's getting reflected in the FMCG index as we, speak.
Yeah.
But I think, this was much anticipated and much expected. And I think, full marks to the finance minister for doing it. This is going to really, spur demand for consumer goods. And, looking at the kind of challenges that most consumer goods were facing in last almost about 2-3 years, this is something that's going to be of a great help to all the consumer goods company. I think 12 lakh rupees effectively, along with standard deduction 12.75 lakh rupees of tax-free income. I think is a big move and a very bold move by finance minister. This is definitely going to result into spur in or a jump in demand of consumer goods. That's one. As if that was not enough, I think almost every expectation that most consumer good companies had, right from accelerating rural demand. So I mean, budget was all about acceleration in growth, and that's what FM has lived up to when she talked about Pradhan Mantri Dhan Dhanya Yojana, where she's talking about 100 districts being focused on for agricultural initiatives, or even urban infrastructure, where she talked about the second engine of growth, MSMEs, and increasing their annual turnover limit by 2.5 and 2x so as that they can grow. That's going to generate more employment. So that's another thing. I think both put together, I'm talking about the agri initiative, first engine of growth, and the second MSME. That's going to generate enough and more employment in the rural and urban India, which is going to have a direct impact on the demand. So having done that, I think, the other important and salient things that one needs to mention about the kind of initiatives taken by FM are even the Urban Challenge Fund, where they are talking about driving transformation of cities. So all this spends on infrastructure, urban as well as rural, are going to generate jobs.
Cross fingers, Mr. Shah. Sorry, just getting in other panelists in the conversation as well. But this is great to get an opening thought from you. As Tamanna said, you would be a happy man. Mr. Mistry, bond markets would be happy as well, I presume. Don't know much about the capex intensive industries because they are not very happy with the capex growth. Your initial thoughts, sir? Fiscal deficit, capex, personal tax, what have you?
All right. I think firstly, the budget is very broad-based. It's covered so many areas and so many facets of the economy which are critical. You have focused on agriculture, you have focused on MSME, you have focused on education, transport, tourism, energy, export, all of that. And most important, as the earlier speaker said, is the fact that with the lowering of the tax rates and the increase in the minimum exemption limit, clearly it will spur consumption. So what was it we were looking for in the budget? I was looking at for 3 or 4 things. First thing I was looking for was consumption, which very clearly has been met. I think the consumption boost in the economy is a huge boost that we will see in the days to come. Second, I was looking at job creation, and I think there are enough measures in the budget to facilitate job creation, whether it's in the MSME sector, whether it's in the rural sector, or in various other sectors of the economy. So these were the 2 broad things that we were looking at. And I think both these have been met. Growth, I think we are still too premature to say that, you mentioned that some of the infra companies, the stocks are down. I think we need to understand the budget a little more before saying that, before commenting on that. I think there is growth, there will be growth, because when you reduce the tax rates, you automatically increase consumption. When you increase consumption, the manufacturer needs to produce more to satisfy that demand, which automatically creates more jobs and creates growth in the economy. So we need to understand a little better. I also think it is growth oriented.
Sure, Mr. Mistry, I appreciate that. Just saying that somehow the street went for the headline numbers, and on that front, it seems to be disappointed because the market is giving that verdict. Maybe it's a false alarm, and as our guest Mihir Vora was saying, the index has corrected so much already, maybe not too much of downside left here.
Absolutely, and I think in terms of the capex number, the number that we're tracking, probably the markets are looking at it in a positive way, but there is a correction in the market, so we cannot rule that out, Neeraj, as you're saying. But let's also take this question with Sandeep Bhatia. Sandeep, good afternoon. Your first cut in terms of how are you looking at the budget, with the numbers that have come in, specifically with the fiscal deficit, and in turn, if you have to look at the capex, because the markets are really not reading it well now.
As the previous 2 speakers have said, I think this is a budget which is balancing many things. Focusing on one number is a wrong way to look at and evaluate any budget. Definitely not this one. I think the patient is taking the medicine which the doctor ordered. The patient needed a consumption boost, and that's what is getting administered, and that's a good thing. Capex is definitely not. There's no space for giving a capex boost and a consumption boost in the budget. So simple as that. You have to make a choice, and I think the doctor has made a right choice. So that's where it is. I think on the whole, if the market is falling, well, market and economy are correlated over long periods of time, and in the near term, anything can happen in the market. A lot of things, the kind of run up we have had, that itself warrants a correction, in my view, for the stock indices, and that's what's happening. And that's also actually in the end healthy for the markets. If market price is correct, that's also in the end definitely a good thing.
Sandeep, while we were listening to your answer here, our studio guests are saying our market is throwing a tantrum. Because
that's what Mr. Mistry said as well, by the way.
Yeah, something which Mr. K.K. Mistry said as well, just from the point of view that, there was this ask to boost consumption that has come in. There is a lot of clarity in direction, PLI schemes, manufacturing, just that broad direction is in place. What is your take on this, Sandeep? Was too much expected, or is there not enough to really trigger that growth that was becoming a concern?
The growth concerns have been there for good reason, and I would also moderate everyone's expectations that just because of this tax cut, that doesn't mean growth concerns will go away immediately overnight. People are not going to rush out and spend to buy cars or biscuits or anything else just because there's a tax cut. People need to earn the income and then do the spending. So in the end, markets always are like a spoiled brat. If you give them one thing, they'll say, I want something more in addition to what you just gave me. I think this is what can be done, and what could have been done has been done. So I would.
Okay, Mr. Mistry. Yeah, no, fair call, Sandeep, and points well taken. Mr. Mistry, a couple of questions to you before we thank you. One of them is on the fisc deficit glide path, and the fact that the belief was that there needs to be a boost given to growth, and the FM seems to have chosen the consumption route to do that, as you said. Could the thought process also be that we've gone out and tried the capex route, fronting up the capex, waiting for the private sector to come in. Hasn't happened. Consumption has suffered in that interim. Might as well try and give a boost to consumption, because such a kind of tax move has not been done, as Mr. Seta said, in a really long time.
No, I agree. I completely agree. I think the growth will come, but I think Sandeep said the growth will come with maybe a little bit of a lag, because when you reduce the tax rates, you increase consumption. When you increase consumption, you automatically will result in more demand, and more demand will result in more growth, but it will come with a lag of maybe a couple of quarters. So growth focus is very much there, and the reduction in the fiscal deficit is, in my view, a good sign. The target was 4.9. Now we are talking of 4.8 for this year and 4.4 for next year, as compared to the 4.5 that we had previously. So I think good. It will help the bond market, number one. Number two, it could help India in the rating also at some point of time. The rating outlook could, obviously these things would help towards the rating outlook. And I think if we can continue the glide towards fiscal consolidation, then I think it's a good measure. Tax collections have been very buoyant. Tax collection target is also fairly strong, in the sense that there is a 10% increase in the tax target for next year, despite the fact that there is almost 1 lakh crores lost because of the reduction in the increase in the exemption limit.
Mr. Mistry, just on the point about increasing FDI in insurance, your take on how it will impact the sector. Do you think there'll be any takers from the Indian insurance companies right now for that additional FDI coming in? Is it more signaling than an actual impact that we could see in this space?
Initially, it is signaling. It may not directly result in too many companies coming and increasing their stake. But having said that, in the long term, it's a good signal to give to the market. I wish they could also do it for the banking sector, because that would give a direct benefit to the capital markets. Because if you look at the MSCI index, which is where most of these passive funds invest from, the MSCI index takes into account the fact that the shareholding by foreigners in bank is capped at 74%. If that is increased to 100%, then automatically our weightage in the index will go up. And if that goes up, that brings in more foreign money into India, without in any way affecting ownership, because the ownership of banks is very strictly controlled by RBI.
Mr. Mistry, we'll let you go on that note. Thank you so much for talking to us and giving us your sense. And, we'll come to Mayank Shah and of course, Sandeep Bhatia as well in a moment from now. But Mr. Seta and Mihir with us. And Mihir, a word on insurance. You come from an insurance background. One is, of course, the limits. Who would go out and sell 100%? So is there a benefit of increasing the FDI limit from 75 to 100 within the current large insurance companies? And part two, just a personal finance question there. Since the exemption is now at 12 lakhs, does it at the margin reduce the attractiveness of insurance for tax saving purposes for that bucket? And is that the reason why the stocks are down?
I guess so. But on the first question, you're right. There's not many companies which are going to immediately sell out to foreigners, but as Mr. Mistry said, it's more of a signaling thing that we are open for business. We are getting more open as a economy, and I think a couple of years ago, anyway, from the exemptions point of view, you saw some reductions in exemptions for insurance in any case, especially on the ULIP side. So I think this is more of a continuation of the same. So, but we saw that the industry growth really did not falter. So ultimately, products which are being sold are being sold, and I don't think apart from an immediate blip, there should be a big impact to the sector per se.
Okay. Markets right now down, about Nifty about 0.5% down. Nifty IT really taking a knock in the last few minutes. Let's just pull up the intraday of that index as well, about 1.5% down. Those pain points coming in now. I mean, you could call the market a spoiled brat. You could say whatever you want, but the fact is, market's not reacting too positively. What's the view right now, Sandeep Bhatia? Are there opportunities that you can see based on this budget to start shoring up positions from an equity perspective? Or would you wait and see what really comes at the end of corporate season? Because once the budget buzz dies down, we're back to brass tacks.
I think we are always back to brass tacks every day of the week. So I think essentially what my base case assumption is that we see consolidation of the fisc, which has happened. We will see pressure on the rupee. I think that's not being discussed in this on this panel. I would expect continued pressure on the rupee, especially if the tariffs go up globally. One of the ways which countries will move to counter US tariffs is to depreciate their currencies against that. And similarly, even if there are no high tariffs against India, to meet tariff on competing countries, Indian rupee will also need to depreciate. In that, I think exporters will do good, and even as I mentioned, discretionary consumption, Maruti looks good in the near term, especially because there's a pay commission for central government employees and state government employees, which will kick in next year. So discretionary consumption, exporting businesses definitely look good in the near term. The other thing is private banks. Indian fisc remains in a healthy state. And private banks, some of them are very cheap now. And also the overhang of excessive ownership by FIIs have gone away. So to that extent, private banks look good.
Okay.
So Sandeep, let's look at the defense number as well. The FY26 capital outgo at 1.8 lakh crores. If you pull up all the companies as well, don't seem to be taking it really well. How are you looking at it?
I saw a paper which discusses that even the defense spending is lower than the outgo. It's unfortunate that our decision-making and bureaucracy cannot spend the money which is given to them for defense. Our geopolitical situation is very difficult across all most of our land bordering countries. I would think, therefore, I would focus on using the money, spend rather than looking at whether the money has got allocated or not, because almost, I think, out of 10 years, maybe 1 or 2 years, the money was left unspent, what was allocated. So that's good. I think the US will also put pressure on India to buy US equipment. We'll have to see what is on offer and what is needed by our forces. And in any way, these things have long-term impact. Even if you make an order today, we know for a long time that even our our aircrafts which are coming from HAL have been behind schedule. So all these are good numbers to talk on a day when the budget is announced. But life is, as you said, back to brass tacks.
Quick word from Mayank, yeah.
Just before you go to Mayank, just wanted to go this clarification because there is a lot of confusion around the defense allocation.
Yeah.
So FY26 allocation is at 1.8 trillion versus 1.59 for FY25, and that 1.59 is being revised, and FY25 has been revised downwards from 1.72 to 1.59. But at 1.8 for FY26, it's anyways higher than the budgeted earlier number given and the revised budgeted as well. So both.
Yeah.
So FY26 is anyways not a bad number.
So it's the same situation as the overall capex.
Yeah, exactly.
Whereas you are seeing a 10% growth on the revised lower estimates for FY25.
Yes.
But not so much of a growth from the original
budgeted 5%.
So that would be from 11.1 trillion to 11.2. So that is just absolutely same. But defense is still okay. We should see what some of those defense stocks are also doing. On the consumption point, Swiggy up, Zomato up. I just wanted to get this point from you, Mayank. How much of a boost do you think consumption will make to the prime question of private capex? Now, for example, if you see enough of a demand boost, does it encourage you as a large company to expand more, spend more? Why has that private capex not been coming in?
As I shared earlier also, I think last 3 years were challenging. And the biggest challenge that most consumer companies faced was inflation, input material inflation. And that was the reason why there was impact on demand. Initially, we saw a slowdown in rural demand. Post that, since last few months, we are seeing, sluggish urban demand. Now, once demand goes up, there definitely would be expansion that would be happening. So I think, I would agree with some of the panelists, who earlier said that markets are throwing tantrums, especially when it comes to capital goods. Capital goods basically are produced means of production. Today, if we are talking about increase in demand in consumer goods, there definitely is going to be an impact that's going to be there on the capital goods as well. May not be on all the capital good companies, but yeah, some of them or most of them would be manufacturing, machineries or, capital goods to produce consumer goods. So I'm saying, in long run, it's going to be beneficial. when you are spurring consumer demand, I think, net, we are talking about, impact that's going to happen across, broad-based entire economy. That wouldn't be selective to, let's say, a particular sector or a particular category.
Okay, Mayank, thank you so much for joining in today. Sandeep Bhatia, thank you so much for your time. I would say not half bad. I mean, markets are taking some time to warm up to what the finance minister is saying. But truth be told, the consumption story has got a big boost this morning. I'm just looking at some of the leaders in the broader markets. A Campus Active, about 13.5% up, obviously because of that footwear scheme that has been announced. A Bikaji Foods, I want to pull up and see what a Zomato and a Swiggy are also doing. A Trent moving there, a Blue Star moving there, disposable income good for all of these companies, and you can see that sharp spike there. We're taking a very short break, but we'll be right back with our next set of speakers and give you a more detailed analysis of the budget fine print. What exactly are the details coming in of where allocation has been made? This is the day that shapes the future of 1 billion dreams.
From the fields of agriculture to the backbone of defense.
From ambitious infrastructure projects to everyday tax policies.
Every decision counts.
How will this budget balance growth and fiscal prudence?
What will it mean for jobs and what will it mean for your portfolio?
Join us for the most comprehensive coverage of Budget 2025
as we decipher the impact
of this budget on you.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims?
Welcome back. The budget bonanza has definitely come in for anyone who pays taxes. Maybe those who are trading in the markets right now are waiting to see the silver lining, but for taxpayers, this has been everything you could expect. Some of the best tax relief in decades that has come in. At last count, we saw from 1997 onwards. So no tax till 12 lakh rupees of income and then onwards. The Nifty now recovering from its lows of the day. But what you're seeing working in the market right now is completely reflecting this. The push to consumption. The street asked for it. Every economist, every company, every businessman asked for it, and it has come. Where you're seeing a sharp focus on consumption, which is why you see today a Brokerage Consumer, an Avenue Supermart, a Blue Star, all of this working. Hiral and Neeraj, this is clearly a push for consumers.
Consumers, but the other thing, Tamanna, and I think, before the budget announcement happened, we were saying that maybe Feb 7 is more important, right? Does the 4.8 and 4.4 number set the stage for a rate cut next week? Because the government is telling the RBI that we are walking the path of fiscal consolidation. Now, can you give that little push? Because the RBI has already done that in a little bit, right? So is that the big thing? And I think we'll go to Lakshmi here as well. But me, final set of questions to you. Bond markets would be a happy place right now. I'm just trying to understand from an investor's perspective, right? Large cap, mid cap versus small cap. Is there a change now that you would do? And would the fixed income funds come into equation currently?
I think the borrowing number is not all right. So it's broadly in line with what we were expecting. So I think from the bond market point of view, it's a business as usual budget. People are expecting 4.5. 4.4 is an even better number. And I think we are back to business as usual, I would say. The more the budget remains a non-event, the better for the economy, right?
It's hardly a non-event. Hardly. Here, I wouldn't say it's a non-event. Mihir, there were cheers when she was announcing that. Like there were cheers going up. Yeah.
No, but no big surprises, negative surprises. That makes the budget a non-event, thankfully, from that perspective.
And remember, we started by saying, in this budget, no bad news will be good news.
Right. But there is some good news. There is some good news. But why is the market not seeing it then?
Because I think the markets are reacting the same way they've been reacting to earnings. Bad news, you're beaten down. Good news, you don't really move that much. I think that's what we are following even with the budget commentary, I think, Tamanna.
Yeah, Lakshmi Iyer with us this morning. I keep saying morning, afternoon. It's 1 o'clock now. The budget day just goes by in a whiz. CEO, Investments and Strategy, Kotak Alternate Asset Management. Lakshmi, I know you have the right dialogue and the right tune ready for what you've seen in the budget, but I will leave it to you, your first comment on what you've made of the budget math and the announcements today. Lakshmi, can you hear me?
Yeah, I can hear you now.
Okay, you can. Okay, so I was saying, I know you have exactly the right way to encapsulate what we've seen in the budget. I don't know if it's going to be a dialogue, a tune, or a song, but what have you made of this time's budget?
So I don't know of any dialogue, but what I could think of is that market wanted both Karan and Arjun, and they said Karan Arjun aayenge, and Karan Arjun meant capex boost and consumption growth both. As of now, it seems to be more tilted towards the consumption boost, which is, through the direct tax rationalization, or for that matter, self-occupied property, the annual value that you declare from 1 to 2, I think all of that clearly means that there is more, propelling the discretionary consumption boost, which is definitely good news from a market standpoint. So yeah, I think, and they've tried to kind of, get in quite a few sectors, whether it's tourism, whether it's hotel industry, of course, healthcare, pharma. I think all of that put together, seems to be that the weekend is going to be quite active.
Lakshmi, the weekend is going to be quite active, but what does this tell you with regards to the coming Friday when we have the RBI coming in as well? Has this actually set the tone in terms of what they could do?
Well, I would say the RBI already kind of did a quasi-easing by doing some liquidity measures early last week, and there probably could be more to follow. So I think, and of course, the budget living or staying within the fiscal path of consolidation or discipline is another positive. Check the box. Are these necessary and sufficient conditions to probably go in for a rate cut? I still would probably do like a toss of a coin, quite difficult, and with a tad higher probability saying that maybe that instead of a Feb easing, can you push it to an April easing? Is it going to move the needle materially? Well, probably not, because we have to look at what's happening globally also. Of course, domestically, things also are, kind of falling in line, but globally, things are not completely in our control yet.
Lakshmi, thank you so much for joining in. Really appreciate your time. And take a moment to thank our budget think tank, Mr. Pranav Sehta, Mr. Mihir Vora. Thank you so much, gentlemen, for joining in today and giving us your thoughts. Really appreciate your time. Okay. We have a special guest with us, Dr. Anish Shah, Group CEO and Managing Director of Mahindra Group, joins us right now on the show. Dr. Shah, thanks so much for joining in. It's a budget that has kind of played the balancing act on 2 or 3 counts. But most importantly, if the cheer in our newsroom is anything to go by, there is the big bonanza given to taxpayers. How do you see this?
Neeraj, good afternoon. We see 3 major themes of this budget. One is the demand stimulus, which was much needed. And the bonanza to taxpayers is something that should translate into expenditure. And that's going to be a positive for increasing capacity utilization for companies and thereby private sector capex, which is one area that has been in focus for quite some time now. The second big theme is Make in India. And this is, again, essential for an economy that has to grow many multiples over the next few years. And here we've got many different incentives around capital goods imports being cheaper, addressing the inverted duty structure in most cases, ease of doing business. And these are all factors that will go a long way in ensuring that the cost of manufacturing in India becomes lower and India becomes more competitive in the world. There is obviously a lot more to be done on this front, but these are steps very much in the right direction. And the third major theme is inclusive development, with a focus on agri, on MSMEs, on skilling. These are all factors and ecosystems that are required for both manufacturing and services, and obviously the agri sector as well. So in all, this is a budget that has balanced various factors, in our view, very well, and continues to drive the strong fundamentals of the economy and hopefully takes us out of some of the speed bumps we've seen in the recent past.
Anish, on the side, you mentioned about the demand stimulus. To add to that, we've already seen a tax hike that came in terms of second-hand cars, which was also a booster dose for OEMs. How are you looking at this for the auto sector then?
I think the auto sector still has a long way to go from a growth standpoint. So I would look at more fundamentals that help us in the long run. The focus on EV is very positive right now. The measures that the government has put in place have helped take 3-wheeler penetration in EV from 0 to 25%, and it will go to 100% in the next 3 to 5 years. 4-wheelers, we've just started the journey. We are at 1.5 to 2% right now. But again, the measures the government has taken will help us take that penetration to 30% or even higher. So we're looking more at long-term. Some of the shorter-term measures around used cars are really not a very significant impact. What is of a greater impact is, as I said earlier, measures that help us manufacture in India for the world, because we are in a position to do that now.
Dr. Shah, Tamanna here, and this is just such a interesting budget to look at. Every time we say that non-event, this time there is a real push towards consumption. And I know you've talked about how you see it pairing out. Do you think that if there is more disposable income in the hands of people with the push that has been given to EV in terms of battery, custom duties, etc., that the real pivot for the industry, for the auto industry on EV comes now after this budget?
I think this is just one factor, Tamanna, that adds to everything else. Because EV starts with a product that is a wow product, where customers look at it and say, I really want this. We have to address the range anxiety, which again, we've done with our born electric products. We've got to ensure that there is a reasonable ecosystem for charging, which is coming up very rapidly now. And the consumption boost will help not just the auto industry, but many industries. So it's a clear positive for the economy.
Just one last word, sir, on the capex figure. Yes, it is a 10% jump after the revised estimates, but everything was expected from the finance minister: consumption boost, capex boost, spend on all fronts. Do you think that the capex figure, you would have hoped to see a higher one? Is there any disappointment there at all?
And can I just add to that, Dr. Shah, that the same question that Tamanna has asked? There is a provision of how the government has done a 40% increase in the grants given for capacity creation. So in some sense, pushing the private sector to put up the capex.
I think, Neeraj, that's a very important point. And going back to the question earlier, 10% is good as long as that is actually delivered. And with what you just said, Neeraj, around the private sector incentives and the consumption, that will enable a lot more private sector capex as well. So we were straddling a fine balance here. The balance was consumption, capex, and fiscal discipline. And I think on all three grounds, this budget delivers very well.
Dr. Shah, actually one final question from my end, and that would be that before the budget, the feeling was that there should not be any bad news. And the market was grappling with, will there be changes to long-term, short-term capital gains tax, fisc deficit or fisc tightening, and capex growth. Aside of capex growth, on where the opinion might be a bit divided, the other two have fully ticked marked, right? So in that sense, is this probably the best case outcome then one could have hoped for the budget? Because you can't, I mean, you're juggling too many balls, you can't hold all of them.
Yes, that's right. A budget is not a magic wand. A budget is one that has to build upon various actions taken over many years. And this is one that builds upon those actions well. It addresses some of the short-term concerns we've seen. It keeps in place the longer-term focus on capex, which will have a multiplier effect. It maintains a fiscal discipline. It addresses a number of areas that are required to make manufacturing in India a lot more competitive. So all of those counts, this is a budget that I think is very well thought through and will have a big positive step forward for the economy.
Okay, thank you so much, Dr. Anisha, Group CEO and Managing Director, Mahindra Group, there on the budget. And I think that's going to be the refrain, guys, from what you would expect from corporate India, because they said get people to come and spend and then we will increase, setups. The private capex will come and people spend. The chicken and egg.
Look at the gains, Tamanna. Trent, Avenue Supermarts, Godrej Consumer, Blue Star, Sapphire Foods, just gone all across. CLSA 3 days ago said that FMCG is now the biggest overweight for them. Contrary to everything else, I mean, this is a blowout move for consumption stocks for sure. Westlife, Phoenix Mills, premium, mid-income, mass, everything has gotten a boost.
It's actually looking like consumption versus the rest now.
Yeah, it is.
In the market's perspective, that's exactly what we are seeing right now. And whether this will, and now the question will be, Neeraj, valuations. We were all talking about valuations versus what's happening to consumption. I think the tables have turned.
Yes, most certainly.
And the other thing that we need to also
just one second, Hiral. B. Tyagarajan, Chairman of CII Trade Fairs Council, speaking with our colleague Shimi Chaudhary in our CII setup in Delhi. Let's just cut into that conversation very quickly.
Categories of low. If we are increasing the consumption, that is a step towards becoming globally competitive. See, already there is a PLI scheme which is working well, and it is a successful scheme. And this consumption story complements that effort, and it is something very important, wanted, and it was also not expected to this extent. Taking it straight away to 12 is a great step. At the same time, maintaining the fiscal discipline is laudable.
Is important. And what about the capex? We have seen that the estimate have been reduced for the current fiscal year FY25, and for FY26 they kept it very moderated. You think that government is not quite confident about investing in infrastructure and other stuff?
I don't think so. The issue would have been, I'm guessing, there is enough capex that had been sanctioned. Execution may be the focus there, and we have to get the projects executed. Again, 10 lakh crore plus of an investment is significant, even though it is 8% lower than last year. So I will not be worried. But the two other things are important and good. One is the National Manufacturing Mission focused on MSMEs and startups. So that is good. The exports focus is good. That is the need of the hour. and bringing the subject of certain categories like toys, that there is an aspiration we will become the global hub. That is good. And energy security issue, that how we will do this transition in the next 5 years, that nuclear initiative is also good. So while maintaining the fiscal discipline and addressing here and now issues is laudable.
Okay, Rashesh Shah joining in, Chairman of Edelweiss Group. As we break up the budget, Mr. Shah, thank you so much for speaking with us. It's been quite a day, and Finance Minister saved the best for the last, made sure that there was a grand exit after that budget speech. Do you think that this is the tonic that was required for the economy?
Yeah, I think raising the tax slab and making sure up to 12 lakh rupees no tax is paid is a big boost, especially urban demand, because our urban consumption had been slowing down. So I think that was a big move. And obviously, as you said, she held it for the last because this was, I think, the highlight of the entire budget. The other highlight, I would say, is the announcement of the new income tax code. I think that was long awaited. We have a lot of expectations out of that, because that will simplify the the long complicated income tax code that we have had. So I think that will be a good one. For people like us, I think the 100% FDI in insurance is a very bold announcement. It was on the anvil for a long time, but there were a lot of political pushes and pressures on that. So I think even that announcement shows that the government wants to grow the insurance industry, which is actually going to be also required, because a long-term capex, capital formation, insurance is going to play a big role, because a lot of the long-term capital comes from insurance savings in India. So I think all these are good moves. I always believe that I think India needs to grow at 8% a year. I do think the announcement in the budget of, it appears that the growth rate will be 6.8 or so in real terms and about 10.1 in nominal terms is too low. I was hoping that we have 11 to 12% nominal GDP growth rate, which means we need to be at between 7 to 8% GDP growth rate. So I would have been happy with more aggressive moves on consumption as well as government capex. I think the first half government capex will be very critical. So whatever they're spending for the year, if they can front end it and spend it in the first half, it will be very helpful. But overall, I think fairly conservative approach to the overall fiscal deficit. And I think the idea is to keeping in mind the bond market. India is going to be part of the global bond indices. We should get a lot of bond inflows into India. I think the idea is to keep that in mind. And, historically we've seen, if you try to keep the bond market investors happy, the equity market investors are not happy. And if you keep the equity market investors happy, the bond market investors are not happy.
That's true. But has this budget done that act of doing what is necessary right now, Mr. Shah, part one? But very quickly, I'm squeezing in one more question. This insurance FDI moving from 75 to 100, it's not that at 75% too many people were selling off their stakes any which ways. So this move, symbolic as it is, does it result into any specific gains? I mean, I know you are maybe a related party too, so I'm kind of tongue-in-cheek asking you this question.
It will help a lot. There are a lot of global large insurance companies which have been wanting to come to India, and either they could not find a good partner or they wanted 100% control. So I think 100% it will spur investments in the industry, because as you know, the first round of investment in insurance happened by the banks. But as we all know, banks are now, they don't have so much capital surplus anymore. So the next round of investments will not come from banks or the corporate houses in India, but will come from the foreign investors. So I think the international insurance companies, strategic investors will see this 100% FDI insurance as a big move. It will spur more capital into insurance sector. I think, IRDA has announced insurance for all by 2047. I think that will need a lot of capital. So I'm hoping that will also happen. So overall, I think insurance good. CapEx, I do think private CapEx will only come when demand picks up. Neeraj, we've been seeing capacity utilization hover at about 75. I've always seen that capacity utilization, when it crosses 80, is where the private capex will start. So I think we are still far away from private capex driving the economy in big way. Exports will also not be a big driver in this current year because there are a lot of global changes that are happening. So I think government capex will be a big one, and the middle class consumption, especially urban consumption, will be a driver. I think both of them have got enough in this particular budget. But I would have been happy with a slightly more aggressive growth.
Mr. Shah, you mentioned about happy with a slightly aggressive growth. So what do you think should have been the give from the government? Because at least on the taxation front, it seems that they have incentivized the middle class, right? And when you talk about the capex, yes, it is going to be important that the government needs to spend in the first half, but to add to that, you need the private players to come in. Now, if that combination does not help, where do you see us?
See, the private players have not come in for last 4-5 years. You remember in 2019, we had cut the corporate taxes in India, waiting for the private sector to step up on capex. I think there are many reasons for that, but one of the most important one is when we had urban consumption, the rural consumption was not there. Then COVID happened. Now the rural consumption is picking up, but the urban consumption is still pretty soft. And along with that, as I said, capacity utilization is not crossing 80%. So I think that will be the precursor to private capex. So I would have been more happy with more aggressive government capex for this year to be announced. I would have been more happy with, maybe more income tax relief for spending, consumption across, for foreign travel, all of that. If there were more specific stuff which would have said that we want to spur consumption, that would have been good. Along with that, I think if there was a bold announcement that we want to go for 8% growth and lay the groundwork, even if the FM had said that by 27 we want to be at 8% growth, so then the coming year, FY26, is more like a bridge year to that, it would have been a lot more helpful in boosting, because the biggest problem is growth expectations. Unless growth expectations come back, animal spirits will not come back. Unless animal spirits come back, capex and all will still be muted as it has been.
Just getting your take, Mr. Shah, why do you think the market has reacted the way it has to the budget right now? Is it the nominal GDP growth number that you mentioned about, the feeling that the tax cuts are maybe not going to be enough and capex boost is what was needed?
Yeah, I think the market, but I also must admit, I think there was not a lot that the FM could have done to really boost growth in the short term. I believe that the RBI policy a week down the line will be more important for short term. So if you look at bank stocks and all, they have come back a little bit, but I don't think any announcement in the budget really affects the banks in the short term. I think RBI has a much larger impact. So I think the next week is going to be a lot more important from the growth expectation. I think the first half of the coming year, growth has to come back. We need to get back to 6.5 to 7% growth as fast as we can, because that is the minimum growth that we need to keep the optimism, the animal spirits, all of that going.
Got it. Mr. Shah, I really appreciate this time. Thank you so much for speaking to us today. That's Rashesh Shah of Edelweiss. Well, in some manner, I think he said that this is what was needed. A lot of people want to come in, but the 100% was not there. I didn't want to ask him point blank, are you going to now sell out the state? But yeah, that's interesting. I think the other reason which I'm getting, and just need to verify this, but insurance, one of the other reasons why this could be down, because apparently the 10D benefit has been taken out for ULIPs. And ULIPs was a big growth trigger for insurance in the last 12 months. So if indeed that has happened, it will be a negative for insurance companies, and which is why maybe the HDFC Lives, etc., or the private sector ones would be down. Not Mediclaim. Let's get HDFC Life, ICICI Pru, and those are the names which
correct, and this will be with your new tax regime, right? So this
even the new tax regime along with it.
So that shift to the new tax regime is going to impact what you're saying.
That too.
Absolutely.
Yes.
I think the important thing to do, and here's a quick plug-in. If you're wondering what is happening to your taxes, please go to ndtvprofit.com. You will find a tax calculator there. You don't need to look any further. Put in your numbers and figure out what your tax outgo is now. I think another thing which will be very important, guys, is old tax regime versus new tax regime.
Yes.
The push to move towards new tax regime and let go of those exemptions has been increasing year after year. I would say this is the most solid and strongest push yet to let go of all of that ATC, ATD, etc.
Yeah. Just go out. We are making it clear. Sorry, Hiral, you want to make something?
No, I was just saying that, and the differential that is coming in terms of the taxation is very minuscule. So if you have to, if you sit with a tax calculator with your new tax regime and the old tax regime, with what has happened, it's a minor difference. Say, I mean, you're saving around 5, 7, 8, 10,000, right? And that's what the government is now pushing, that get rid of it, come to the new tax regime.
I did this
exactly
2 days ago because that was our internal, deadline. And for the first time, I have moved to the new tax regime. I'm so happy I did that 2 days before the budget.
But with taxation, I think, Neeraj, one more sector that we need to look at very closely in terms of pharma. I think it is a sweet pill what's coming in terms of the custom duty which has been removed on the couple of drugs which are related to cancer. So that could be a positive on that one. On your bulk drugs, you're seeing some bit of positivity, and your medtech becomes crucial over here with the cancer centers and the daycare centers that they're setting up, right? So Siemens, Polymedicure, two of the names that come to the top of my mind right now.
Yeah, let's see how they go. Okay, but as we hit into a break, a big thumbs up coming in from SpiceJet's top boss Ajay Singh in an exclusive chat with Sisa. He said this budget is very positive. Listen in.
I think very positive budget. It focuses on fiscal prudence. It keeps fiscal deficit at 4.4%, which is a big achievement. Spending on infrastructure, ease of doing business, simplification. I think reduction of taxes for the middle class, which should lead to greater consumer spending, will give a big boost to the economy. I think all those are big positives. Exemption of income tax up to 12 lakh rupees, I think, is the single biggest announcement of this budget, and we commend the finance minister for that.
So specific to aviation, what are the key initiatives that you see as a key positive for the sector?
As you know, the Udan scheme has been one of the most successful schemes of the Modi government, and has led to great deal of connectivity in the country. I think about 80 new airports and 80 new destinations have been added under the scheme, and the scheme has been expanded over the last few years to other modes of air travel. I think the fact that the scheme was recognized in this budget, and the fact that the finance minister spoke about adding another 120 destinations and 4 crore new passengers under the scheme is a big positive, will change air connectivity in this country, completely transform it. She also spoke about developing 50 important tourism destinations in collaboration with the states and the private sector. Again, something that was a much needed announcement, and will boost tourism, boost travel in our country, and boost employment.
All right, sir. And lastly, how does SpiceJet, looks to leverage this opportunity to expand operations? SpiceJet
has been one of the most ardent supporters of Udan. We were the first private airlines that participated in the Udan, and we will significantly expand our footprint under Udan with the announcements of the finance minister.
This is the day that shapes the future of 1 billion dreams.
From the fields of agriculture to the backbone of defense.
From ambitious infrastructure projects to everyday tax policies.
Every decision counts.
How will this budget balance growth and fiscal prudence?
What will it mean for jobs? And what will it mean for your portfolio?
Join us for the most comprehensive coverage of Budget 2025
as we decipher the impact
of this budget on you.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as... Welcome. This is Budget 2025 on NDTV Profit with what looks like a relatively shorter speech from the Finance Minister. Well, we have plenty of updates and a lot more in terms of analysis now. Well, I'm Agam Vakil and with me is Mahima Vachrajani. And we also have with us at the moment Saurabh Mukherjee. He's the founder and CIO at Marcellus Investment Managers. Harshvardhan Agarwal, President at FICCI and Vice Chairman and Managing Director of Imami. And Anand Goenka, Senior Vice President of FICCI and Vice Chairman of RPG Group. Well, good afternoon to all of you and thanks so much for joining in. Saurabh, I start with your first take on what you made and what are the key highlights for you as far as this budget's concerned.
I think this is a very different budget to what we've seen in the last 5 years. I think this is a decisive change in direction from NDA. This is the first budget in 5 budgets. The capex growth is as little as 10%. Historically, last 5 budgets has been 30%, so big pullback in capex growth. And correspondingly, this is the first time in 5 years that the RevEx growth, revenue expenditure growth, which finances subsidies, that's growing in double digits after 5 budgets. So decisive change in direction away from capex towards revenue expenditure. Obviously, as has been extensively commented, epic tax break for the middle class, something like 80,000-90,000 rupees in the pockets of middle class people will go a long way towards reviving consumption, which has been flagging in our country. And what was also interesting, leaving aside these sort of headline changes, what was also interesting was the emphasis on pro-poor, pro-SME, This is very similar to what the NDA had done in its first term, which I thought was the most constructive 5 years of NDA. NDA first term was doing terrific work. I think this looks like a return to NDA 1 rather than NDA 2, which I thought was a very different government. NDA 3, I think, has taken the message from the 2024 elections, which is look after the poor, look after the middle class. That's where the vote banks are.
Okay, Mr. Agarwal, I'll come to you, from the consumption side of things, big boost for consumption, no taxes up to 12 lakh rupees, and this is for the new tax regime, of course. And we're seeing, the consumption space picking up in the markets as well. How do you read that, and what do you make of this?
I think, the announcement in regard to the no income tax till 12 lakh rupees, I think this is a big step from the government perspective and a very welcome move. From the industry perspective, specifically even from the FICCI, we have recommended the government an area, this is an area where and how, the consumption can improve. And ultimately, more money in the hand of the consumers is certainly going to help in more discretionary spend and more consumption and better GDP growth rate. So yes, we really welcome this move.
On the capital expenditure front, the government has maintained that they're looking to spend as much as 11.2 lakh crores in FY26. What does this number mean for not just your sector particularly, but capital expenditure in general as a whole? Anand, this question was for you.
All right. No, I think this year it was at about 10.8 lakh crores. So from that perspective, there has been an increase. Certainly, we had hoped for a slightly higher increase in capital investment because of the multiplier effect that comes in. But on the other hand, I think the focus on manufacturing and number of areas that the government has focused on to promote manufacturing has been very positive, all the way from consumption towards the national manufacturing policy, promotion of exports through manufacturing, focus on future sectors such as nuclear energy, clean tech, electronics, EV batteries, all of that. I think those are areas which are seeing S-curves, and the government has chosen to bet in these areas for India to be self-reliant. So I think those are the very big positives that we are seeing on the other hand.
Right. There's a lot of things announced with respect to the aquaculture segment as well. There's government efforts to streamline the shrimp exports. There's custom duties which are being reduced. There's financial support to fisheries as well from the NABARD. There's policy incentives with respect to, duty cuts with a lot of products like frozen fish paste, etc. Saurabh, I'll come to you on this one. Which of these stocks tend to benefit from this? Which of these companies in the listed space are benefiting the most from all of these initiatives taken?
I think this sort of micro tinkering, I wouldn't lose too much sleep about that. That sort of micro tinkering is in a way the legacy of our socialist era, where the government messes around with sort of small rule changes. At least I, as an investor, am not going to lose too much sleep about that because it's simply futile. There's so much else happening in the world's fifth largest free market economy. For us to sit here on budget day and invest on the back of micro tinkering by the government, I think is doesn't make any sense. Focus on the big picture. The big picture is a decisive change in direction from the NDA, away from an emphasis on capex towards a focus on pro-SME, pro-poor and consumption. I would say focus on that. If you want to invest on the back of the budget, focus on the big structural themes in the budget rather than the nitty-gritty about shrimp farmer ke liye kya kiya and shipbuilding ke liye kya kiya and all of that. That doesn't work. It's too big an economy for us to drive.
Sure, Saurabh, point taken. I wanted a better understanding. So a lower fiscal deficit. At the moment, the capex number at what we are seeing right now, and of course, we've seen some sort of tax relief for the population at large. How is the government managing to balance this? How is it that they're going to, come through and execute on all these fronts?
Absolutely. I think the fiscal maths is actually, it adds up. I was doing the fiscal maths over the last couple of hours. The fiscal maths adds up. They're basically budgeting for around 13-14% growth in receipts, which I think should be doable. And they're budgeting for around 10% growth in expenditure. Thus, the deficit gets pulled back to 4.4%. That should give That should give the government a little bit of wriggle room to nudge the RBI towards rate cuts. The country needs rate cuts, even though the rupee is under pressure. The borrowing ecosystem, both SMEs and the middle class, need rate cuts. So the fiscal space, the budget creates fiscal space on the back of pretty solid mathematics to nudge the RBI towards the direction of rate cuts. But what's very interesting is the massive dividend from the RBI. The small print suggests, I think it's a 2.4 lakh crore dividend from the RBI. And then again, I find it very interesting. In spite of this windfall from the RBI, the government has chosen to pull back capex quite significantly, pull back capex growth rather quite significantly. So maths adds up, room for rate cuts from the RBI, and hopefully in the next couple of months, the RBI gets the rate cutting cycle underway. It's, I think, desperately required.
And Harsh, your opinion on this? So while we are looking at slacking growth, inflation really hasn't helped at the moment, especially when it comes to food inflation. What's the way forward? And while we're all hoping for a rate cut, do you think that's a possibility, at least in the near term?
I think from the industry perspective, it has been a ask and expectation that the rate cut should happen. And honestly, if you ask me, I feel very positive about it, that in the coming monetary policy announcement, we should see some kind of rate cut.
So Agarwal, one more question from the consumption side of things. Now that there's more money in the hands of people, we're seeing an urban consumption slow down overall. Do you expect that the urban consumption going forward will pick up? And if yes, will the gap between the value versus volume growth widen?
See, yes, I think the whole idea of the government also to tinker with the tax rate is to boost the consumption. And in my mind, yes, there is no doubt that it will help the consumption. But yes, to what extent, we need to wait and see. Apart from that, there are many other initiatives, which the government has taken, where they want to focus on Make in India, the focus on the employment or the labor-intensive industries, which will again, give boost to the employment. So overall, I think it's a good budget from the consumption perspective.
Come in on this. Look, I understand that the union budget is, it's not responsible to spur manufacturing activity in India. All it can do is making perhaps, 8 things going forward. Still, from the government perspective, what more can you expect going forward? Where are things standing at this moment? And do you think that we could expect more changes? Are you okay in terms of the announcements that we made in the union budget so far when it comes to manufacturing in general?
Is this for me?
Anand, this one was for you.
So I'd say that I think now the government has to act on what they have said, and as well as share the fine print details. So they have shared that they are creating a high-level committee on deregulation. That is a very positive step. If you look at the language used by FM today, a lot of language on simplification, trust, and if these things all land up in terms of real action, private-public partnerships, working with states and incentivizing states for reform. So very important directional comments made. I think we have to now see that coming into action. Even in the common man, if you look, indirect tax simplification, direct tax simplification of slabs. So a lot of talk on all of this, and that's a very positive direction and roadmap that we are looking at. And if that happens, I think it'll be great for ease of doing business in the country.
Okay, so with that, we are also joined by Ameera Shah, who's the promoter and executive chairperson of Metropolis, is joining us now. And Anant, thank you so much for giving us those insights on NDTV Profit. Always pleasure having you. Ameera, welcome to the show. My first question to you is a lot of reforms with respect to the pharma sector overall. How are you reading the budget and what do you make out of this, and how does it benefit the overall sector?
Actually, it's quite thrilling because I would say this is one of the most visible, budgets for healthcare importance in the last many years. And we've seen a bunch of reforms come out from the FM this morning, including sort of, investing in 200 cancer care centers in all the district hospitals all across the country. and recognizing that cancer is going to be one of the fastest growing diseases in the next 10 years, that this is going to be a requirement, for patients. They've also said that they're going to be removing or subsidizing the cess on all kinds of life-saving drugs, medical equipment, cancer, care, and chronic disease care or chronic illnesses care. And I think that's again going to be quite exciting because it basically facilitates a more affordable and a more comprehensive health environment for our consumers and our patients in India. Along with this, the government has also recognized that AI is going to be a significant push in the future and is investing enough money to create an AI development center really focused on education and healthcare, to really look at analytics, to really look at data that will really support India going forward. A lot of the data we have in the country is usually global, and having that kind of Indian data would be phenomenal to make things more efficient and easier for patients again. Medical tourism is another area. Our Indian hospitals have been saying for many years we are very good at what we do, and Heal in India and medical tourism is going to be enabled even more by the government going forward. So lots of exciting healthcare introductions, besides obviously the more general economic reforms, which I think are also quite interesting from what they're doing with the tax.
Amira, is there anything that you think that you were expecting it that didn't come through in the fine print at the moment, and that you were waiting for the government perhaps to take more measures in those areas, perhaps pertaining to the sector in which you operate?
One thing for sure, actually, GST has been a bit of an issue for the healthcare sector now since GST was introduced into India, where we get all the input costs and all the input taxes, but we don't get any offset because we are exempt from GST. And this lands up actually making healthcare much more non-affordable for patients and more costly. And we have been urging the government for many years to say, please put us in a zero tax bracket or a 5% tax bracket for GST, because that allows us to offset the costs. But that's something that we do miss as a healthcare industry, that has not been addressed yet. And we certainly do hope that the finance ministry will take cognizance of this, because this is something that will work towards the government's agenda of making healthcare more affordable for all Indians.
Okay, Amira, as well as Saurabh, we'll leave it at that. Thank you so much for joining us and giving us your quick take on what the union budget has brought in. But we are now in conversation with Ashish Chauhan. He's the MD and CEO at NSE. Mr. Chauhan, good afternoon, and thanks for taking the time out. Your take on the budget and your initial analysis. What have you made of it?
No, I think there are three important issues to this budget. One is the control on fiscal deficit, which is what we watch. And we have seen Prime Minister Modi and his governments over the last 11 years have always been fiscal hawks. And this budget also has kept with that tradition. That estimated 4.9% fiscal deficit for 24-25 has now become 4.8%, which is a great control over their spend and probably increase in income. And the next year, 25-26, it's going to be 4.4%. So that's telling you the trajectory on which they are going. The second part is they have also kept a lot of money in the hands of the middle class. I think up to 12.75 lakh rupees. People don't have to pay any tax, which is, I think, a very welcome move, which is going to increase the consumption, but also increase a lot of savings, which will come through the mutual funds into the market. And that's, again, a welcome move. And third part, which is also absolutely important, is the increased focus on infrastructure creation and investments, which will go up from 10.2 lakh crore to 11.2 lakh crore. And this year, financial year 24-25, the government has not been able to spend what they had estimated because of the two large elections. And that's where I think the next year, the build-up on the infrastructure will keep us in good stead in terms of the expected growth rate going forward. So overall, I think whatever could have been done, I think they have done better in terms of balancing all the objectives.
Right, Mr. Chauhan, Mahima also joining in. Now that no tax till 12 lakhs for the new tax regime, which means that more cash in the hands of these retailers and a common man. What does this mean when it comes to investment, and where do you see, with respect to the investment, which pockets do you see growing more?
If you have seen over last 10 years, the number of investors has increased from 1.6 crore to 11 crore unique investors. It's almost 7 times more. And India is becoming more middle class. And that middle class is now not only adding to consumption, which it should, with almost 50,000 to 1 lakh rupees coming into the hands of each family, but some of them also invest into the markets via mutual fund or directly. And both ways, in case they do more consumption, that is going to affect the profitability of the listed companies in the fields of consumers, durables and non-durables both, that is automobiles to two-wheelers to television to mixer grinders to everything, and at the same time toothpaste, toothbrush, soaps and everything. So overall the consumption increase will help, as well as the investment increase will help. Both ways the markets, I think, have been given more responsibility also to, and also the people have been given that money to invest or consume the way they want.
Mr. Chauhan, a final question then. Usually in your experience, and you've been in the markets and the economy for such a long time, when there is a relief when it comes to the bottom end of that pyramid, does that usually relate and does that usually translate to more financialization of savings, or do you think that that is usually used up in consumption in general, or is this a two-pronged way of going about things?
I think the traditional framework was that the more consumption, more tax relief will give you more consumption, because India was on a what I call subsistence levels up to a certain point. Now India has now become sort of investment savvy, where almost 20% of the households now directly invest in stock markets, and only 30 pin codes do not have stock market investors, which means that NSE has reached literally every nook and corner of India. And so my understanding is now at this stage of our development with larger middle class, it's going to be both not only consumption but also investments going forward. And that's what you will see. Whichever way it happens, of course, it helps markets. But in terms of going forward, you will see a lot more people coming into the markets to invest and increase their wealth, as well as that will also increase more jobs, creating a virtuous cycle going forward.
All right. Well, Mr. Chauhan, thank you so much for sharing those insights. I'm sure it's a busy day for you as well, but thank you so much for speaking to NDTV Profit. With that, let's also welcome in Preeta Reddy, Executive Vice Chairperson at Apollo Hospitals, who's joining us now. Preeta, first of all, your reading with respect to the budget, especially for the pharma sector. And a follow-up question on that, medical tourism is also in focus with respect to this budget. How big is it? And going forward, what are the expectations?
I'm so glad that the FM has announced Heal in India. India has the greatest capability for medical value travel, and we've been seeing a steady increase, 10% year on year. But I think with this added impetus and the fact that, visas have become easier, the airport landing experience is much better, and we have centers of excellence both in the public and private sector. I estimate that the growth in medical value tourism, if everything comes together well, should go up by 20%. So we have to see and we have to hope for that.
Okay. Well, Preeta, I want to talk about medical tourism specifically in this case, and of course we've had some encouragement from the union budget. What are the current trends that you are experiencing, and do you think that what's in store with this coming budget, do you think that could potentially spur a little bit more in terms of medical tourism?
So I think let's take medical tourism as, one vertical where we will see economic growth. But having said that, the fact that we're going to focus on jobs and skilling, we will be able to skill more people to allow heal in India and to heal outside of India. So I think that is also going to help. But medical tourism per se, there's an added impetus into research and AI and into innovation. So the way we do things for the best global outcomes at 10% of the cost, Now with our focus on, using AI better for healthcare, using innovation better to deliver the highest quality of healthcare, I think the world will look at India for better solutions. The world will look at India for great interventions, fantastic outcomes, and that will see a volume increase in healthcare tourism, because we're right there. We're doing everything which is globally available. So we just have to be more welcoming of people who come into our country for this kind of work. And I think the focus on that is going to help, coming together, communicating it better, making the experience better for people who land in India and come into healthcare facilities. I think this is coming together well. Also, we have our whole, focus on Ayurveda and all the other alternate aspects of healthcare, which if we have a solution for a validated solution for integrated medicine, we really have a product which is almost unmatched.
Right. Preeta, just to get perspective, right now, considering the entire space of pharma, what percentage of that is medical tourism right now? And let's say 2-3 years down the line, where do you expect that to go? How much of a growth will medical tourism bring to the pharma space?
So I think not pharma, but I'm talking about healthcare delivery space, because pharma's exporting medicines. They're export earners. But into the healthcare space, 10% of our work comes from medical tourism or medical value travel. I see that going up to 15, and we should target for 20% of our volume and our work. And I think we're quite poised to do it, because our clinical personnel, whether it's our doctors or nurses, are on par with anyone of global standards. But we're also backed now with the way we handle our data. And I think if we do this well and it is communicated to the rest of the world, I'd see a 15 to 20% in volume. So 10 going to 15 going to 20 is what I envisage in the next 2 to 3 years.
Okay, Preeta, we'll leave it at that. Thank you so much for joining us and taking us through your views here. But I am going to go across to my colleague Sajid, because he has more to tell us about this union budget. Sajid, over to you.
That's right, Agam. If you look at the union budget, it's more of a consumption-oriented budget as we look at the fine print of the budget documents. To begin with, Nirmala Sitharaman has given nearly 1 lakh crores for consumption in form of tax reductions for the middle class, and that's something which is going to bring in some kind of boost to the urban consumption, which is slowing, and the recovery which is happening in the rural consumption there. But especially in the urban consumption for the middle class, this 1 lakh crore is going to go a long way in increasing the consumption which is there. Defense outlay, there is a special mention of that 1.8 lakh crores coming in this defense outlay for FY26. That means that this is entirely a capital outlay which is going to be there, and this is a number which the street would be also focusing on, because many of the defense companies would be getting orders based on the outlay which has been laid out there. There isn't much there for the petroleum subsidies. Remember, petroleum companies were waiting for some kind of LPG subsidies to be given. There is not much of a respite for them. It seems that they may have to absorb them, or it may come in later on subsequently. But for FY26, the petroleum subsidies are much lower than FY25, and that's something which is to be there. Communication revenues, which basically include the AGR and penalty and interest, there isn't any change there, though the total allocation has come down from 1.2 lakh revenues to 80,000 odd crores, but the AGR revenues are still there with respect to penalty and interest, and it seems that once the cabinet approves it, there may be a tinkering in this number going forward, and that's something which we'll have to wait. Marginal tinkering in the fertilizer and food subsidies, so there's not much changes there. It's almost at par with what has been in FY25. FDI and insurance is sentiment positive for the sector, but there are certain restrictions that they will have to follow. But it's not going to have much of an impact for the Indian existing companies, because the guardrails are such that they have to invest the amount in India itself. They cannot repatriate the amount back from the premiums that they receive. Nominal GDP for FY26 is at 10.1%. They're looking at a tax revenue growth of 10.8%, which is a very conservative approach being taken by the finance minister. Normally, there's a multiplier effect to the nominal GDP, so the multiple is very minuscule, almost 1:1 coming for the tax GDP growth and the tax receipts which they are looking at there. And capex at 11.2 is a marginal increase to the budget estimate, but revised estimate is around 10.2. So that's nearly a 10% jump there. The street was expecting 12 to 15% jump in capex, but it's not it hasn't come in. They're looking at a very lower capex of 10.18 lakh crores for FY25 as well. The street was expecting around 10.5 lakh crores for FY25. So the capex will be lower for FY25. Based on that, there's a 10% jump which is coming in at 11.2 lakh crores. So that's some of the fine print. There are certain tax changes also which is coming in, and I'm sure Harsh will come in and talk about that as well.
Okay, Sajid, thank you so much for joining us and taking us through some of those other highlights as well. But on that note, we slip into a short break, and on the other side, we continue with all the Budget 2025 coverage. Stay tuned in, and we'll be back in just a bit.
This is the day that shapes the future of 1 billion dreams.
From the fields of agriculture to the backbone of defense.
From ambitious infrastructure projects to everyday tax policies.
Every decision counts.
How will this budget balance growth and fiscal prudence?
What will it mean for jobs, and what will it mean for your portfolio?
Join us for the most comprehensive coverage of Budget 2025
as we decipher the impact
of this budget on you.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
मां लक्ष्मी से प्रार्थना करता हूं कि देश के हर गरीब एवं मध्यम वर्ग समुदाय पर मां लक्ष्मी की विशेष कृपा रहे।
There will be no income tax payable up to income of 12 lakh rupees. In this budget, the proposed development measures span 10 broad areas focusing on Garib, Youth, Annadata and Nari. Dhan Dhanya Krishi Yojana, Developing Agri-Districts Program. A new scheme will be launched for 5 lakh women, scheduled castes and scheduled tribes, first-time entrepreneurs. We embark on a journey to unlock our nation's tremendous potential under the leadership of Honorable Prime Minister Shri Narendra Modi.
It was a promise made and a promise delivered. Definitely, this is a budget for the middle class. Markets might be coming to terms with the fine print, but the fact is that the relief on consumption has definitely come. To get a view on this, I'm joined now by Sanjay Pugalia, Editor-in-Chief at the NDTV Network. Sanjay, clearly, this is the bonanza that consumption, business, industry and the middle class wanted.
एब्सोल्युटली तमन्ना, ये बजट जो है बहुत ही मैंने अभी चर्चा की थी एनडीटीवी पे, तो ये कहा था कि आर है। इसका मतलब ये हुआ कि रिफॉर्मिस्ट भी है, रिस्पॉन्सिबल भी है और रिवॉल्यूशनरी भी है। और एक शिकायत ये है मार्केट से, जिस पर हम एनडीटीवी प्रॉफिट पे ज़्यादा चर्चा करते हैं, कि मार्केट ऐसे तो बहुत अलर्ट और तेज़ होता है, सब पहले समझ लेता है, लेकिन इस बजट को समझने के लिए फाइन प्रिंट का इंतज़ार करने वगैरह के बाद एक दिन के बाद उसको समझ में आता है। तो मार्केट का रिएक्शन हालांकि अभी ठीक ठाक है, लेकिन ये बजट मार्केट को बहुत पसंद आने वाला है जब वो लोग सो कॉल्ड फाइन प्रिंट पढ़ लेंगे।
फाइन प्रिंट के अलावा जो बड़ा बूस्ट आना है, द बूस्ट फॉर कंजम्पशन, private capex is not coming in. The complaint was that where is the consumption? The consumption push is going to be the big pivot right now, in your view?
Absolutely. तो ये बजट जो है कई सालों के बाद इतना बड़ा काम इसमें हुआ है, जहां पर कि 12 लाख रुपए तक की इनकम को टैक्स फ्री कर दिया गया है, और उसके बाद टैक्स स्लैब जो है उसमें भी काफ़ी रिलीफ है। और ये देखिए इम्पैक्ट करता है, अगर आप एग्जिस्टिंग टैक्स बेस लें तो 4 करोड़ फैमिलीज़, 4 करोड़ फैमिली का मतलब होता है, क्योंकि 4 करोड़ लोग टैक्स नहीं देते, 8 करोड़ लोग टोटल टैक्स पेयर हैं। लेकिन अब बहुत सारे लोग टैक्स पेयर बनना पसंद करेंगे, क्योंकि उनकी इनकम टैक्स फ्री हो जाएगी, और टैक्स पेयर बनना एक ज़रूरी सम्मान की बात होती है। लेकिन अब जो इससे टैक्स कलेक्शन होगा वो बहुत ठीक ठाक होने वाला है, और पहली बार ऐसा हुआ है पिछले 2 वर्ष से आप देख रहे हैं कि पर्सनल इनकम टैक्स कॉर्पोरेट टैक्स के ऊपर जा रहा है, जो आपको बताता है कि भारत की इकोनॉमिक जो पूरा जो ढांचा और स्ट्रक्चर है वो कैसे मजबूत होगा। तो ये जो गरीबों को और मिडिल क्लास को लक्ष्मी के आशीर्वाद की बात प्रधानमंत्री जी ने कही थी, उसको आप यूं समझें कि कंजम्पशन बूस्ट के लिए जो एक सबसे बड़ा काम करना था वो था टैक्स पेयर को राहत देना, सैलरीड लोगों को राहत देना, छोटे दुकानदारों को राहत देना। वो मिल जाने से अब जिस वर्चुअस साइकिल की हम बात करते हैं कि इन्वेस्टमेंट चले और उसके कारण ग्रोथ आए, उसके कारण नौकरियां क्रिएट हों, उसकी एक बड़ी शुरुआत होने वाला बैकग्राउंड बनाता है ये बजट। दूसरी इंपॉर्टेंट बात क्या है कि फिस्कल रिस्पॉन्सिबिलिटी के मामले में देखिए 4.5 का प्रॉमिस था FY 26 के लिए, निर्मला सीतारामन 4.4 पे स्टिक कर रही हैं। पूरी दुनिया कर्ज के नशे में डूबे रहती है। भारत सस्टेनेबल डेट टू जीडीपी रेशियो को मेंटेन करने के डिसिप्लिन पर है। तो ये बजट हमारे इकोनॉमिक गवर्नेंस में डिसिप्लिन को, प्रूडेंस को और रीइंफोर्स करता है। तीसरी चीज, कंजम्पशन को बढ़ाने के लिए टैक्स का ये बहुत बड़ा रिलीफ एक बड़ा रोल प्ले करेगा। सरकार ने अपना कैपेक्स भी बहुत नहीं बढ़ाया है। मार्केट में शायद कुछ लोग आपसे ये कंप्लेन कर रहे होंगे कि कैपेक्स नहीं बढ़ाया। मेरा कहना है उतना ही बढ़ाओ जितना आप एग्जीक्यूट कर पाओ, लेकिन क्या वो माहौल बना कि अब प्राइवेट कैपेक्स आए? तो उसके लिए मुझे लगता है कि शायद वो माहौल बनेगा, क्योंकि बहुत सारा सिंप्लीफिकेशन, रेगुलेटरी चेंजेस, कंप्लायंस के बर्डन को ख़त्म करना और विदेशी निवेश को लाने का काम करना जो मैन्युफैक्चरिंग को बढ़ाए, जहां कैश पाइल पे बैठा हुआ है इंडियन कॉर्पोरेट सेक्टर, वो इन्वेस्ट करना शुरू करे। उसका भी बैकग्राउंड ये बजट बहुत कन्विंसिंग ढंग से बना के दे रहा है।
इस बजट के अनाउंसमेंट के पहले एक कॉन्वर्जेशन जो हमारे स्टूडियो में हो रही थी वो ये थी कि अगर आप 2 टर्म देखें तो ये तीसरे टर्म का पहला बजट है, लेकिन है तो 12th बजट फॉर दिस गवर्नमेंट। इस वक्त अगर बोल्ड रिफॉर्म या बोल्ड मूव नहीं किया तो कब करेंगे? इन दैट कॉन्टेक्स्ट, would you call this a bold budget? Would you call this a budget which prepares India for all of the geopolitical problems that might come? We are in the middle of a tariff war. We don't know what's happening next.
Right. ये बोल्ड या बिग बैंग वगैरह ये हम लोगों के वर्ड्स हैं, लेकिन सरकार को बजट जिस तरह से बनाना चाहिए, उसकी जो सैंक्टिटी और सीरियसनेस होनी चाहिए, उसमें मोदी सरकार ने हर अगले बजट के बाद आपको सरप्राइज किया है। ये बजट उस इंटेलेक्चुअल रोबस्टनेस को बताता है जिसकी ज़रूरत होती है एक सीरियस और रिस्पॉन्सिबल गवर्नेंस के लिए। इसमें तो आपको इनको पूरे नंबर देना चाहिए। अब आते हैं दूसरी बात जो आपने कहा कि जो ग्लोबल सिचुएशन है, जाहिर है कि ट्रंप लेड अमेरिका में इतनी ज़्यादा अनप्रेडिक्टेबिलिटी रहने वाली है, जिस पर अभी तक मैं देख रहा हूँ कम चर्चा हुई है। आप गौर करिएगा कि भारत में कस्टम ड्यूटी कम करने के आज वित्त मंत्री ने बहुत सारे अनाउंसमेंट किए हैं। ये बड़ा क्लियर सिग्नल है सीधे अमेरिका, ट्रंप लेड अमेरिका को, कि भारत कस्टम ड्यूटी कम करने पर एक बड़ा मूव कर रहा है। तो आज का जो कस्टम ड्यूटी वाला मूव है ये उसी दिशा में है जो एक आपको बता सकता है कि ग्लोबल टर्मोइल में, अनसर्टेनिटी में, अनप्रेडिक्टेबिलिटी में भारत कैसे नेविगेट करेगा। इस बजट को पढ़ करके और इकोनॉमिक सर्वे का जो कुछ रिफ्लेक्शन इसमें दिख रहा है उसको पढ़ करके ये बड़ा क्लियर हो रहा है कि एक्सटर्नल अनसर्टेनिटीज़ को देखते हुए भारत अपने डोमेस्टिक प्रोग्रेस पे कैसे खड़ा रहे, क्योंकि बाहर कुछ भी हो सकता है, इस बात का ध्यान भी इस बजट में आप देख सकते हैं। जिसका कस्टम एक एग्जाम्पल है, कंप्लायंस दूसरा, सिंप्लीफिकेशन दूसरा है, इंश्योरेंस और पेंशन फंड के लिए और दरवाजे खोलना, 100% इन FDI इन इंश्योरेंस तीसरा बड़ा कदम है। MNCs यहाँ इन्वेस्ट करने में कंप्लायंस के चक्कर में बहुत डरती थी, स्पेसिफिक कमिटी और कमीशन बना दिया गया है। 50% कंप्लायंसेस कम होने वाले हैं। भारत के लोगों को भी उसका फ़ायदा मिलेगा, बाहर वालों को भी अब जो शिकायत थी वो दूर हो जाएगी। और एक आखिरी इंपॉर्टेंट पॉइंट, KYC के चेंजेस दूसरा इंपॉर्टेंट है। तो जो मैन्युफैक्चरिंग को बूस्ट देने के लिए सरकार की नजिंग, इंटरेस्ट रेट को अब वॉच करना चाहिए, और उसके अलावा फॉरेन मनी को लाने के लिए माहौल बनाना, इन सारे एस्पेक्ट्स पे काफ़ी काम हुआ है। और येस, टू आंसर योर क्वेश्चन इन अ शॉर्ट वे, ये है कि अनसर्टेनिटी को देखते हुए भारत कैसे नेविगेट करे, वो माइंडफुलनेस इस बजट में हमको तो दिखती है।
हर बजट के बाद we always look at it from market perspective, corporate perspective, and also what is the political signal in this. Lot of announcements focused on expansion in Bihar, airport, IIT, etc. Did you see any kind of that kind of aspect in this budget?
So on a lighter vein, एक हेडलाइन ये हो सकती है अखबार की या हमारे इस प्रोग्राम के इस हिस्से की, जैसे मैंने NDTV प्रॉफिट पर कहा कि RRR वाला बजट है, वैसे ऑन जनरल न्यूज़ साइड और पॉलिटिकल साइड ऑफ द बजट ये बिहार चुनाव का अनाउंसमेंट वाला बजट है और दिल्ली चुनाव के बूथ कैप्चर का बजट है। क्योंकि मध्य वर्ग को राहत और भारत नेशनल कैपिटल होने के कारण, सैलरीड एम्प्लॉयज़ का एक गढ़ होने के कारण, सरकारी एम्प्लॉयज़ का गढ़ होने के कारण एक बहुत ही इम्पॉर्टेंट सिग्नल है। तो आपने जो देखा कि आम आदमी पार्टी का जितना भी फ्री बी है उसका आप कैलकुलेशन कर लें, उससे ज़्यादा बेनिफिट आज सिर्फ एक एक्शन से, इनकम टैक्स वाले एक्शन से हर घर को दे दिया गया है दिल्ली के। इसका मतलब इसमें जो पॉलिटिकल सेगमेंट कैटरिंग जिसको बोलते हैं, और किसी भी डेमोक्रेसी में पॉलिटिकल लीडरशिप का काम होता है अपने ऑडियंस को और अपने लोगों के लिए काम करना। तो पूरे बजट में छोटे ज़िले, पिछड़े ज़िले, पिछड़े राज्य, माइनिंग, क्रिटिकल मिनरल से लेके न्यूक्लियर पावर और मखाना बोर्ड, तो ये पूरा बजट जो है आप देखेंगे कि भारत की हर ज़रूरी आबादी जिसकी ज़रूरत ज़्यादा है उस पर ध्यान रख करके इस वक्त के जो कंटेम्प्रेरी रिक्वायरमेंट है उसको एड्रेस करने की कोशिश की गई है। तो ऑफ कोर्स पॉलिटिकल इकोनॉमी तो कोर होता ही है किसी भी बजट का।
Thank you so much. Sanjay Pugalia there, Editor-in-Chief of NDTV Network, with his take on the budget. Ticks all the boxes. And Harsh, Somit, this is exactly what you're seeing, and markets are now recovering from its lows and catching up.
Yes, we are. We've in fact just turned back into the green. If you can pull up the chart on the Nifty intraday. But there's plenty of gray area still left, and we'll try to bridge some of that very, very quickly. We also have Mayur Shah joining us, tax partner EY India. Mayur, just with regard to taxability on ULIPs, what, if you can just detail it down, what was the provision as of yesterday? If you can first explain that. Thereafter, I'll come to the change, just for clarity.
Sure. So, any investment made through ULIP, what used to happen if premium is less than 10% of the sum assured, then it was eligible for exemption under section 1010DD. That would mean that on maturity, whatever value is being realized was not subject to tax at that point in time. Now what is happening is that under the current or what is being proposed, that now any amount being withdrawn from ULIP would be subject to tax. Now it will be subject to tax as capital gain. So to that extent, instead of 0%, now you can look out for 12.5%. Is what really is going to happen going forward basis.
But is there a certain segment of policies which will continue to avail exemption?
So other than ULIP policies, all policies will be able to avail the benefit of it subject to the threshold or conditions which they are required to comply with.
Got it.
Right. But sir, don't you think that the fact that the government is now pushing for the new regime, they have increased the rebate limit to 12 lakh, this would be detrimental for the insurance sector, because a lot of people used to buy policies to avail the tax benefit?
That's true, but in new regime, anyway you are not entitled to any deductions on account of it, because earlier insurance policy, any premium paid was available under 80C, which is available under old regime but not under new regime. And people used to calculate tax basis whether old is better or new is better. Now anyway, old regime is kind of redundant. I mean, it will die natural, that it also depends upon the break-even is always dependent on income and deductions. But majorly, if your deductions are up to between 7 to 8 lakhs, you will find old regime is better, but otherwise it is not.
Right.
So in that situation, I don't think at least middle class people will be able to avail old regime benefit. And to that extent, your statement is right, whether for tax saving, but anyway, they are not required to pay tax up to 12 lakhs, so there is no question.
Right.
So, and the other aspect is that, look at the rebate 12 lakhs. What they are saying, any income which is subject to tax as capital gain at a special rate, then on that rebate is not available. Which would mean that now on policy realized by such person will pay at least 12.5% tax on such income.
And you will not get a deduction either.
Yes.
In your income tax, because under the new regime, 80C deduction is not available as per the old regime which was available. So it's a double whammy of sorts, especially when you're looking at people who were part of the old tax regime.
Yeah, it's like a give and take. You give some benefit and it's a major benefit, and they have taken away a very small portion of it.
Right. Well, thank you, sir, for joining us and giving us all those information. Let's also get in Sandeep Tandon, the founder and CIO of Quant Capital. So, sir, firstly to start off with, what is your first analysis of the budget? Are you seeing this as a clear positive coming in from the government side, fact that they are giving more boost to consumption rather than capex?
Frankly, it is on a quite expected line that would need of the hour. Okay, so it is quite growth-centric budget. And we were looking for to increase the consumption, and marginal at the cost of marginal capex. Okay, in fact, the capex is also not gone down. If you look at the capex related to the grant, if you add, which is like 3 lakh has become 4.3 lakhs crore. So effectively means the overall capex, which was like 4.1% of GDP, has now become 4.3% of GDP. Okay, so I think it is that side. I'll say a lot of people have ignored it. That is also quite constructive. And given the consumption which was struggling and overall Indian economy is struggling, I think it is a step in right direction. And we think it's a great budget given the background which was required.
Right, sir. But, sir, in this budget, we have not seen any major fillip or major push towards manufacturing. Do you see that as a disappointment?
See, sometimes you have to look at that last many years, the flip was always focus was there on the manufacturing through PLI scheme or various incentive which was given. Right now, what was, if you look at last 6 months, particularly from July 2024, Indian economy was struggling. Okay, consumption was declining. So I think that was a need of the hour. You have to boost the consumption thing. And I think they have done by tweaking a small bit on the taxation side. I think it's a good incentive. And ultimately, if the consumption moves up, it will get compensated up to a certain extent through GST route, and indirectly you are saying manufacturing activity should only increase because consumption should rise. So that was the key thing which was missing. So anyway, indirectly manufacturing will be beneficiary of that.
Okay, Gautam Shah, let me come to you. What's your first take on the budget? Let's start with that.
Well, I totally concur with what Sandeep ji said. I think it's a step in the right direction. There was a bit of a consumption deficit and a confidence deficit from a market's perspective, and I think the government has done a phenomenal job to address the same in these last few hours. I think the fact that the markets are in the green and the fact that we've recovered about 700 points from the recent low, I think just tells you that the market is a lot more confident now. And remember, India went a little off track in the last 4 months because of our own problems. So the government and the RBI governor had a task at play. The government's job has been done pretty much to a larger extent today. And next week, if the RBI policy is also a little more economy and market friendly, I'm pretty sure both the job will be done, and that will help gain a lot more confidence for the stock markets. So I just feel that this was the need of the hour, and the government has really hit the nail on the head, and hopefully the markets will realize that, and we will be back in action aligned with the rest of the world.
Some key levels to watch out for this week. We've of course done a deep dive with regard to how in each of the last 4 to 5 years and budgets, how markets have reacted. What's your sense for the week, for the coming week?
You know, just a few days back, the environment was so pessimistic and there was just no room for hope. We were at 22,800. We saw pretty much a bear market in the broader markets. The average decline in the NSE was about 28%. And now with the budget developments and with the way markets have come back and the fact that we are sustaining above 23,500, I would really read it positively. And if we can sustain above this number of 23,500 for a day more, maybe on a Monday when FIs are going to be back in full action, I think there is a room for 4-5% upside for the indices easily. But the bigger theme here is not to play short term, play the India story from a longer term perspective. I think from a 12 to 18 month perspective, current levels offer great value, great margin of safety, and great confidence for Indian investors.
Right. Sandeep sir, coming back to you, some positive statements that we have seen when it comes to tourism and the nuclear sector. Are you excited to buy these themes now?
See, we are quite overweight in this space. If you look at our portfolio, we could be one of the mutual fund with a very large holding in hotel stocks. Okay, at least 4 stocks we own close to 4 to 5% of the company. So that's a clear indication we like this space, both hotel and hospital. And the hospital as a space, hospital has already been recognized. I think hotel is picking up. I always describe how the real estate sector got built in last many years. Something similar is happening in the hotel space with ITC also now getting listed. The basket is pretty meaningful. So anyway, we are very constructive and government has given the desired push. So we remain equally bullish about this space from a medium to long term perspective.
Plenty of ways of playing various themes, Sandeep. I want to try and first off understand, FMCG is the one big push that this budget has got. How would you like to play this theme? Where will incomes flow first?
be very candid, we are quite bullish on this space. We have more than 15 to 18% all exposure in this space already. And this is one sector I generally give example. Okay, this was like erstwhile admired category stocks of FMCG. And in last few months, they have hit they have reached the neglected space, or some of the stock have reached even the most hated zone also. So it's a classic inflection points what we try to identify when you look for a buying opportunity. I think the entire sector is really fit the whatever needs point of view, and obviously budget has given the desired fillip. So I think it's the sector which is not cheap in any manner. It has been always expensive space, but it will remain expensive given the growth rate which we are expecting from longer term perspective, irrespective of the challenges which we have seen in last few months or maybe few quarters. I think that is settling down. So this is a one area, because a lot of under ownership still exists in this space. And if you really ask me, people actually hate this space, And so I think I am looking for all neglected and beaten down names or erstwhile admired category stock, which now in the neglected zone should be a buying opportunity, and FMCG fit the bill perfectly.
Right. And Gautam, any other theme except consumption that stood out for you, or is looking good on the charts?
Well, I think do not forget that the FMCG index lost about 22% in a matter of a few months. It's never had happened in its history of the last 15 years. And I think FMCG is a mirror of the economy. Maybe there was a problem, the markets realized it, and that's probably the reason FMCG stocks came off quite a bit. Now we've seen lovely basing, and I think the turnaround looks for real, and clearly there is a lot of value and margin of safety in the entire basket. Yes, they are expensive, they will be expensive, but I think they've come to a point where the risk reward is in your favor. Another basket that we like, and we've been talking about it all along, is financial services. I think with banks, NBFCs and insurance companies, you just can't go wrong. I think in terms of valuations, in terms of charts, and if the bank Nifty were to cross the level of 50,000, which is an important barrier and hurdle, I think we could see a largish 10 to 15% move on that index. So financial services, auto, FMCG would be my top three picks at this point of time.
Okay, Sandeep, going to come back to you very quickly. While I appreciate the need for prudence and also compliment the finance ministry for sticking to that, but the one key problem has been that capex has not come in a big fashion in this budget. Of course, compared to 5 years ago, capex, the bases are completely different, but the growth has tapered sharply. FY25, we're going to see degrowth. FY26, we're just going to revert back. Is that a disappointment for you, or do you view this differently, given that consumption was the focus in this budget?
I think, as I described in the beginning itself, it is not fair to say that capex has not grown, because if you look at the grant aspect also, which you cannot ignore, because we look at the total aspect, and which has actually increased only. As I said, it is the capex which was 4.1%, now become 4.3%. So that's the first point. Second important, what you have to look at, if the government is very keen to maintain the physical discipline, okay, obviously then space is very limited. You can't do both the things that you boost the consumption also by compromising on the tax aspect, and then simultaneously you continue with the massive capex. So I think some sort of popular step definitely is there's a populist budget in that sense, keeping in mind some of the elections also. But I think it is very important what was the need. I think it required, I've said in one of the channel in the morning, at the cost of fiscal deficit also, if our government has to boost the consumption, they should do it. Because a larger interest, that's the way we should play this game. I think something has happened in COVID time also. The fiscal deficit went to 9% and then 6.5%, and now we are back to 4.5% or 4.48%. So I think it is the one has to adapt the environment, what is prevailing right now in the global market and Indian macro particularly, which has been deteriorated. I think it's a step in right direction. Even let's say it comes at the cost of marginal capex, I think is good.
Okay, last question from my side, Sandeep. Firstly to you, how would you rate this budget out of 5?
I think 4.5.
And Gautam, how would you rate it?
I would definitely give it a 4 out of 5.
Cool, thank you.
Okay, gentlemen, it's always great chatting with both of you. Please stay with us. We're going to slip into a very short break. Stay tuned to NDTV Profit. More on the other side.
the day that shapes the future of a billion dreams.
From the fields of agriculture to the backbone of defense.
From ambitious infrastructure projects to everyday tax policies.
Every decision counts.
How will this budget balance growth and fiscal prudence?
What will it mean for jobs and what will it mean for your portfolio?
Join us for the most comprehensive coverage of Budget 2025
as we decipher the impact
of this budget on you.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with.
All right, it's the big day and a big budget, and PM Modi will be speaking on the budget shortly. So, of course, we will talk about that. But need to highlight what's happening in the markets as well. And we've done that all through. But I think we haven't done a serious market check in a while. So this is what's beautiful, right? The markets have recovered the losses. Something that Mr. KK Mistry was saying, that it's not technically a very disappointing budget because a triangle, if you draw a triangle of the three key things, I think the FM ticks marks on almost all of those. IT was sulking big time in trade. Should bring up IT and see if it's still down about 1.5% or has it recovered a bit of lost ground. No, 1.5%. And capital goods were very, very wobbly. I wonder if those stocks are still sulking. So BSE Cap Good Index still down about 3.5%. So those are still sulking. But banks have recovered a little bit of lost ground. Mid caps and small caps which had seen a sell-off also maybe slightly off. And let's get the heat map. Look at this, the bounce from the lows of the day. In fact, the small cap index in the green. Let's get the heat map up on the screen before I hand it over to Tamanna for what's happening at the broader end. Consumption all through and through. 8% higher. And I'll come to Maruti in just a moment before I give it off. Tata Consumer 4% higher. iShares 3%, 4%. Britannia 3.5%. All auto, all consumption. Look at that. It's just that picture which is doing well. What's not doing well? L&T, BEL because of the capex disappointment. Insurance companies because of the insurance disappointment. Both sector 10D as well as the new income tax slabs or the new tax regime looking so attractive. Why would people give money into an insurance company ULIP plan for saving tax? Okay, let's get across to PM Modi.
एक महत्वपूर्ण पड़ाव है। ये 140 करोड़ भारतीयों की आकांक्षाओं का बजट है। ये हर भारतीय के सपनों को पूरा करने वाला बजट है। हमने कई सेक्टर्स युवाओं के लिए खोल दिए हैं। सामान्य नागरिक विकसित भारत के मिशन को ड्राइव करने वाला है। यह बजट एक फोर्स मल्टीप्लायर है। यह बजट सेविंग्स को बढ़ाएगा, इन्वेस्टमेंट को बढ़ाएगा, कंजम्पशन को बढ़ाएगा और ग्रोथ को भी तेजी से बढ़ाएगा। मैं वित्त मंत्री निर्मला सीतारमण जी और उनकी पूरी टीम को इस जनता जनार्दन का बजट, पीपल्स का बजट, इसके लिए बहुत बहुत बधाई देता हूं। साथियों, आमतौर पर बजट का फोकस इस बात पर रहता है कि सरकार का खजाना कैसे भरेगा, लेकिन ये बजट उससे बिल्कुल उल्टा है। लेकिन ये बजट देश के नागरिकों की जेब कैसे भरेगी, देश के नागरिकों की बचत कैसे बढ़ेगी और देश के नागरिक विकास के भागीदार कैसे बनेंगे, ये बजट इसकी एक बहुत मजबूत नींव रखता है। साथियों, इस बजट में रिफॉर्म की दिशा में महत्वपूर्ण कदम उठाए गए हैं। न्यूक्लियर एनर्जी में प्राइवेट सेक्टर को बढ़ावा देने का निर्णय बहुत ही ऐतिहासिक है। ये आने वाले समय में सिविल न्यूक्लियर एनर्जी का बड़ा योगदान देश के विकास में सुनिश्चित करेगा। बजट में रोजगार के सभी क्षेत्रों को हर प्रकार से प्राथमिकता दी गई है। लेकिन मैं दो चीजों पर ध्यान आकर्षित करना चाहूंगा। उन रिफॉर्म्स की मैं चर्चा करना चाहूंगा जो आने वाले समय में बहुत बड़ा परिवर्तन लाने वाले हैं। एक, इंफ्रास्ट्रक्चर स्टेटस देने के कारण भारत में बड़े शिप्स के निर्माण को बढ़ावा मिलेगा, आत्मनिर्भर भारत अभियान को गति मिलेगी। और हम सब जानते हैं कि शिप बिल्डिंग ये सर्वाधिक रोजगार देने वाला क्षेत्र है। उसी प्रकार से देश में टूरिज्म के लिए बहुत संभावना है। महत्वपूर्ण 50 टूरिस्ट डेस्टिनेशन, वहां पर जो होटल्स बनाएंगे, उस होटल को पहली बार इंफ्रास्ट्रक्चर के दायरे में लाकर टूरिज्म पर बहुत बल दिया है। इससे हॉस्पिटैलिटी सेक्टर को, जो रोजगार का बहुत बड़ा क्षेत्र है, और टूरिज्म जो रोजगार का सबसे बड़ा क्षेत्र है, एक प्रकार से चारों तरफ रोजगार के अवसर पैदा करने वाला एक क्षेत्र को ऊर्जा देने वाला काम करेगा। आज देश विकास भी, विरासत भी, इस मंत्र को लेकर चल रहा है। इस बजट में भी इसके लिए भी बहुत महत्वपूर्ण और ठोस कदम उठाए गए हैं। 1 करोड़ पांडुलिपियों के लिए संरक्षण के लिए, मैन्युस्क्रिप्ट के लिए ज्ञान भारतम मिशन लॉन्च किया गया है। साथ ही भारतीय ज्ञान परंपरा से प्रेरित एक नेशनल डिजिटल रिपोजिटरी बनाई जाएगी। यानी टेक्नोलॉजी का भरपूर उपयोग किया जाएगा और हमारा जो परंपरागत ज्ञान है उसमें से अमृत निचोड़ने का भी काम होगा। साथियों, बजट में किसानों के लिए जो घोषणा हुई है वो कृषि क्षेत्र और समूची ग्रामीण अर्थव्यवस्था में नई क्रांति का आधार बनेगी। पीएम धन धान्य कृषि योजना के तहत 100 जिलों में सिंचाई और इंफ्रास्ट्रक्चर का डेवलपमेंट होगा। किसान क्रेडिट कार्ड की लिमिट 5 लाख तक होने से उन्हें ज्यादा मदद मिलेगी। साथियों, अब इस बजट में 12 लाख रुपए तक की आय को टैक्स से मुक्त कर दिया गया है। सभी आय वर्ग के लोगों के लिए टैक्स में भी कमी की गई है। इसका बहुत बड़ा फायदा हमारे मिडिल क्लास को, नौकरी पेशे करने वाले जिनकी आय बंधी हुई है, ऐसे लोगों को, मिडिल क्लास को इससे बहुत बड़ा लाभ होने वाला है। उसी प्रकार से जो नए नए प्रोफेशन में आए हैं, जिनको नए नए जॉब मिले हैं, इनकम टैक्स की ये मुक्ति उनके लिए एक बहुत बड़ा अवसर बन जाएगी। साथियों, इस बजट में मैन्युफैक्चरिंग पर 360 डिग्री फोकस है, ताकि एंटरप्रेन्योर्स को, एमएसएमईज को, छोटे उद्यमियों को मजबूती मिले और नई जॉब पैदा हो। नेशनल मैन्युफैक्चरिंग मिशन से लेकर क्लीन टेक, लेदर, फुटवियर, टॉय इंडस्ट्री जैसे अनेक सेक्टर्स को विशेष समर्थन दिया गया है। लक्ष्य साफ है कि भारतीय प्रोडक्ट्स ग्लोबल मार्केट में अपनी चमक बिखेर सके। साथियों, राज्यों में इन्वेस्टमेंट का एक वाइब्रेंट कॉम्पिटिटिव माहौल बने, इस पर बजट में विशेष जोर दिया गया है। एमएसएमईज और स्टार्टअप के लिए क्रेडिट गारंटी को दोगुना करने की घोषणा भी हुई है। देश के एससी, एसटी और महिला जो नए उद्यमी बनना चाहते हैं, उनको 2 करोड़ रुपए तक के लोन की योजना भी लाई गई है, और वो भी बिना गारंटी। इस बजट में न्यू एज इकोनॉमी को ध्यान में रखते हुए गीग वर्कर्स के लिए बहुत बड़ी घोषणा की गई है। पहली बार गीग वर्कर्स का ई श्रम पोर्टल पर रजिस्ट्रेशन किया जाएगा। इसके बाद इन साथियों को स्वास्थ्य सेवा और दूसरी सोशल सिक्योरिटी स्कीम्स का लाभ मिलेगा। ये डिग्निटी ऑफ लेबर, इसके प्रति, श्रम एव जयते के प्रति सरकार के कमिटमेंट को दर्शाता है। रेगुलेटरी रिफॉर्म से लेकर फाइनेंशियल रिफॉर्म्स, जन विश्वास 2.0 जैसे कदमों से मिनिमम गवर्नमेंट और ट्रस्ट बेस्ड गवर्नेंस के हमारे कमिटमेंट को और बल मिलेगा। साथियों, ये बजट न केवल देश की वर्तमान आवश्यकताओं को ध्यान में रखता है, बल्कि हमें भविष्य की तैयारी करने में भी मदद करता है। स्टार्टअप के लिए डीप टेक फंड, जियोस्पेशल मिशन और न्यूक्लियर एनर्जी मिशन ऐसे ही महत्वपूर्ण कदम है। मैं सभी देशवासियों को एक बार फिर इस ऐतिहासिक पीपल्स बजट की बधाई देता हूं, और फिर एक बार वित्त मंत्री जी को भी बहुत बहुत बधाई देता हूं। बहुत बहुत धन्यवाद।
All right, that was Prime Minister Modi talking about the people's budget, and it truly is one. Now, before we get our special piece on telecom, I'm going to quickly go across to the conversation my colleague Shimi Chaudhary is having with Sanjeev Puri at CII.
Human capital development. Very strong focus on innovation in infrastructure, and at the same time a lot of very clear messages on reform, collaboration with the states, incentivizing states, because a lot of reforms have to happen at the state, setting up the high level committee to create the vision. I think these are great ideas, and also the budget provides impetus to consumption by relief provided to the middle class on income tax, I think the social security to the gig workers, of course, all the other employment generating activity and productivity in agriculture in itself will also feed into employment and therefore consumption. But these are things that are likely to impact in a much shorter span of time.
Yeah, to summarize, they touched upon all these sectors, you know. So coming to you, Mr. Raval, I wanted to understand from you that how you seeing these, decision, particularly in the, manufacturing sector as well as infrastructure sector. Do you think those measures are kind of, help these sectors to sort of grow further, because we have seen decline in the current fiscal year? What's your take on that?
No, I think, the core spirit, right, if we are looking at a 25-year-old growth plan for a country, is for all of us to be aligned together. I think, the fact that the finance minister, mentioned that, there will be a trust-based regulatory discussion, to be able to build for the future.
Trust first, scrutiny later. That's what she advocated and said also.
No, what basically it is that, if you really want to grow to be the third largest economy, we need a 7-8% growth, like what you rightly said. And maybe whatever we do, that 5-6% will come. But it's that additional 2%, right, which is going to be, needed, especially when it comes to manufacturing and all the areas that you talked of, infrastructure. Today, the infrastructure actually also talking of a public-private partnership, right? I think that to me was a big takeaway, that the collaborative process by way of which one can build for the future, I think is very, very important, and that came out. Now, how well it gets implemented and how are we able to, actually take it to that level is something, that we will see. The second big point here is, the entire aspect of investing in people, economy and innovation, right? Because that is going to be a big driver, because eventually, it's the young people of this country that are going to, create a lot of change, a lot of skilling that came up for that, and deep tech, the 20,000 crore. But at the end of the day, if you go to see, the investment in those areas have to be much deeper for us, because Gen AI, for example, is impacting manufacturing. It's impacting every sector. Just a few days ago, we saw $600 billion market cap being wiped out in one day in one company. True. While we have allocated 10,000.
All right, that's a CI view, and we'll keep on getting big views. By the way, Kush Bora and Parag Thakkar also in the studio. But very quickly, and we're going to Mr. Nilesh Shah in moments from now. But very quickly, markets deserve a mention. We were talking about how telcos and some stocks have spiked up. Somit Sarkar joins in for a quick perspective here. Somit, there's a lot of talk around the assumptions around AGR dues and they being lower, which means that will the government get some relief or some stocks will get relief? What's your quick thought here?
Well, at least in the budget document, the government has not factored in for any AGR relief to come in. Now, yes, we are seeing a decline in the telecommunication receipts from 1.2 lakh crore to around 82,000 crore rupees. But that is because in the last financial or in FY25, government has budgeted for some spectrum revenue to come in, which they had given to the railways, and hence the amount has spiked up to 1.2 lakh crore rupees. Now, the 82,000 crore rupees, the amount that we are seeing for FY26, factors in the AGR dues as well. Now, out of this 82,000 crore rupees, 30,000 is for the normal recurring revenue that they get from license fee. 25,000 crore rupees is for Vodafone Idea's contribution towards AGR. 10,000 crore is towards Bharti Airtel's contribution towards AGR, and 20,000 crore rupees is Jio's contribution towards AGR for FY26. So nothing has been factored in, as in no AGR compensation has been factored in for the FY26 numbers at least.
Important clarification for people who trade Vodafone Idea and some of the telcos. There is no benefit out here. So please understand that. And Somit, thanks for putting that into perspective. Okay, a special guest, Mr. Nilesh Shah, MD of Kotak Mahindra Asset Management, with us on the show. Nilesh bhai, great having you. Thanks for joining in. What did you make of this budget? Because in some sense, we thought that if there is a troika of three key things, right, which is capex and some bit of moderation there, but fine, still a 10% growth on the revised number, fiscal deficit or money in the hands of the consumer or the taxpayer, more importantly, everything has been done.
That is what was expected out of the budget, and that has been delivered. It's a Triveni Sangam of fiscal prudence, boost to urban consumption, and maintaining the path of capex so that budget could become growth oriented. So whatever was the expectation has been delivered in this budget.
Okay. Mr. Shah, Tamanna here. The Triveni Sangam is exactly what has happened, but for one section of investments. I'm just trying to understand from an investment point of view, ULIPs become less attractive old tax regime becomes less attractive. What does this mean for people who now will have more disposable income, will hopefully invest it apart from all of the consumption that will take place?
So Tamanna, you have given me a very low ball, and I'll try to hit out of the stadium. Please keep your insurance and investment separate. You need to take term insurance and buy mutual fund. That's the best if you are ever going to get.
I set it up perfectly for you.
If there was a 12, he got to hit a 12.
Not even a 6. Okay. No. But having said that, the big ask was boost consumption, the economy will come in. And then there was one school of thought, I think, before the budget saying that, let's not get hung up on 4.5% fiscal deficit, 4.9% fiscal deficit. Let's spend and grow and, boost the economic growth. Which camp are you in now that we have seen the budget presentation?
So I think it's always better to be fiscally prudent. No parent wants to live debt to their kids. Why should government be different? There is compelling case for doing capex and ignoring fisc situation in a crisis like COVID-19. But in a scenario like today, where growth is still one of the highest in the major economy, I think we should go to the path of fiscal prudence. It's far better to build a house when it's not raining rather than try to build a house when it is raining.
Okay. Thank you so much, sir. Always a pleasure speaking with you. Thanks for coming in and chatting with us. I want to also bring on board, opportune time in fact, to bring on board Vivek Lohia, Managing Director at Jupiter Wagons, to talk to us about, well, what everyone's talking about as a possible miss being capex. Vivek, how do you view capex in this budget in particular? And do you believe that there's been a slight bit of a miss on that count?
I think you're
Vivek, believe you're on mute. Yeah.
Yeah, sorry. Good afternoon. So when it comes to railway capex, I think the government has been very steadfast. And what we have seen in this budget also, that on the core areas such as track infrastructure, there is, I think, overall the capex budget is for railways has gone up by about 30%. And the focus has been on track infrastructure. And if you see the railways, the revenue forecast, I think they have forecast the freight revenue to go up considerably, which is quite positive for us. Because as the infrastructure build continues and as the freight revenue grows, that means would be more demand for rolling stock. Yes, so the government had to balance things out. I think fiscal prudence also was a key decision because as you are aware that we are now, if you look at the global economy, especially look at the way the American economy is going to go ahead, there is going to be a reduction in interest rates. And I think here also for the capex cycle to boost, and especially for the MSME sector, the interest rates needed to come down. And I think through fiscal consolidation, it would give room for RBI to, in near term, to reduce the interest rates. And I think that would also generate capex spend from the private sector.
That's true, Mr. Lohia, but in terms of what the capex has been and the propensity to spend, from that perspective, how do you see the announcements in the budget working out for you specifically? Do you see that, are you concerned that there might be any slowdown in order book, etc., or do you see no worries there?
So on the railway rolling stock side, I don't think, because as I have told you, there has not been much tinkering with on the railway budget. I think outside of the budget also, if you see, there has been, if you look at the last 6 months, there has been a lot of announcements on various freight corridors, as well as on the passenger rolling stock. I think the focus has been on declogging the entire infrastructure So I think that is the key in on the railway side. And I think that, and then, the boosting consumption. As the consumption grows, that means it will has a direct impact on the logistics sector. So I think that also will give a boost to the sector. And for us, besides the railway, again, right now we are venturing very strongly into the EV space on the battery, as well as on we are just about to launch our EV trucks. I think there we have seen a significant thrust from the government, especially to reduce the cost of lithium-ion batteries. And as these costs come down, you will see a lot of parity coming with ICE vehicles, I think, which is a strong boost to the sector. Plus, now what we are seeing is the railway is also very focused on going green.
Sure.
So now
sure. No. So EV
participating-
definitely there. Big boost for EV. Big boost for Make in India. But I'm just looking at it from the point of view of what the street has seen, and the allocation for rail is not what was expected. But nevertheless, this is one day and the first reaction from a street perspective. Thank you so much, Vivek Lohia, for speaking with us, Managing Director of Jupiter Wagons there. But look at the rest of the rail pack this afternoon. RVNL 8% down. IRCON also hurting. RailTel, IRFC, Titagarh, Jupiter also. All of those there in the red. Parag Thakkar, Kush Bora is back with us. This is the dream team that started the budget off this morning, and after what's seeming like several hours and so much coming in. Parag bhai, let me come to you. Let me come to you on what was the good, bad, and maybe not really ugly, but surprising.
First of all, with disclaimer, I can tell you that it is good for our portfolio because because we have HUL, ITC, TVS Motors, Mahindra in our portfolio, and the consumption boost is most welcome. And we were not so much into defense and railways in our portfolio. Of course, we have L&T. So just a disclaimer that all these stocks we have in the portfolio, and so we are benefiting due to this consumption boost. And as we were discussing in the morning, that was my view, right? That the government has done enough on the capex side. Now I think with fiscal deficit target coming to 4.4%, RBI has more headroom, right, to do something on 7th, to infuse more liquidity into the system. And government, instead of crowding out the investment, crowding out the money, I think more deposits will be now available to banks, and private sector capex will start because of the demand pickup.
How much of a rate cut are you expecting on the 7th?
No, so basically I will praise for liquidity increase rather than a rate cut directly. Because if you increase liquidity in the system, deposits will grow. Deposits will grow, that will grow, help in growing advances, and that will reduce the real interest rate in the system.
Yes. But sir, that's going to take time.
No, but see, if you increase the liquidity in the system, or straight away it reduces that craving for deposits, or the deposit war which we are seeing right now.
I'm just feeling the weight of pressure right now that Governor Malhotra must be feeling. At least if he was viewing NDTV Profit.
Government is what the talk is.
Yeah. Because they have delivered. They have delivered
the past there now.
And the last thing, sorry, just before taking Kush's ideas, the March is here. Liquidity, something needs to be done.
It can't
absolutely. It can't wait. Kush Bora. Not a bad day except for cap goods. If you are an L&T investor like Mr. Parag Bhai, but stock ideas. What is it that stood out for you? Would you trade the index as well? Very quickly, Kush.
No. I told you so. Colgate and Maruti, two stocks that we discussed, both hitting 4-5%, upsides, almost hit the second target. But what's important is that the other two sectors which we sounded caution on, which was railways and defense. Any disappointment, and we're seeing what's happened, right? Just to come to the index very quickly. This budget has done nothing to change my view that the 23,800, 24,000 target that we've been speaking of for the last, 7-8 days, maybe 10 days, is still very much intact. And I think if you really want to take a more aggressive bet, go with the Bank Nifty. 50,000 is an interim target. I think the upside could be as high as 51,000 as well, depending on what the governor does. But still, as I said, nothing changes for me in terms of the recovery rally. 24,000 on the Nifty and about 50,000 plus kind of moves on the Bank Nifty.
Okay, we'll take in stock ideas from Kush on the other side of the break. So that's the teaser here, but just something that Puneet told me, and this is outstanding from a Maruti perspective. He checked the Vahan data. Maruti retail sales have been higher than Maruti wholesales for the month of January.
Oh.
which means inventory cleanup, and there was only 9 days of inventory. It doesn't usually happen that retail is higher than wholesale. Maruti is not only sold well, they've cleaned up the inventory, so to say, which means it sets the stage for February and March to be strong as well.
Okay, so
this
you're
is very important.
getting a consumption push, and things have begun to pick up.
Exactly.
So you might see that.
This is what genius Mr. Sudarshan Venu pointed out in Davos. That he is seeing double-digit growth for this year for two-wheeler industry, and he'll outpace the industry.
Yeah, this is insane. Okay, we'll take a very quick break, come back and talk more, including some stock ideas. Stay tuned.
This is the day that shapes the future of a billion dreams.
From the fields of agriculture to the backbone of defense.
From ambitious infrastructure projects to everyday tax policies.
Every decision counts.
How will this budget balance growth and fiscal prudence?
What will it mean for jobs, and what will it mean for your portfolio?
Join us for the most comprehensive coverage of Budget 2025
as we decipher the impact
of this budget on you.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
This is the day that shapes the future of a billion dreams.
From the fields of agriculture to the backbone of defense.
From ambitious infrastructure projects to everyday. We started off with the premise of whether Budget 2025 will accelerate India. Well, it definitely will. Markets still in two minds on what the reaction should be on the budget, and that's showing with the volatility that you see on the charts. But now for a view from Vijay Kedia, individual investor. Kedia ji, बहुत-बहुत स्वागत है आपका, and we were waiting to hear your take on all of this. What have you got in mind? अब तक आपका मतलब composition, dialogue सब prepare हो गया होगा?
नहीं अभी कुछ प्रिपेयर नहीं हुआ है मैडम। अभी समीक्षा कर रहा हूँ बजट की।
समीक्षा कर रहे हैं। अच्छा, आपके टॉप 3 पॉइंट्स क्या है? Was the income tax relief a positive surprise for you, or was it expected?
No, of course it was not expected. I also never expected that it should be above 10 lakh. So it was a really great surprise, and it is a good reform, you can call it, after GST and all. And of course, as the finance minister has said, that it will be 1 lakh crore will come into the system and all. It is certainly no doubt going to increase the consumption, and this is what we are seeing in the performance of many stocks related to FMCG and consumption and also. But overall, this is a good thing, no doubt about middle class and all. People like you and me will be benefited. But one thing I would like to tell you, ma'am, in this $4 trillion economy, this is very small money. This is not going to take the market to a new high. If you think that this is going to be a game changer for this market, so far stock market is concerned, economy is different here. And so if you think that this market is going to touch a new high on this, reform or on this policy? I don't think so. I have my own doubts.
ना विजय जी, जैसे आपने अपने आप को मिडिल क्लास में डाल दिया, वो हमने नोटिस किया कि यू नो इट्स नॉट
भाई अभी मुकेश भाई के साथ खड़े रहते हैं, अपने कोई क्लास ही नहीं है भाई। अभी आप सोचिए ना, अभी किधर अंबानी अदानी जी के साथ खड़े होते हैं,
वो तो ठीक है,
कोई क्लास नहीं है।
But can you explain कि why is market so iffy about it? Because sticking to fiscal deficit, fiscal discipline is a good thing. Yes, the capex number is not as high as was expected, but it also has to be realistic on how much you can spend. Government was unable to spend last year.
तो इसी बोलकर शायद उन्होंने फिर जो दूसरे साल का जो कैपेक्स है वो भी उन्होंने कम कर दिया, 10% कम कर दिया इन्होंने। तो हम जो बातें कर रहे हैं दैट वी वांट टू बिकम $30 trillion इकोनॉमी, $40 trillion इकोनॉमी एंड ऑल दिस थिंग्स, इट इज गोइंग टू हैपन ओनली इफ यू थिंक समथिंग व्हिच इज अनएक्सपेक्टेड, सरप्राइजिंगली अनएक्सपेक्टेड। कि हमको सोचते हैं माने हम जब तक वो एनिमल स्पिरिट जब तक नहीं आएगी सिस्टम के अंदर में, तब तक वी कैन नॉट कंटिन्यू टू, और 6-7% ग्रोथ विच इज वेरी गुड. We claim that we are the fastest growing economy in the world. But look at our base also, no? Every time we are comparing ourselves with China and other countries and all. But just try to understand our base. Until unless we really grow 15-20%, I think तब तक कोई बहुत बड़ा तोड़फोड़ यहाँ पर नहीं होने वाला है. तो मेरे को लगता है ये मिक्स है, ये कि ठीक है अब ये डिफेंस के शेयर सारे डाउन हो गए, अभी इंफ्रास्ट्रक्चर के शेयर सारे डाउन हो गए कि उन्होंने बजट का वो नेक्स्ट ईयर का वो कैपेक्स ही उन्होंने कम कर दिया. सब मिक्स है ये, इसके अंदर में कोई सीधा वन वे कुछ ऐसा नहीं है कि हाँ भाई अभी ये सीधा वन वे ट्रैफिक हो गया, ऐसा नहीं है.
ओके, द वन वे ट्रैफिक एंड विजय केडिया इज राइट एंड मिस्टर केडिया, आप जाए उसके पहले आप प्रिपेयर्ड हो या ना हो, आप ऑन द स्पॉट कर लेते हैं तो हम आपसे एक गाना या एक शेर तो सुनेंगे ही सुनेंगे. लेकिन आपके लगते चलते हुए प्रशांत खेमका जी भी हमारे साथ हैं, सो लेट्स गेट हिम ऑल्सो इन द कॉन्वर्सेशन, उनकी भी बात सुनते हैं. लेकिन आपको जाने से पहले एक शेर तो कहना पड़ेगा. अभी तो जा भी नहीं रहे, जाने से पहले मैं बोल रहा हूँ. हाँ?
एक शेर प्रशांत जी भी गए, एक शेर प्रशांत जी भी बोलेंगे.
अच्छा चलो, लेट्स आस्क हिम. प्रशांत खेमका.
पहले केडिया जी, पहले केडिया.
हाँ ठीक है, चल वो ठीक है.
Okay, this is a great combo because not only do we get Vijay Kedia to say a share, and after that we get Prashant Khemka also to make an attempt. So this is great.
Yeah.
But Prashant, great having you. Thanks for joining in. To the point that Vijay Kedia was making, right? Okay, it's not a one-way thing. But can a budget really be that in that sense, considering the tight fisc room that the FM is working with? And therefore, is this a budget where the government or the FM is saying that we tried to do capex, private sector did not come in, and consumption suffered. Let's try to do consumption now. And is that an apt thing? Is it good for the markets? Is it not good for the market?
So Neeraj, this question is for me, I think.
Yes.
So if you don't mind, since Kedia ji is there, I'll take the liberty of responding in Hindi.
Yeah.
Please, let's do that.
Or mix.
नहीं, आप हिंदी में बोलिए पूरी तरह से.
We love it. बहुत मजा आएगा.
So देखिए, I think पिछले कई सालों में मेरे हिसाब से ये बेस्ट बजट है, क्योंकि मैं जिस नजरिए से देखता हूँ, मैं ये देखता हूँ गवर्नमेंट का माइंडसेट, क्या माइंडसेट रिफ्लेक्ट कर रहा है ये गवर्नमेंट का. अब ओवर द इयर्स कई बार ऐसा होता है कि एंड नॉट पर्टिकुलरली दिस गवर्नमेंट और द प्रायर मोदी गवर्नमेंट और एनी प्रायर गवर्नमेंट, बट कई टाइम गवर्नमेंट्स get into the mode of fine tuning and micromanaging everything. Yeah, ease of all that always makes it more difficult to do business for businesses. Yeah, or अगर it is more difficult to do business, तो job creation difficult होता है. अब ये बजट में throughout एक theme है, I found in like every 5-10 minutes segment of the budget अगर आप सुनिएगा, and I keep tab of these points as I listen to the budget. तो almost every 5 minute segment में Honorable Finance Minister ने ease of doing business के related कुछ ना कुछ कहा है. That to me is the biggest panacea for India. India में जो biggest problem है वो आज भी ये है कि business करना बहुत difficult है. Now it is much better than 10 years ago or 15 years ago. Yeah, but आज भी इंडिया का रैंकिंग पहले समझो 2014 में 142nd था, वो 2020 तक कुछ 63 हुआ. आज भी कुछ अगर उसको सही मायने में वो पब्लिश करेगी अगर वर्ल्ड बैंक, तो वो आज भी 40-50 के या 30-40 के नंबर पे होगा. If you are 30th 40th country, nobody cares really, right? In any sport, I'm saying, अगर आप फुटबॉल में 30th 40th कौन सी कंट्री, वी डोंट नो. क्रिकेट में वी वांट टू बी नंबर 1. तो ease of doing business, which is the pillar on which a country can create jobs and grow faster, उसमें वी हैव टू निरंतर अपने को इम्प्रूवमेंट करते रहना है. और वो ये बजट में एटलीस्ट डायरेक्शनली, ऑब्वियसली मैग्नीट्यूड वाइज तो बहुत कुछ कर सकते हैं, देयर आर लाइक थाउजेंड्स ऑफ थिंग्स दैट नीड टू बी इम्प्रूव्ड, एटलीस्ट ये बजट में काफी ऐसी चीजें हैं which suggests कि डायरेक्शनली गवर्नमेंट का ध्यान वहां पर है. एंड दैट्स व्हाई दिस बजट इज वेरी बिग पॉजिटिव फॉर मी. लास्ट बजट के लिए मैं ये सेम नहीं कह सकता हूँ, एंड मेरे कमेंट्स भी लास्ट बजट के आर देयर इन द मीडिया, एंड आई वाजंट as congratulatory or as complimentary on the budget. But ये budget में I can go through the points if you like, but there are numerous points where ease of doing budget has been encouraged. Yes, there are some, मेरा जो pet peeve है कि अभी तक सरकार ने ये पॉसिबल नहीं किया कि मेरे जैसे फंड मैनेजर सिंगापुर, हांगकांग, लंदन से मूव बैक कर सके इंडिया में, और गिफ्ट सिटी में जो मोदी जी की एक ड्रीम है, मोदी जी का एक ड्रीम है, गिफ्ट सिटी में हम जैसे फंड मैनेजर्स आके नहीं एस्टेब्लिश कर सकते बिकॉज ऑफ द इश्यूज एंड डिफिकल्टी ऑफ डूइंग बिजनेस अंडर सेक्शन 9A. बट वो एक पर्सनल इश्यू को साइड में रखे तो आई थिंक डायरेक्शनली ये काफी पॉजिटिव बजट है.
ओके प्रशांत, एक काम करेंगे बिकॉज देयर आर ओनली लाइक 15 minutes left for the markets to shut. So one, I would love for you to come sometime next week should you have the time, और आप हमारे साथ आके ये ईज ऑफ डूइंग बिजनेस पे एक बात करें 15-20 मिनट के लिए, बिकॉज इट विल बी रियली गुड टू सी, बिकॉज दैट इज अ पेट पीव, आई कंप्लीटली एग्री. लेकिन
बिल्कुल
केडिया जी की शायरी और आपकी शायरी के पहले आपका एक और सवाल एक और जवाब सुनना चाहेंगे प्रशांत, कि फ्रॉम अ मार्केट्स पर्सपेक्टिव क्या ये बजट कंस्ट्रक्टिव है या नॉन इवेंट है?
Again, because ease of doing business is so important to structural growth and job creation, and hence the economy and corporate earnings, and hence the market, मेरे हिसाब से ये पॉजिटिव बजट है, विदाउट डाउट पॉजिटिव बजट है. आज जो भी मार्केट्स इन शॉर्ट टर्म, एज मार्केट्स हैव बीन वॉलेटाइल. In the short term, in the very short term, like one day, few hours, market can shoot from the hip, shoot first, aim later. But as market digests, I think there are more positive in the budget than negative.
So, इस पर जो प्रशांत खेमका जी ने कहा है, इस पर विजय केडिया का व्यू मैं चाहूंगी, बिकॉज द डायरेक्शन इज द सेम बट द आउटलुक एटलीस्ट इन द शॉर्ट टर्म ऑन द बजट इज क्वाइट डिस्टिंक्ट. विजय केडिया जी, आपने खेमका जी के सारे कमेंट्स सुने. ही सेइंग दिस इज वन ऑफ द बेस्ट बजट्स ही सीन इन रीसेंट टाइम्स. You are not 100% on that. What will it take to convince you?
No, I will tell you, I learned from the people like Prashant ji and other economists and other industrialists and all. When I listen to their interviews, then I actually make up my mind and I learn from them. As on date, as of now, while I am talking to you, I really feel that I don't think that this budget, whatever it is going to take the market to the next level. I doubt it. I have my own doubt. So many things are there in prices. So many shares are still expensive. Even FMCG also, if you compare to them, they are expensive. So from the investor point of view, as an individual investor, I don't think that I would be very keen, just because of this budget, I would keen to buy any shares and all. So, yeah.
नहीं, मैं ये पूछ रही थी. अच्छा, ये तो बजट की बात हुई. यहाँ पर बहुत सारे लोग सुबह से कह रहे हैं कि अब देखिए कि Feb 7 को क्या होता है, गवर्नर साहब क्या कहते हैं, क्या इंटरेस्ट रेट्स, लिक्विडिटी की तरफ से कुछ पुश मिलता है. वुड दैट बी द नेक्स्ट बिग ट्रिगर? बिकॉज क्वेश्चन इज कि इस यहाँ जो इस दलदल में हम फंसे हुए हैं, इस रेंज में, वहां से निकले कैसे?
देखिए, मेरे लिमिटेड नॉलेज में, आपको भी मालूम है, मैं कोई लोग के जैसे पढ़ा लिखा आदमी नहीं हूँ. मेरे को खाली एक ही चीज का इंडिया में डर लगता है, वो मैं कई बार आपके भी चैनल में मैं बोल चुका हूँ. मेरे को अनएम्प्लॉयमेंट का इंडिया में बहुत बड़ा डर लगता है. मेरे को ऐसे लगता है कि 1 करोड़ आदमियों की जमात जो हर साल इकट्ठा हो रही है मार्केट के, ये जॉब मार्केट में आने के लिए, इनको सरकार कैसे एड्रेस करेगी? मेरे दिमाग में खाली एक ही सवाल घूमता है. मेरे टैक्स रेट कम होना मेरे लिए इतना ज्यादा इंपॉर्टेंट नहीं लगता है. इतना ज्यादा इंपॉर्टेंट मेरे को ये लगता है कि ज्यादा से ज्यादा लोग टैक्स नेट में आए वो कैसे आए? कमाई होके आए, एम्प्लॉयमेंट होकर वो टैक्स दे, मेरा मतलब ये जोर जबरदस्ती से नहीं। और हमेशा मैं बोलता हूं, जब 2,40,000 आदमी इंडिया के अंदर में ऐसे हैं जो खाली 1 करोड़ से ज्यादा इनकम दिखाते हैं, इतने तो आपके साउथ एक्सटेंशन में मिल जाएंगे, ग्रेटर कैलाश उल्लास, आपका जो साउथ दिल्ली के अंदर में इतने आदमी मिल जाएंगे। उस चीज को कैसे एड्रेस करेगी सरकार, और अनएम्प्लॉयमेंट को कैसे एड्रेस करेगी, मेरे लिए ये खाली एक चिंता का विषय है। तो जैसा प्रशांत जी ने बोला कि वो ईज ऑफ डूइंग बिजनेस का जो उन्होंने बार बार लिया है, उसके अंदर में शायद कुछ ऐसा होगा। और मैं पढ़ूंगा, अगर मेरे को ऐसा कुछ समझ में आया आगे, उसके कुछ अगर वो दिखे, उसके कुछ उसका ट्रेलर दिखाई दिया, देन मे बी आई विल चेंज माई माइंड। एज ऑफ नाउ मेरा यही व्यू है।
Fair point, Mr. Kedia. Prashant, let me come to you. The one big positive with regard to when budgets are concerned was they can be change makers for the next 3, 4, 5 years. For example, the capex announced in the 2021 budget, you can still see the kind of traction, the kind of push, the kind of tailwind that it has given so many sectors. What do you believe that this budget will give in terms of sectoral tailwind? Are there 1 or 2 sectors that you feel will really change over the next 1, 2, 3 years?
I think, see, more than 1 or 2 sectors, I think this budget is general positive. या तो आप 1-2 सेक्टर को बड़ा पॉजिटिव कुछ अनाउंसमेंट का देखो, या अक्रॉस बोर्ड अगर इंप्रूवमेंट है तो दैट इज अ वेरी बिग डील। आई हैव ऑफ्टन सेड व्हाट इंडिया नीड्स इज लाइक 1,000 स्टिचेस। एक बड़ी सर्जरी करने की, या तो यू कंसिडर दोस 1,000 स्टिचेस एज वन बिग सर्जरी, एंड द गवर्नमेंट हैज टॉक्ड अबाउट इंट्रोड्यूसिंग अ न्यू इनकम टैक्स बिल। यू नो, इंडिया में व्हेन यू टॉक ऑफ ईज ऑफ डूइंग बिजनेस, व्हाट मेक्स इट डिफिकल्ट टू डू बिजनेस इंडिया में? क्योंकि इतने सारे कायदे कानून लिखे हुए हैं, और वो इस प्रकार से लिखे हुए कि बहुत डिफिकल्ट है उनको समझना, उनको समझकर फिर लागू करना, उनके तहत काम करना बहुत डिफिकल्ट है, राइट? तो गवर्नमेंट ने, अगर आप एफएम के कमेंट्स सुनिएगा तो लिखा है कि न्यू इनकम टैक्स बिल जो है वो, आई थिंक उन्होंने कहा, इफ आई हर्ड राइट, कि आधा उसमें से निकाल देंगे जो क्लॉजेस है। फिर उन्होंने कहा कि न्यू बिल वुड बी क्लियर, सिंपल टू अंडरस्टैंड एंड प्रोवाइड टैक्स सर्टेनिटी। और क्या चाहिए बिजनेसमैन को? अगर ये अभी देखते हैं 1 हफ्ते में आएगा वो न्यू टैक्स बिल, एज पर व्हाट द ऑनरेबल फाइनेंस मिनिस्टर सेड, बट इफ दे इंडीड डिलीवर ऑन दिस इज अ ह्यूज, नो, बिकॉज द टैक्स बिल इज द बिगेस्ट ऑफ द रेगुलेटरी और लीगल बिल in the whole of government, right? अगर उसको अगर आप massively simplify कर रहे हो, clear, simple to understand and providing certainty, then that is a huge step forward. Obviously fine print अभी तो announcement है, जब आएगा तब देखेंगे, but I have no reason to doubt what the honorable finance minister has said at this point in time. And many other things, small things have been done. I wish कि a lot more could be done. Always, you know, आशा तो हमेशा बहुत ज्यादा होती है, पर जैसे they've decriminalized 100 additional laws, आज बिजनेसमैन को कोई भी इन्वेस्टर लाइक केडिया जी हो या मैं हूं, डर लगता है कि भाई इतने सारे कायदे कानून है कि जो अगर गलती से भी एक्सीडेंटली अगर वायलेट हो गए तो उनका रिपरकशंस क्या होगा? एंड हर बिजनेसमैन को ये बहुत डर लगा रहता है।
Sure.
Right?
And
decriminalize करना is very important.
Absolutely, sir. And new tax bill में शायद इसका कुछ ढांचा आएगा. I doubt there will be a change in the slabs because that has been now announced in the budget. It will be more of improving the ease of filing taxes, etc. But before we let
ease of understanding what the code is saying.
Yes, that we will wait to see. That we will wait to see for sure. But before we let Prashant Khemka and Vijay Kedia go, as promised, Kedia ji, आप कह रहे हैं कि मार्केट के लिए थोड़ा और समय लगेगा, लेकिन एक आपकी तरफ से व्यू, वन शायरी, एंड देन ऑफ कोर्स प्रशांत खेमका विल जॉइन इन।
तो वो 2 लाइन जो अभी मेरे दिमाग में आ रहा है वो ये है कि थोड़ा है, थोड़े की जरूरत है, ये जिंदगी फिर भी यहाँ खूबसूरत है।
ये ऐसे विजय केडिया ओरिजिनल नहीं हुआ, बट आज के लिए चल जाएगा।
No, on the spur of the moment, on this, I mean, the talent to get it.
No, the talent that he possesses, ये थोड़ा underwhelming था।
Very nice, very nice.
बट अच्छा था। केडिया जी, अगली बार जब आए एक गाना हो जाए, लेकिन चलो अभी क्योंकि आपने बोला था कि हम इनसे भी सुनेंगे, तो खेमका जी से भी सुनता है ना, कि उनकी क्या राय है?
जरूर जरूर। सो केडिया जी, आपकी इजाजत हो तो कबीर दास जी से प्रेरित होकर अभी एक दोहा मैंने सोचा है और अभी एक्चुअली लिखा है, हालांकि सोचा तो था कई दिनों से। तो तेजी में निवेश सब करे, मंदी में करे न कोई। तेजी में निवेश सब करे, मंदी में करे न कोई। मंदी में भी जो निवेश करे, तेजी उन्हीं की होए।
क्या claps all around
आजकल 5-10-15% मार्केट गिरा, उसको लेके लोगों को बहुत मंदी में डर लग रहा है, तो इसलिए मैंने सोचा ये एक टाइमली दिमाग में आया, कबीर जी का दोहा रिलेटेड से प्रेरित।
केडिया जी, रिस्पॉन्ड करना है कोई?
नहीं अभी क्या कबीर दास की उल्टी वाणी, बरसे कंबल भीगे पानी।
See, this is the top of wow. This is what a day, and what a way to close out this session. We're about 8-9 minutes to go.
मैं इनको थैंक करूं उसके पहले मैं एक ट्राई कर लूं। कॉपी है, लेकिन जस्ट
नहीं, now
एक कॉपी है, सॉरी। किसी की कहावत है, मुझे लगता है कि राकेश जी की कहावत है कि चवन्नी में ताजमहल तभी मिलता है जब ही जेब में चवन्नी नहीं होगी। सो जस्ट ट्राइंग टू से व्हाट प्रशांत खेमका सेड, राइट, दैट के तेजी मंदी में कोई इन्वेस्ट नहीं कर सकता है, लेकिन आपको ताजमहल चवन्नी में तभी मिलेगा जब आपके पास चवन्नी नहीं है, विच इफेक्टिवली सेज कि तभी जाके इन्वेस्ट करो तो आपको ताजमहल जितने गेन्स मिलेंगे।
So Neeraj, you will get there to their level.
No, this is not my level.
But it will take some time.
No, Baba, this is not my saying. This is Rakesh ji's saying.
इसमें मेरे को एक और याद आ गया मेरे को।
प्लीज
जो आपने बोला कि जब मैं था तब हरी नहीं, जब हरी है मैं ना ही, प्रेम गली अति साकरी, जामे दो न समाए।
Wow.
This is another level. This is
how a special Saturday session should end. We're all working on a weekend, but at least we're having fun doing it. Thank you so much, Vijay Kedia ji, Prashant Khemka ji.
Thank you.
बहुत शुक्रिया.
Thank you, Tamanna. Thank you.
Join करने के लिए it's always a pleasure. Wow. And as we close down, Kush, are you feeling FOMO? Anything that you want to add, or any stocks you want to give us for Monday?
No. Sometimes it's good to sit back and enjoy as an audience. I was doing that today, and very happy to do that. Just on the closing note, one stock that I have already shared with the team is Aarti Industries. I think the markets will now get back to post-budget life, right? I mean, just been a day today. I know Monday perhaps the FI effect will come in, but normal course of action will resume. I think Aarti Industry is doing rather well, 475, 490. Your targets 445 is the stop loss. One stock that I want to mention is IndusInd Bank. I think we've discussed this in the morning. I was waiting for it to move and close above the 1,000 mark. Looks like it will. I think it's shaping up rather nicely. Something that you want to keep on your radar.
Okay, Parag. As we end, what's your feeling? Is the budget setting the stage for higher moves? If the RBI policy also comes true, are you looking at better levels? My question that I told you, that one of our colleagues had said that a lot of people were maybe sitting on a little bit of cash right now, etc. Is this a good time to deploy?
This is a time to start, because see, I'll tell you, fiscal prudence is the most important thing, and then RBI providing liquidity to the system is the most important thing. And on one hand, as I told you in the morning, that capex, when you put up a capex, you should have a visibility of demand, right? That demand booster this budget has given. Plus, government has also laid down. So I'll also end with a song.
Oh wow! now, oh wow, Parag bhai.
So there's a movie called Khuddar, and there's a song called "Unche Niche Raaste Aur Manzil Teri Dur, Raah mein Rahi Ruk Na Jana Hokar Ke Majboor." So our government has laid down a debt to GDP roadmap, right? That FY26 they want 56% debt to GDP. FY31 they want 50% debt to GDP. This is amazing, right? This is amazing. This is like a company saying that my net debt to EBITDA will be 1x, like Reliance has said, right? So our government is fiscally prudent. No one in this world can now say कि short India or bhag jao, because we are fiscally prudent. Our current account deficit is in control, our fiscal deficit is in control, our banking balance sheets are extremely strong, our corporates are under leveraged.
Yes.
So nobody can go and just short India now. So PEB 18-20 is okay. Once earnings come back in next year, which I am sure it will. And Rakesh ji एक और बात कहते हैं, if you remember, I have a huge respect for him, so I am telling you कि ये गवर्नमेंट हमेशा अंडर प्रॉमिस करता है. ये गवर्नमेंट बजट में they give very conservative estimates. So nominal GDP growth estimate of 10.1% is a recency effect, because last year they were not able to deliver because of election. So they are promising you only 10.1, and all the estimates are based on that. I am 100% sure this year our nominal GDP will be higher.
Wow, that is a statement on record. We have that to check.
Yeah,
and
thumb the table.
Thumb the table. That's the Parag
Next year, budget day, same time.
Look at what this government has done to PSU banks, and just you will get the idea. Once they decide what they can do, they can do.
Okay.
And if they have decided now we are going to focus on fiscal prudence
that
plus
is what they'll
growth.
Do. Okay, so Parag bhai, build out a portfolio. Somebody has 10 lakh rupees right now. I'm not asking for stock recommendations, but just broadly, what should people do?
Asset allocation has to be done, right? For example, some money has to be in FD, some money has to be in gold, some money, of course, house has to be there. That first priority is if everything is taken care of, you are just investing in equities. For example, in our model portfolio, we are at 8-9% cash. And for example, our habit is that, for example, today FMCG stocks have gone up. So we will not buy it today. We bought it 15 days ago, right? So you should not jump into the momentum. If you want to make a bigger gains and sustainable gains, so buy something which is, for example, my stocks, and again a disclaimer, they are in my portfolio, you should not buy it. Anyway, market is closing. So I would say that Axis Bank kind of stocks or SBI, PNB kind of stocks in that space, in two-wheeler space, TVS Motors kind of stocks or Mahindra kind of stocks, I like them. See, Axis, and I tell this to even other people also, that Axis is trading at 10 PE, 1.2 time book. बच्चे की जान ही लो लोगे क्या? So basically, SBI is trading at 7 PE. PNB is trading at 0.9 now, and they have delivered a PE of 6. So I think all this is amazing. If the economy, and as I told you, when RBI infuses liquidity and the growth accelerates in deposits, they can all grow their advances also faster.
God.
Okay, so that's the big picture there. The only problem and question is that what do you do in the short term? Now, as we are closing down and we have just a couple of minutes to go, we'll get to Harsh for the closing rates on the show today. Just to wrap up what we are seeing in Nifty IT in a world of pain. Kush, you said Bank Nifty. Bank Nifty is the play. Any individual banking stocks, BFSI stocks that you would look at today?
So one that I mentioned just now, which is IndusInd Bank, looks like it's closing above that resistance level of 1,000. So, risk reward ratio extremely favorable. It's just the momentum that needs to catch up. So 1,045, 1,090 being the targets. Somewhere close to 975 is where you place that stop loss. But also keep an eye on one stock that we've been discussing quite regularly in the banking space, which is KVB, Karur Vysya Bank. Seen a very good run up today in a bit of a profit booking thereabouts. But I think on the whole, the bank is placed rather well, at least from a technical standpoint.
Okay, just about a minute and a half to go. Harsh, take it away. How are we looking like we're closing on budget day?
Well, choppy day, Tamanna, but we're closing decently well, not in bad shape at all, I would say. Let's pull up the intraday on the Nifty 50. And thereafter, we'll go to the breadth as well, because that's going to hold the key a little bit when we enter next week. Around a 10% lower, so not too bad, well off the lows of the day. We've recovered nearly 170 points from those lows, so surely that could be one big positive. But let's look at broader markets. Let's look at the breadth first. Let's see how those have reacted. The breadth, if we can pull that one up very, very quickly. Okay, so 0.5% low on the Nifty mid cap. The Nifty small cap as well, around 0.5% higher. So that one doing relatively better. And the breadth, there you go. Largely even Steven is how the breadth is looking at this point. And it's been a volatile day where we've seen the breadth also flicker between the red and the green quite a bit. Last off, if we can look at the Nifty 50 heat map, see which stocks have done well. Consumption names right at the top. You even have the likes of an Oysher, Bajaj Auto doing well on the back of consumption. Maruti up 5%. It's been Kush's call of the day. And what's not done well is some bit of infra, because the capex that was expected didn't come through. And that's why you'll see some of those names at the bottom. The likes of a Power Grid, the likes of an NTPC, some of the PSU pack as well, facing some of that pressure. I want to also turn to sectors. Let's pull up the sectoral heat map, because there are some real buzzers here. The Nifty Realty Index is up 3%. The FMCG Index also up nearly 3%. So those are some big moves made on those indices. The Auto Index is up 2% as well. Banking Index largely stable. But what's not done well, the energy and the PSU banking pack and oil and gas, IT also down around 1.3 odd percent. The India VIX has tanked around 12%, and that's the other positive. Run up to the budget, generally the VIX spikes, and this severe cool off that we've seen would be interesting to see as to how Monday also plays out on the back of that. But we've closed, of course, for the day, and those are some names which have buzzed today. The BSE 500 top gainers, top losers. Blue Star, Zensar, Blue Star again on the back of consumption. Radico Khaitan on the back of consumption. Avenue Supermarts was up 10% at one point, closing just about 9% higher on the entire consumption theme playing out very, very well. Some lenders here on this side and railway stocks really coming under pressure. That was one pocket which really saw pressure in trade today.
So what I find interesting is that the assumption of the market on what all this extra money will be spent on. So a Sapphire, Radico Khaitan, even an Avenue, all seeing that boost coming in. Well, we'll wrap here. I want to thank Kush, Parag, and everyone who's joined us on YouTube, on TV. You're watching us on all our different platforms. Thank you so much. We're taking a short break, but we're not done yet. Budget Express up next. In case you have missed what happened in the budget, there is no better way to catch up in a quick, speedy fashion. All of that after this very short break. Stay tuned. This is the day that shapes the future of 1 billion dreams.
From the fields of agriculture to the backbone of defense.
From ambitious infrastructure projects to everyday tax policies.
Every decision counts.
How will this budget balance growth and fiscal prudence?
What will it mean for jobs, and what will it mean for your portfolio?
Join us for the most comprehensive coverage of Budget 2025
as we decipher the impact
of this budget on you.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve.
मैं मां लक्ष्मी से प्रार्थना करता हूं कि देश के हर गरीब एवं मध्यम वर्ग समुदाय पर मां लक्ष्मी की विशेष कृपा रहे।
There will be no income tax payable up to income of 12 lakh rupees. In this budget, the proposed development measures span 10 broad areas focusing on Garib, Youth, Annadata and Nari. Dhan Dhanya Krishi Yojana, Developing Agri-Districts Program. A new scheme will be launched for 5 lakh women, scheduled castes and scheduled tribes, first-time entrepreneurs. We embark on a journey to unlock our nation's tremendous potential under the leadership of Honorable Prime Minister Shri Narendra Modi.
Hello and welcome to NDTV Profit. You're watching Budget Express and I'm Hiral Dadia. A bit-sized wrap of the top news of the day. Let's get started. Finance Minister Nirmala Sitharaman presented her record 8th consecutive budget which contained measures that ease the burden on the middle class struggling with high prices and stagnant wage growth while being fiscally prudent. And consumer spending gets a boost through a combination of changes in personal income tax, indirect tax reductions and an overall budgetary thrust on public investment. The immediate will come from the slew of income tax measures announced. In other words, the government has returned 1 lakh crore to consumers in FY26. FMCG stocks outperform after the budget speech. And the benchmarks recover from day's low but end in the red. The Nifty ends above 23,400 mark, whereas the Sensex ends above 77,500. The trading volumes were subdued. Broader markets fare mixed. FMCG shoots higher and the big bank consumption announcement followed by realty, consumer durables and media. IT, metals and BSU banks were under pressure. The biggest tax relief in over 28 years for the middle class with tax structure under new tax regime revised. No tax payable up to income of 12 lakh rupees and 12.7 lakh rupees for salaried individuals. This means taxpayers of up to 12 lakh rupees will enjoy tax rebate except those with special income. Additionally, the tax slab for those with income between 12 to 16 lakh is 15%, whereas those within 16 to 20 lakh rupees is at 20%. The personal income tax for those with income between 20 to 24 lakh is 25%, whereas those above 24 lakh will pay 30%. Now, this fresh tax structure under the new tax regime will actually result in substantial savings for the middle class. For instance, Those with income of 8 lakh will save 30,000 rupees. Those with income of 9 lakh will save 40,000. 10 lakh will save 50,000 rupees. 11 lakh will save 65,000 rupees. 12 lakh will save 80,000 rupees. And above that will be 1,10,000. And a tax bonanza will continue to remain in focus as Finance Minister announces new income tax bill to be proposed next week. She mentions that the bill will be simple to understand for the common man, with being close to half of the present law, and the bill will primarily focus on the middle class. And the next big elephant of the budget are the fiscal deficit and capex figures. Finance Minister announces fiscal deficit for FY25 at 4.8% of GDP, and for FY26 it's estimated at 4.4% of the GDP. And the capex for FY25 stands at 10.18 lakh crore rupees. The government clocked a capital expenditure of 10.18 lakhs in FY25 as against budgeted of 11.11 lakh crore according to the Union Budget 25-26. India's capex spending has actually aided the overall investment growth in recent years despite limited private investments. While the focus on the capex continues, the government has been increasing the capex target at a slower pace given the medium term. And the nominal GDP growth of 10.1% versus 9.7% year on year, and the absolute nominal GDP of 357 trillion for FY26 versus 324 trillion for FY25. In fact, Manrega allocations have been flat at 860 billion rupees. Infrastructure, the big wheels of the economy garner major announcements. The government announces 1.5 lakh crore interest-free loan for states over 50 years. Each infrastructure ministry tasked with identifying 3 pipelines of projects that can be implemented through public-private partnerships. In fact, Jal Jeevan mission to be extended until 2028 with an enhanced outlay. And a gigantic boost to MSME sector with investment limits increased to 2.5 times and turnover limits doubled. In fact, customized credit cards with 5 lakh limit to be made available to registered micro enterprises. Also, a new scheme to support 5 lakh first-time women, that is the scheduled caste and scheduled tribe entrepreneurs, providing loans of up to rupees 2 crore. And the government is to set up 1 lakh crore urban challenge fund. This is designed to finance up to 25 bankable urban projects. Moreover, FM also announces a second infra plan for 2025 to 2030, which will reinvest 10 lakh crores into new infrastructure initiatives. And agricultural productivity to be boosted with Dhan Dhanya Krishi Yojana. The scheme is set to actually improve the availability of short and long-term credit and benefit 1.5 crore farmers. FM says the aim is to actually create more opportunities for rural demography, and this is to facilitate migration than making it a necessity. The government is also working on making pulse cultivation self-sufficient. And the budget includes artificial intelligence in its expansive list of announcements. The Centers of Excellence in AI for Education to be set up with a total outlay of 500 crore. AI is projected to contribute $15.7 trillion to the global economy by 2030. Do note that the cabinet had authorized more than 10,300 crore rupees for the Indian AI mission in March 2024. And on the education front, FM announces 10,000 additional seats to be added in medical colleges next year, a positive for hospitals. And the minister also informs that 1.1 lakh undergraduate and PG medical seats were added in 10 years. Moreover, the government is working on building additional infrastructure to accommodate 6,500 more students in IITs established after 2014. And regional connectivity to improve with alterations in Udan scheme. Government to add 120 new destinations and carry 4 crore additional passengers in the next 10 years, the FM says. India's top 50 tourist destination sites will be developed in partnership with states through a challenge mode, medical tourism and Heal in India to be promoted via public-private partnership. And a big thumbs up coming up from SpiceJet's top boss, Ajay Singh. In an exclusive chat with NDTV Profit, he says, this budget is very positive. Reduction of tax will lead to greater consumer spending. Exemption of income tax up to rupees 10 lakh is the single big announcement. He says Udan is the most successful scheme of Modi government and will transform air connectivity further. And the union budget entails ambitious target for nuclear energy. FM highlights importance of building at least 100 gigawatt nuclear capacity by 2047. Specifics include setting up nuclear energy mission for R&D of small reactors with an outlay of 20,000 crore rupees, 5 small modular reactors to be operationalized by 2033, and Atomic Energy Act and Civil Liability to Nuclear Energy Act will be amended. And the government has dedicated several key initiatives aimed at boosting Bihar's development, with the state set to head to the polls later this year. She proposed establishing a Makhana board in Bihar, National Institute of Food Technology. A new institute will also be established in Bihar to enhance food processing capabilities in eastern India, which is expected to significantly boost local industries. In fact, Bihar will see an expansion in its education infrastructure with additional resources allocated to 5 IITs. And food processing stocks soar after FM announced the establishment of a food processing institute in Bihar, highlighting national manufacturing mission to boost Make in India. And the Defence Budget 2025 allocation raised, but FY25 target missed. The Ministry of Defence's total allocation is up 6.2% versus the revised budget of 24-25 estimate. In fact, the budget 26 estimate at 6.81 lakh crore is revised from a 6.41 lakh crore budget. So that's the number that we're looking at. And the budget turns out to be a negative for real estate players, especially shopping malls. EY explains this by pointing that companies that record the commercial properties as plant will no longer receive any GST credit. Companies to return GST credit availed effective retrospectively from July 2017. In fact, Swami Fund, that's worth 15,000 crore, is what they've also done for completion of stranded projects to the tune of 1 lakh units. Finance Minister Nirmala Sitharaman announces that 36 life-saving drugs to be exempted from basic customs duty. She had announced this measure to provide relief to patients, particularly those suffering from cancer. And India ranks second largest globally in fish production and aquaculture. Finance Minister, in her budget speech regarding India's marine sector, says that India will bring in a framework for sustainable harnessing of fisheries, keeping special focus on the island regions of the country, Andaman and Nicobar Islands. The stock of Avanti Feeds jumps 4%. And Bharat TradeNet introduced to streamline trade documentation and financing needs for companies involved in international trade. This move comes as a part of fostering digital public infrastructure and will especially help MSME exporters. And Jal Jeevan Mission extended till FY28 with enhanced outlay. The government has allocated 67,000 crore for fiscal 26. Under the mission, every rural household will have drinking water supply in adequate quantity on a regular and long-term basis. In fact, this will be available to rural communities at affordable delivery charges, and the total allocation is around 70,000 crore rupees versus revised total allocation of 22,700 crore rupees approximately for FY25. And to give a major boost to the EV battery production, FM has announced a proposal to extend duty exemptions on capital goods. Now, this move is aimed to boost the domestic production in sectors like EV and mobile phones. The revised list now includes 35 additional capital goods for electric vehicle battery production and 28 additional capital goods for mobile phone battery manufacturing. And with quick commerce dominating Indian markets and gig workers taking charge, the government announces social security schemes for gig workers. The FM says ID cards of online delivery workers will be registered on the government portal. Sriharsha Majeti, MD and Group CEO, Swiggy, says for Budget 25, Democracy, Demography and Demand, Honorable Finance Minister very articulately described this alliteration as 3 engines of growth. It is to her immense credit that the budget addresses all these aspects. In fact, it has sufficient provisions to unshackle India's demographic dividend through new and strengthening of existing welfare policies. The government pushes for growth of solar space. The manufacturing mission will support clean tech, build ecosystem for solar cells, EV batteries and high voltage transmission equipment. The national manufacturing mission will actually cover small, medium and large industries. And in a disappointment for the Indian Railways, the union budget for FY26 has actually kept the allocation absolutely flat at 2.55 lakh crore, the same amount allocated in the previous year. Railway PSUs, IRFC, RV, NLC, sharp sell-off after no increase in allocation. And the Ministry of Rail Transportation and Highways saw its allocation remain unchanged in first full budget of Modi 3.0 with an allocation of rupees 2.72 lakh crores for FY26, which is largely unchanged from the previous year. In fact, the budgetary allocations will help in developing more highways and expressways amid rising interest rates and increasing cost of land. Of the total 2.72 lakh crores, the National Highways Authority of India has been allocated around 1.87 lakh crores as part of MOD's capital expenditure plan for FY26, a 10% increase from the previous year when it was allocated 1.68 lakh crores. And the FDI limit for insurance sector to be raised to 100% from 74%. This change applies to insurers that invest their entire premium only in India. This move is expected to drive innovation in the space and also aligns with government's vision of insurance for all by 2047. And the government has kept its financial year 26 disinvestment target at 47,000 crore. This is for FY25. The revised estimate stands at 33,000 crore compared to the budgeted estimate of 50,000 crore. And a big announcement for cotton players. The government launches 5-year mission for cotton productivity. This is expected to work towards rejuvenating India's textile sector. And the budget outlined ambitious plans to elevate India's tourism sector with a focus on developing the country's top 50 tourist destinations. The union government will develop these sites in partnership with states. The finance minister also revealed plans to extend mudra loans to homestays, making travel experiences more accessible and boosting local economies. And the government has revised the budget allocation for the production-linked incentive scheme for the automobile and auto component sector to 2,890 crore for FY26, down from 3,500 odd crores in the previous year as of March 2024. The capital investment under the scheme has reached 14,000 odd crores, leading to the creation of nearly 29,000 jobs out of the projected 1.48 lakh. So far, 85 applicants have been approved under the scheme. And the custom duty cut on LPG, the Union Budget 2025 proposed to cut custom duty on LPG to 5% from 15% earlier. It also proposes to cut duty on propane and butane to 2.5% from 15% earlier. This will be negative for Gujarat Gas as propane is a competing fuel in Morbi region. Amongst the many announcements, Finance Minister Nirmala Sitharaman announces broadband connectivity for all government, primary and secondary schools as well as primary healthcare centers in rural areas. And the union budget allocates 98,311 crore rupees for the health ministry. This is higher than 89,300 odd crores allotted last year, and this represents a 191% increase since FY15. And after the budget reforms, some items will become cheaper due to tax reductions, while others could see price hikes due to increased duties on or new taxes. A reduction in custom duty on gold and silver to 6% and that of platinum to 6.4% has been announced. 36 life-saving drugs fully are exempted from basic custom duty, making them way cheaper. However, the prices of telecom equipments are set to rise. And in an effort to transform one of India's oldest institutions, India Post, Finance Minister Nirmala Sitharaman announced the government's move to transform India Post to a large public logistics organization. The Finance Minister said that India Post, which currently has 1.5 lakh rural post offices, will now be complemented by the India Post Payment Bank and a vast network of 2.4 lakh Dak Sevaks, while be repositioned to act as a catalyst for the rural economy. And the Union Budget of 2025 has allocated 1,500 crores to the solar power grid segment, reinforcing India's commitment to renewable energy transition. Last year, the Finance Minister allotted over 8,000 crores to the segment, significantly up from 4,757 crores earmarked in FY24 revised estimates. And that's a wrap on Markets Express Budget Special. Please stay tuned to NDTV Profit for a full day coverage on Budget 26.
This is the day that shapes the future of a billion dreams.
From the fields of agriculture to the backbone of defense.
From ambitious infrastructure projects to everyday tax policies.
Every decision counts.
How will this budget balance growth and fiscal prudence?
What will it mean for jobs and what will it mean for your portfolio?
Join us for the most comprehensive coverage of Budget 2025
as we decipher the impact
of this budget on you.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
This is the day that shapes the future of a billion dreams.
From the fields of agriculture to the backbone of defense.
From ambitious infrastructure projects to everyday tax policies.
Every decision counts.
How will this budget balance growth and fiscal prudence?
What will it mean for jobs and what will it mean for your portfolio?
Join us for the most comprehensive coverage of Budget 2025
as we decipher the impact
of this budget on you.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company.
Big relief for the middle-class taxpayers. Finance Minister Sitharaman announces new tax slabs in her budget speech. Markets, however, end muted, snapping a 4-day winning streak. Sectors ended mixed, with FMCG and realty feeling the budget bonanza. Consumption boost of 1 lakh crore rupees in the budget by reduction in direct taxes sets the stage for economic growth, with key measures aimed at boosting consumption and strategic investments. New schemes announced for first-time women entrepreneurs. The FM announces provision of 2 crore rupees for entrepreneurs. Credit guarantee cover also to be enhanced for MSMEs to 10 crore rupees from the previous 5 crore rupees. After Donald Trump's threats, 25% tariffs on Mexico and Canada each to come into effect today, along with a 10% tariff on China. Hello and welcome, viewers. This is the big day to NDTV Profit. You're watching Profit 360, Budget 360 in fact, and during the show we will try to bring you all the latest updates on the markets, on international news, and especially the budget coverage. On your screens at the moment you can see that Finance Minister Nirmala Sitharaman is all set to interact with the media and give highlights and questions, answer all the questions that might come in. So, we are going to cover this presser for you and give you all the latest updates. Of course, a couple of highlights have been, we have been reporting a couple of highlights. So let's go across to the FM presser and see what Nirmala Sitharaman has to say.
Finance Minister will make her opening remarks. Thereafter, we will take questions. I request all of you to follow the point of order. It would be very nice if each of you asking a question may restrict to one question at one go. This will ensure that all other your friends may get chance. Please introduce yourself and organization before asking the question. Over to Honorable Finance Minister.
Thank you and good evening to all of you all. I'm happy to be here talking about today's budget. The budget actually says several things about our path towards Vikasit Bharat. It has invested in agriculture. It has certainly looked at rural prosperity, focuses on urban development, particularly looking at urban workers, and continues to lay emphasis on reforms. 6 specified sectors have been identified, and I spoke about it in the budget. Sectors in which we will continue our reform agenda. All this, even as we have continuously been engaged with the stakeholders, and interest of education and health has been prioritized. When we're talking about education, from a child in a daycare center, portion for women, lactating mothers, till the level of getting skilling done, and also for artificial intelligence and digital reading material for students and in school and colleges. Every aspect of education, and bringing in that dimension which is so critical for health. Daycare, cancer centers, and making sure more medical seats are available. These are kind of things with which I'm trying to highlight. The approach in this budget has been pointed on areas which definitely need immediate intervention, outlays, and action along with the states. So Vikasit Bharat is not just being described. I've given you also what we mean by Vikasit Bharat, or what is it that we expect to achieve for Vikasit Bharat. So this budget actually has given you several things on which you can understand how this economy is being planned to take forward a route towards Vikasit Bharat. Secretaries have joined me. All of them would also come in to explain or answer and give clarity and so on. But one thing which I certainly would like to highlight is responding to the voice of the people, which is what Prime Minister Modi is known for in his administration. It's a very responsive government. And as a result, the income tax simplification, which I announced in July, is already completed in its works, and we shall bring the bill in the next week. So the income tax simplification, about which in July budget I haven't gone in detail to say, the work is completed within 6 months is what I said. Within 6 months we've brought the bill. It'll be coming into the parliament next week. So if we are talking of reform, inclusive of taxation, the work is done. This budget also speaks about rationalization in customs. Tariffs are being brought down, tariffs are being simplified, and also the basket which consisted of so many different tariffs for so many different commodities are now reduced. 8 were taken off earlier, 8 has been taken off now. So whatever remains now, 7 I think remains, and that is all about India's tariff picture. So the usual narrative which goes on, saying is India being too heavy on tariffs? No, you find that we've drastically reduced and also simplified. So this budget has so many things for all of us to talk about. The more important thing about agriculture, which performed very well during COVID and which has contributed to India's food security, the proposals which are mentioned in this budget actually talk about everything to do with beej to bazaar, literally from the stage of seeds, hybrid seeds, climate resilient seeds, seeds which can give greater output, seeds which are going to be high yielding, all this together to the final point of India becoming the world's food basket. That's the definition I put in when I was talking about Vikasit Bharat. So we are making sure that India's agriculture gets the support across the board whether it is on seeds, whether it is for skilling the farmers, whether it is rural prosperity, whether it is going to have agriculture and allied industries being set up in rural areas, and whether it is going to be farmers getting better and more loan with interest subvention, not just farmers, fishermen, and also dairy, meaning animal husbandry. So the picture for rural development and the picture for supporting agriculture is across the board, and that has been narrated. The second thing which I would want to highlight is the continued emphasis that we're giving since vote on account budget, July budget, and now on the MSMEs, whether it is giving them sovereign guaranteed loan, whether it is support during COVID, whether the definition being changed now for better, more inclusive growth in MSMEs, access to bank credit. So MSMEs have also been given greater emphasis. Together with this, I'd like to highlight the point that energy security has had greater attention in this budget. We've highlighted in July budget how even pump storage will have greater attention. Solar and wind and renewable energy has also been taking consistently good importance in our budgets. This time we are talking about the small modular reactors. I've also announced that there shall be 2 amendments, one to the Atomic Energy Act and the other one for the civil liability. All of this is going to help us attain energy security. Insurance sector's FDI limits have been enhanced. That is another important announcement. I'll end my opening statement with 2 things. There is no reduction in the public spending on capital expenditure. Let's put that up front. We continue to place emphasis on the multiplier effect that capital expenditure done by government has shown, has sustained us. We continue on that. And with all this, our fiscal prudence has aligned itself to the glide path that we announced in 2020-21. So we've kept ourselves in alignment. Fiscal prudence has been maintained. And the next year, coming years, estimate is also been given. Well under 4.5 is what we had said earlier. We are also projecting the same. So this is just as an opening statement. There's a lot more to say. But as you all ask questions, so shall we answer. Thank you.
Thank you, ma'am. 225. 225. Mike.
Will that be in the form of draft, and where you are also going to take stakeholder comments on that?
Yes, as a bill, any bill goes to the standing committee, and the standing committee will of course consult with so many stakeholders, and then it will come back to us, and if necessary, any more amendments if need to be brought in, we'll bring it in and take it forward in the House.
So do we expect implementation in this in the fiscal year in FY26?
Do you expect what?
Do we expect the implementation of?
Well, let it get passed. I hope it will get passed without much of a difficulty, but it is only after its passing.
Sure. Thank you.
35. Front.
Ma'am, Timsi Jaipuria, this side from CNBC TV 18. As you said, this is a very responsive government, which is why government decided to give these tax rebates. But given the structure that you have announced, ma'am, up to 12 lakh is the rebate. Any reason why this rebate has been hiked from 7 to 12 lakh? Is it that the incomes or salaries were not growing up to the mark, which is why government thought that this rebate needs to be given? And also, how do you make up for this 1 lakh crore of revenue loss? Will it not impact the budget estimates? Where will you get this money from?
Tipsy, I think the first question is, you said that this, when the incomes are not growing. This is an income tax. Only when there is an income, then we are talking of the tax. So income has to grow to the level to discuss about the tax. Now, why from 7 to 12 lakh? It is something like, it was earlier 2.2 lakhs. When 2014, it became 2.5 lakh, nobody is going to pay tax. Then there was a 2019 that, we said 5 lakhs, nobody is going to pay tax. Then we said it was raised to 7 lakhs. And now it's being raised to 12 lakhs. So this is a perception that the government feels that, on the average 1 lakh per month, if you have, then you need not pay tax, which means that, we are doing it in two ways. One is we are reducing the slab rates. We are expanding the slabs. If you would have noticed, the slabs are now 0 to 4, 4 to the uniform slabs, and there is a gradualism. There was a thing when we had earlier 20%, then it was jumping to 30%. Now it is 20, we have introduced 25 also. So it's a gradual thing which has been done. Now this benefits every one of the taxpayers, because whatever benefits which has come from the slabs gets transmitted across. So therefore everyone gets a benefit. Now the second part, FM decided that, some people should get a little more benefit than merely slab rate reduction could have given. And so therefore an extra rebate. So slab rate reduction for everyone, and extra rebate for 7 lakhs were already getting it, not 7 to 5 lakhs more people have been added. So this is the philosophy behind it. And as you said, why you do it, I think we expect that all that money which they gave, it comes back to the economy in either consumption, savings or investments, in whatever way they choose to do.
I just want to add to that. If you compare what we've done today with what prevailed in 2014 under the Congress government, what we are, most often the narrative is we should put money back in the hands of the people. I want to please give this comparison for your consideration. If you compare it with the 2014 tax rates under the Congress, for somebody who's earning 8 lakhs, nearly 1 lakh more money is in their pockets today because of the amendments that we've brought in. Meaning, 1 lakh income tax in 2014 is 0 income tax now. So that money is going back to the people in their hands for those who are earning 8 lakhs. For those earning 12 lakhs, 2 lakh was the income tax in 2014 versus today 0 which is proposed. Meaning nearly 2 lakh more money in the pockets of people who are earning 12 lakh. Alright, did I stop it there? As Finance Secretary rightly said, across the board everybody is getting benefit because the rates have also been brought down. Not just the rebates being given to up to 12 lakhs. Rates for everybody is being brought down. As a result, take somebody who earns 24 lakhs in a year. The income tax on them in 2014 was 5.6 lakhs. 2014. For them, now it is only 3 lakhs. The rate change has benefited somebody who earns 24 lakh as well. So 2.6 lakh rupees more in the pocket of people who are earning 24 lakh. So it is not just those who are up to 12 lakh because they are not paying any tax at all, because rebate is given to make up for the tax amount which they have to pay. It is not just up to 12 lakh. Even for others, benefit is accruing, and compared to what it was in 14, that much amount of money is going back to those respective money earners. Just compare it with 24 tax rates, which is prevailing now and what is being proposed. I would like to draw the comparison. 8 lakh people, meaning those who are earning 8 lakhs. 30,000 rupees more is being put back into their pockets, meaning they would be paying 30,000 in the prevailing tax, 8 lakh salaried wale. Now they pay 0 in the new proposal. Similarly, 12 lakh salaried or income wale would have 80,000 rupees tax to pay in the current prevailing taxation rates. They would have 80,000 rupees now go back to their pockets. They don't have to pay that tax. Go to the 24 lakh and compare with the present rates. Present prevailing rate, they have to pay 4.1 lakh rupees as tax. We are saying now they will have 1.10 lakh in their pockets, which they don't have to pay as tax. So we have put good substantial amounts into the pockets of people who deserve to get that. And I would want that to be highlighted compared to what prevailed in 14 and what prevails just this year.
3. Yeah, 3 number.
Ma'am, many congratulations. Something that has been quoted to you as well as the Prime Minister and yesterday the Chief Economic Advisor hinted, in terms of disinvestment and where you should not get into, government. You yourself have been talking from 2020, 21 and subsequently, government should be in less spaces. Has it been a strategy? Because I know you're committed to it, but last budget you didn't refer to it. This budget you have not referred to it. The target still remains there. Is there any impetus that you're going to do towards what has already been announced by the budget? For example, bank privatization of banks and others. That's one. And the second because that was unanswered, you're making it simpler, the income tax, and bringing a thing. Does this mean that you can now not necessarily all the time you can do it through a schedule or an executive order if you want to give some relief to a common man in the new income tax bill that you bring in?
No, giving relief any time will have to go to the parliament, because if we are giving fiscal relief to people, it has to have approval from the parliament. So but what the tax simplification really means is the complication in the language, the circuitous way in which they were explaining things, and adding too many exemptions. You will realize that when we brought in the new tax regime, we didn't want the old tax regime imitated or copied. In that, there are several exemptions given in the old regime. In the new, we didn't want to give any, because we wanted a simple, straightforward tax regime in which the rates can be brought down. That's what we've done even now. So the act itself had to be simplified. The attempt now is that.
And on the disinvestment and...
No, all that will continue. There won't be a relenting on any of this.
On disinvestment, if I can add, you see, the last time July also the similar questions were asked. We have actually since then a value creation strategy, which was actually well explained at that time also. There is no disinvestment target per se. Disinvestment and dividend are both looked at together, because both are money and money is fungible. And it has got 5 elements. The first element is that we are saying CPSC's performance. The second is we say that we should have communication of performance. The third we say that the capex of the CPSC, which is important, as you know, in terms of accelerating growth. The fourth is the consistent dividend policy. And the fifth is there is a calibrated disinvestment strategy. And the disinvestment also is there. The listing is a part of disinvestment itself. So if you really look at it, both dividend and disinvestment is about 80 to 90,000 crore per annum are being raised, but in a manner which are beneficial to the minority shareholders who are there in all our listed companies.
65, backside.
Good afternoon, ma'am. This is Ruchi Bhatia from Bloomberg News. I have a question for the Revenue Secretary and a question for you. If the Revenue Secretary can give us details on the benefits, the number of people who will benefit from the slab, from the rebates going up from 7 lakhs to 12 lakhs. And the question for you, Madam Finance Minister, a lot of people say that while the absolute number for CAPEX has gone up, the pace of spending has gone down as compared to a few years ago. Is it telling of the institutional capacity in terms of how much CAPEX push can the government really do? And secondly, as far as a lot of analysts do say that the multiplier that CAPEX has is a lot more than the multiplier in the economy than that tax cuts have. What would you say to like some of those concerns as well?
Well, 1 crore people will not benefit between the 7 lakh and 12 lakhs.
Meaning 1 crore more people will pay no tax. On the CAPEX, I think there are 2 things playing out. One, of course, this particular year has had the elections happening, and because of that, both central government and state governments were catching up with investments, public spending on investments only from the second and the third quarter, so it showed. It's equally true that when fundamental requirements are taken care of, when you're bringing in additional overhead, there is a pace at which those additions happen. So it's not as if there is no thirst for capital expenditure, but now it'll be at a pace in which you can build on each one of the developments that you've done prior. So it'll continue. There are some departments which will need more. There are others who would probably reach a plateau, but expenditure will have to continue even in them. So the heads where the capital expenditure will happen will vary, but expenditure will happen in building assets.
121.
No, capex is also continuing. I have not foregone capex to give for revenue expenditure or consumption expenditure. So both continue. Ajay.
Look at what the overall numbers are. Even in the coming year, the next year, effective capital expenditure, including what Government of India provides to state for their capital expenditure, is 4.3% of the GDP, one of the highest. It's not just what Government of India departments spend, it is the total money which goes for the capital expenditure. And if you look at that compared with this year's RE, there will be 20% increase. If you look B to B, still there will be a 10% increase. And it is not a capacity issue, it is a new sectors coming up. For example, if you notice, urban sector, the allocations are increasing. That's one area which requires a renewed focus.
121.
On the capex, because this point can come up later also. So one is the capex that we give directly, that is we do as central government directly. Other is that grants that we give to the state governments, for the state governments to do capex. For example, for Pradhan Mantri Gram Sadak Yojana, for example, Pradhan Mantri Awas Yojana, and so on and so forth. So if you also include the grants and aid for creation of capital assets, the amount, total amount has gone up to 15.48 crores in the budget estimate for the next year, which is more than 15% increase over the current year's RE. So that is a substantial increase, whereas you consider that the overall expenditure, that is revenue plus capital, has grown by around 7% in the next financial year as compared to this year's RE. So this is almost twice the aggregate growth in the expenditure.
Yes. I would like to also add that on top of this 15 lakh crore capex, which is 11.2 there, and the extra money which goes into revenue but goes in capital building at the hand of the states, the CPSC, the Central Public Sector Enterprises, add about 4 lakh crore as capex from their own resources. So that's also the capex which goes in, and that is not counted here.
This is the day that shapes the future of a billion dreams.
From the fields of agriculture to the backbone of defense.
From ambitious infrastructure projects to everyday tax policies.
Every decision counts.
How will this budget balance growth and fiscal prudence?
What will it mean for jobs and what will it mean for your portfolio?
Join us for the most comprehensive coverage of Budget 2025
as we decipher the impact
of this budget on you.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit's research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your...
Hi, thanks so much for joining in. My name is Alex Matthew and we're talking about Budget 2025 and how it relates to you. The Union Budget is about the government's plan for the new financial year. The Finance Minister lays out her estimates for what she wants to spend on and how she intends to fund it. And often the focus is on the big picture. What is the spend on capital expenditure going to be? How many roads, how many highways, how many new railway lines? What is the spend on defense? But very often you, the individual taxpayer, there's nothing for you. This time around though, you're the primary focus. A lot has changed when it comes to the taxation of the individual taxpayer, and this show will get you up to speed in case you missed some of the announcements. Let's first introduce our experts for the day. We've got Sameer Kanabar, who's tax partner at EY India, as well as Mayur Shah, who's also tax partner at EY India. Gentlemen, thanks so much for joining me in the studio. And what a day. I was looking back and trying to gauge when such a large announcement has been made that was focused primarily on putting more money in the hands of the individual taxpayer. And you have to go back all the way to before this century even started, when there was a reduction in the highest tax rate. That was done, I believe, in 1997.
That's right.
Right? Yeah. So, is this only my interpretation, or do you agree that this is as big as I think it is?
Yeah, it is as big as you are saying, and I think it's much more than that, because what they are trying to do is just not in one aspect. They are trying to bring a lot of clarity in the law itself, and few of them we will reveal it during the discussion. But one thing which I have seen that in ULIP, earlier, under certain ULIP situations, it was taxed at normal rate of tax, which now they have brought it down to 12.5%.
But we'll talk about that in just a bit. For me, the more important talking point, Mayur, is about the change in the slabs and the change in the treatment of income tax. That is the first and foremost thing that you need to focus on. What you see on the screen is now what is effective in the next financial year, FY26, the financial year ending March 2026. Now, the new tax regime is where all of the changes have taken place. The first and most important thing that you need to bear in mind is that income up to 12 lakh rupees is something that you will get a rebate on. So effectively, you will not pay tax on that. We'll talk about how that works. But beyond that, there's also been a widening of all of the tax slabs. The first slab is increased from 0.0 to 3 to, in fact, 0.0 to 4. That's exactly what you see on the screen. The second now has moved to 4 to 8, 8 to 12, 12 to 16, 16 to 20, 20 to 24, and then finally above 24. So previously, if you had the highest bracket that was above 15 lakh rupees at 30%, now the highest bracket is above 24 lakh and it's at 30%. My interpretation of that, Sameer, correct me if I'm wrong, and I've just simply done a rule of 72. You look at 10 lakh rupees in 2010. In 2025, that is worth roughly 24, 25 lakh rupees. So effectively, you're adjusting for inflation. I know you disagree with me, but it's a significant move.
Yeah. No, so yeah, you are right. There's two ways to look at it. Is
the government supposed to pass on the benefit of inflation to the taxpayer, or is it that government is also incurring the cost on its own and meeting its inflation targets, and hence whether one should balance it out? But more importantly, Alex, I mean, the way we look at it is to say that it is the overall speech which we saw yesterday and the economic survey that middle class should be given benefit. And that theme is being carried along all the way, whether you look at rural sector reforms, whether you look at agricultural reforms, or income tax. Everywhere, I think the Aam Aadmi is the focus area. And this is an unbelievable leap that has been given right from 7 to 12. So beyond imagination.
Beyond imagination. And what that means effectively, without doing away with the old tax regime, Mayur, effectively, we've done away with the old tax regime. It doesn't make sense anymore.
Absolutely. Generally, you know, if you have a deductions up to between 6 to 8 lakhs, then probably old regime may be beneficial.
6 to 8 lakhs is a lot.
Yeah. And when you are having a larger income bracket, then it really doesn't make sense going with the old rates at all, because the rates are very high. Surcharge rates are very high. Then, you know, you will always choose to be under new regime. So if you see, large section which was there under old regime will now again move back to the new regime. And effectively they will make old regime redundant.
They have, in fact, made the old tax regime redundant. Of course, there was a teaser in the budget also where the finance minister talked about a new income tax bill, and she said that a lot of clarifications will come through in that bill. The language will be clearer for you to understand, and the content of that bill will effectively halve. But there's also another data point that we have for you that will essentially measure out how much your tax outgo will reduce. New tax regime versus new tax regime. If we can, let's pull that up, because, and we're looking at income above 12 lakh, right? So if you can read that on the screen, if you are earning 13 lakh rupees, then effectively compared with the old new tax regime, you are saving 25,000 rupees. That increases to 35,000 rupees at 15 lakh, increases to 50,000 rupees at 16 lakh, it increases to 90,000 rupees at 20 lakh, and 1.1 lakh rupees and beyond. So 1.1 lakh rupees on 24 lakh and beyond, which is a very significant saving. Wouldn't you agree?
No, absolutely. And as you know, both of you rightly said that without dismantling the old regime, they have dismantled, you know, and once you are above 20 lakhs bracket, for you, the old regime will not look so good, because you have to make compulsory investments, you have to confine yourself to all the realms and pay higher surcharge. Might as well go under the new regime. You have your own freedom of investment, and then sort of you are covered by this new regime. So obviously, yes.
Let's talk about the deductions that are currently available, just to elucidate the point further. In the new tax regime, Mayur, you still have that standard deduction for salaried individuals to the extent of 75,000 rupees. And there's also NPS, right? Which is available?
Yes, NPS is available.
Yeah. So can you explain that?
Yeah. So what happens is that when you contribute towards the national pension scheme of up to 10% of your basic salary, or 10% of your total income, which now last year they raised it to 14% under certain circumstances, then that would be allowed as a deductions, which continues to be allowed in the new regime as well. Because, and the reason for that is that they want to create social security environment self-funded rather than funded by the government. So that's the reason why they are doing it in that particular fashion, and they are allowing it. As far as standard deduction is concerned, long back they had introduced standard deductions for new regime, which was then enhanced to 75,000 if you are going for new regime, otherwise it was less.
Yes.
So that's where, you know, they tried to encourage, and now they are kind of putting more stress on the new regime than old regime.
Certainly. So just to drive home that point, and you were making that, people in the slightly higher income ranges, they don't have to make those necessary investments for ATC deductions. They don't need to necessarily put money. And so what happens then effectively is the tax saving investments that were usually saved to the end of the year, and you will know this, and a lot of chartered accountants will breathe a sigh of relief saying we don't have to do anything towards the end of the year. That goes out of the window.
Absolutely. But before I come to that point, I think one important point to note in this slabs, and where there is slightly an ambiguity, that let's take two examples. You have 10 lakhs of salary income, you have 2 lakhs of capital gains.
Yes, this is important.
And you have 10 lakhs of salary income and you have 5 lakhs of capital gain. Now, in the second example, it's very clear that you have to pay on 5 lakhs capital gains tax, but obviously because you have crossed the threshold, so on 10 lakhs also you will end up paying tax. It's not that your 10 lakhs remains protected. But the issue that comes in 10 plus 2 example is that whether 2 lakhs should really get taxed as capital gains, and that clarity is not there. So it's kind of an open thing, and that kind of leaves a room, but of course it doesn't impact people at large.
So, but let's explain what this is about, right? In the speech, the finance minister has spoken about special income, right? Income from other sources, can you call it that?
Yep.
Special income. So she used special income as a tag, right?
So capital gain tax at a special rates.
Tax, okay. So income taxed at special rates. Effectively, what she has said is that you will get a rebate on your income up to 12 lakh rupees, taxable income up to 12 lakh rupees, apart from the income that is taxed at special rate. And we looked at that print, we looked at the clarification in that document. What did it say?
Yeah, so they have added that piece, and I'm just because they have added by way of a proviso saying that whatever new tax regime rates are there, you will get rebate only in respect of that. That's how they have eliminated any income which is taxed at special rate will not get covered there.
So this is capital gain. So as an example, if we talk about 2 lakh rupees, as Samir just pointed out, that you have booked as capital gains in the equity market in any given year, and it is long-term capital gains, just for this example, we're talking about it having crossed that 1.25 lakh limit for charging of long-term capital gains tax. So you will effectively pay 12.5% on 75,000 rupees. And what they're saying in the clarification is that you will get a rebate on your income if you have income in normal sources through up to 12 lakh rupees. And on this 75,000, the 12.5%, you will not get the rebate. That is the understanding, right?
That's right.
Okay, so it's pretty clear on that. Samir does not agree necessarily, but this is the interpretation that you can take right now. And of course, over the course of the next couple of days, there will be more clarity that emerges. But as things stand, that is indeed the case. So effectively, you're talking about a situation where ELSS and your several other investments that are made towards tax saving, 5-year fixed deposits that you would necessarily lock in, your public provident fund, so many other schemes that people invest in towards the end of the year just for the purposes of saving tax, it does not necessarily make too much sense anymore. You might as well invest in assets that give you a little more flexibility and possibly better returns.
Because all this ELS tax saving scheme used to offer a very low rate of return.
ELSS is of course equity linked, and so it depends on the market, but a lot of others agree with you.
Yeah, and that's where you are getting now more advantage, like in terms of investing in a market where you feel it is much better. And ELS also, which security you invest in, how you keep churning, that will all depend on now.
Okay, so there are a couple of other changes, of course, apart from the tax slabs, and we've pretty much gone through all of the details here. You are better off no matter how you split it, no matter how you look at it, you are going to be paying less tax in the new financial year. And we've established how much as well. Now, there are a few other changes that have been made, and the first one I would like to talk about is with regard to the tax deducted at source for senior citizens. There was a pretty straightforward announcement that was made, but let's spell that out for you. I'll come to you, Samir, on this. What was said and how does it change the lives of senior citizens?
Yeah, so effectively, of course, they have done an overall rationalization of withholding tax or TDS provisions, and it encompasses a lot of things, and one of the component is, of course, relating to senior citizen as well as rent income and etc. So obviously they have enhanced the limit from 50,000 to 1 lakh on the income earned by interest income earned by the senior citizens. So that gives them quite a bit of relief. Similarly, they have extended the rental income limits from 2.5 lakhs to 6 lakhs odd. That again gives a lot of relief to the individual in terms of withholding tax.
This is only senior citizens though? Rental
No, this
income?
is for everybody. The rental income is for everybody. Yeah. So that gives again a huge relief to individuals, because you don't have to deduct if you are paying the rent, and at the same time if you are earning, your working capital to the extent of withholding tax doesn't get blocked naturally, because you have now moved from 7 to 12 lakhs. So I think they have really applied their mind. They have not done one small patchwork of 7 to 12. Sorry, it's not right appropriate word to say patchwork, but by giving that relief, they have done a holistic approach to see that even the TDS provisions are appropriately amended, so that people don't feel the pinch and that money is still in the pocket of the middleman for consumption or for expenditure.
You have a point here?
Yeah, so just one point. When we are talking about rent, it talks about the rent which is being paid by the businesses. So individual, when they are deducting TDS, it does not relate to that, but when individuals are receiving rent above 6 lakh, then only there will be a TDS. So it is in respect of that. Many a times which has been misunderstood. That when individual is paying rent, then you should not deduct, or things like that, but it's not the same.
Okay, I take the point. So only because in the past the changes that have been made are incremental, small changes, and so the accusation has been that the government is tinkering with the Income Tax Act. It is trying to provide as much relief as it possibly can, and so it's tinkering. It may not be a patchwork, but this time around, it's a very holistic approach that they have taken in order to make it easier for individuals from the perspective of
having cash available with them.
Yeah, and also putting more hands in the hands of the people.
That's right.
Money in the hands of the people. Yeah.
In fact, if you look at senior citizen, now TDS as TDS on interest has been announced from 50 to 1 lakh.
Yes.
No TDS. Look at senior citizens are not even subject to advance tax. Therefore, money which is available with the senior citizen will be much larger.
Correct.
And that will be available in the economy for its spending.
So just to complete the point on TDS on interest income, if it crosses that 1 lakh mark, what happens?
No, then of course you have those declarations 15H and all of that, which you can still give and still not withhold the tax, but otherwise the tax does get kind of...
To what extent?
Full. Then on entire interest you have to pay TDS.
On the entire interest you have to pay TDS. Okay. The rental income component is also significant. There's also tax collected at source, which there is a change on, and this has to do with the liberalized remittance scheme. Why don't we talk about this? Because here the threshold limit has been raised to 10 lakh from 7 lakh rupees. Why is this significant, Samir?
So of course, LRS is more of an open economy measure, which we have been seeing over a period of time. And we are seeing a lot of people traveling, going abroad, people are doing overseas investments. Now, again, holistic perspective, 7 to 12. Now, if I am within lesser tax bracket, or I'm paying, even I'm say 15 lakhs, 20 lakhs bracket, but if I'm traveling abroad, I'm paying TCS.
Tax collected at source,
and then I have to claim a refund, which I'll get after I file my return.
How does this TCS work? For those who are wondering what this is about and who are yet to make their first trip abroad perhaps, and I wish that you do so in the new financial year, but this is essentially the liberalized remittance scheme, the LRS, which allows you to take money out of India. There is a limit of $250,000?
Yes, under the FEMA.
Under the FEMA. So this is the Foreign Exchange Management Act. You're allowed to take a certain amount of money outside of the country in any given year. And so these rules govern all of your spends that you would make, even investments that you probably are doing in, say, a mutual fund abroad or in a particular stock. If you've bought NVIDIA, then this is something that you should pay attention to as well. So just to drive home that point, why don't you complete the point you were making?
Yeah, so under LRS, as you rightly said, people are allowed and encouraged to make overseas investments, travel, use money for education purpose, whatever. Now, if till till now, the limit was 7 lakhs. So up to 7 lakhs, there was no TCS. How does TCS work? The way TCS works is that you are remitting money outside India. So bank will collect the TCS and deposit with government.
How much?
That was at the rate of around 2%. Now, of course, it has been increased from 7 to 10 lakhs. So bank will now deduct the TCS and deposit with government. But the point that I was trying to drive is that if my income bracket is such that 12 lakhs 75,000, or even if I'm 15 lakhs bracket, if my tax liability is only so much, or my employer is deducting tax, then this TCS, which is collected by the bank and deposited with government, I have to claim refund.
Yes.
Right? And again, that doesn't leave money in my hands to spend. So to allow that as a, again, holistic approach, that they have enhanced this limit as well, to allow from 7 to 10 lakhs, so that of course I am still not pinched by my overseas expenditure, or whether I am traveling or whatever. And second part is education loan.
Yes.
So if I have taken a loan for which I am making LRS remittance, now it has become 0% TCS. So no TCS. Earlier, of course, it was 1.5%, but now it has made 0%. So if I have taken a loan and I'm using that loan for education purpose of my children, then on that, no TCS.
There is a clarification though on type of institution. Which are these usually?
So it has notified institution from whom you can take this loan, then it is allowed as a this thing. And it covers almost all institutions.
Banks, yeah.
Okay.
Right. So there is one more clarification here, and if you look at the theme which he started with, when Finance Minister started its speech, okay, we want to move from trust that everybody is doing right and then audit. So TDS and TCS were introduced because income was escaping from taxation, especially TCS. Right. Now, if you see that they are trying to rationalize that, by doing that, they are saying, okay, we trust you that whenever you are remitting money, we are assuming that it is out of tax-paid money only, and there is nothing which has escaped. Yeah. So, as rightly pointed out by Samir, that the theme which they are doing, they are not just applying on one or two provisions, but they are applying across, where all these have an impact, and they are covering all these aspects together.
The spirit of the reform is across the board. It's something that is applied in all of the changes that they have made. And to that extent also, the second last thing that I want to talk to you about today has to do with self-occupied properties. And this is an interesting one, because by my understanding how things work, and the two gentlemen here, the tax experts, will tell you what this is, but this is my understanding of it. Previously, if you had two self-occupied properties, then you would not pay tax on the deemed income. So you would have to assume a certain income that you would receive as rental income, and you would have to pay a certain amount of tax on it. But you would not have to pay this tax if you fulfilled certain preconditions. One of them was if you had to move away from that self-occupied house for the purposes of employment. Another was that if that self-occupied property was actually vacant. Now, what they've done now is to do away with those requirements completely. Samir, can you explain that?
Yeah. So earlier, if you had two houses, and normally what happens under income from house property chapter, you have to notionally compute rental income and you have to pay tax. But the law allowed you that up to two houses, you can say that these are self-occupied by me, and hence I need not pay any rent. And of course, if you had third house, then you will pay rent on that third house.
Pay tax on the rent of the third house.
On rent of the third house.
Yeah.
Right. Now, the condition prescribed for getting this exemption is that A, you should be occupying both the houses, and B, it should be a reason which is well justifiable that why you are not why this exemption should be given to you, right? Now that second condition is made more liberal. So if for any reason, even if you are not able to occupy either of the two houses, and so long as that is a rational reason, say you are traveling, or you have one house here and one house in suburbs, say you in one in South Bombay and other in suburb, so you keep on switching between the two as required based on your work condition.
Okay.
And hence one remains empty for some period of time, other remains empty, then that is acceptable because of your work reasons. Whatever.
But now that's not required at all.
Yeah, so now that condition has been now liberalized. But if in the same city you are saying that you have 2 houses and you are claiming for both, and you are staying in one and not staying in another, it becomes challenging, right? Because that was not a justifiable reason. So you will now be allowed that much of liberty to say that, okay, this was the reason and hence I need not pay the rent.
Okay, so it's certainly an improvement, and it's less of a pressure on you to justify certain exemptions that you are taking. The last point has to do with what you started with, which is the change in the ULIP treatment, unit-linked insurance products. What was it? Because there was a little bit of a confusion at the start about this. What's the change?
Yeah. So, ULIP, any maturity value which is being received upon on ULIP would be tax exempt, provided there are 2 conditions which are being met. Those 2 conditions are that, the annual premium which you pay should be less than 10% of the sum assured. And second is annual premium should never increase or should not be more than 2.5 lakh rupees. Now, if you don't meet any of these conditions, then you are not entitled to exemption. Now, what happened that while defining capital assets, they have added these 2 conditions also in that definition. As a result, if you breach one of the conditions, and just to give you an example, that you have taken out insurance policy of say 50 lakhs and you are paying premium at the rate of 9%, so you have paid 4.5 lakhs, so you are not meeting one conditions. Though maturity value will be taxable, but whether that will be considered as a capital asset, because you are not meeting conditions, it will not be even treated as a capital asset. As a result, on that, you will end up paying normal rate of tax.
Which is slab rate.
Which is a slab rate. Now they are thinking, no, this should be considered as a capital assets. So now you pay tax at the rate of 12.5%.
If you meet those 2 conditions.
If you don't meet any condition also is fine.
Okay, so it's a positive thing.
Absolutely positive thing.
Okay, so even if you're breaching that 2.5 lakh, if it's more than that 2.5 lakh, it would be treated as a capital asset.
That's right.
Because that would be breaching one of the 2 conditions.
Absolutely.
Okay, so it's a positive.
Otherwise, you would have paid a tax at a higher slab rate, and of course, there was an alternate school of thought to say that it cannot be taxed at all because the law doesn't treat it as a capital asset.
But they've clearly defined that it is actually income from other sources, and so therefore there was a tax liability. But gentlemen, I think we've covered a lot of bases, and most importantly, we've spoken about the change in the tax slabs and the change in the new tax regime, and it's going to benefit a lot of people. I hope that we've clarified things for you so that you can talk to your chartered accountant tomorrow, or you can plan your tax saving next. You don't have to plan your tax saving because you'll have to move to the new tax regime and you have no deductions to make. So there you go. It's a great announcement that the finance minister has made today, and I hope you liked it as well.
And spend your money.
And spend your money. And go spend your money. Or invest it. You've got more money to invest. That brings us to the end of this particular edition of the Budget 2025 tax conversation. And Samir, as well as Mayur, thanks so much for joining in. Thanks so much for watching. Do stay tuned. This is NDTV Profit.
The day that shapes the future of 1 billion dreams.
From the fields of agriculture to the backbone of defense.
From ambitious infrastructure projects to everyday tax policies.
Every decision counts.
How will this budget balance growth and fiscal prudence?
What will it mean for jobs, and what will it mean for your portfolio?
Join us for the most comprehensive coverage of Budget 2025
as we decipher the impact
of this budget on you.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all...
Hello and welcome to NDTV Profit. You're joining us at the SBI Towers in Mumbai, where we're here sitting with Mr. C. Sethi, the chairman of the bank. And of course, we're just fresh out of the budget announcement by the finance minister. Mr. Sethi, brief overview of what you thought of the budget. What do you think is this likely to do for the economy?
It's a very comprehensive budget, and it's a very good budget to say. And it ticks many boxes, both in terms of spurring the consumption, spurring the development, innovation, investment, I think, and covers the whole gamut of the stakeholders in terms of the personal income taxpayers, salaried class, savers, farmers, MSMEs, corporates, and the students who are availing the educational loans. The whole gamut of stakeholders have been taken care of in this budget. I think it's a wholesome budget.
The market didn't take it very well. I mean, at the end of the day, when the stock market was trading a little lower, slightly, not as badly, but do you think that maybe something was missing for that category of people? Because last year we targeted them with specific taxes, and this year not that much.
No, there could be, I think people have to analyze and digest the budgetary proposals also. I'll give you one example. I think everybody was talking about the capital expenditure not up to the expectations. We just looked at the numbers. 11.2 lakh crores is what budgetary allocation. But if you add up the capital allocations which are done to the states for specifically for the capital expenditure purposes, and also the public sector enterprises capital budgets, the overall capital expenditure is likely to be 19.8 lakh crores.
I see.
That is what our estimate.